CATC Cambridge Bank Corp to merge with Eastern Bank Shares. They are up, 20.5. Kazoo CZOO up 15.1. Restructuring agreement with note holders. INAB up 10.7 off of nothing. RVPH up 10.5. Roth MKM and initiates buy. CCG up 8.1. I think that was the IPO the other day. Domo's up 5.0, insider buy. Skin up 4.1 to initiate a stock repurchase program on 26th of September via Rule 105B. Trading lower, Toyota's down by 2.3, probably related to the auto stuff. Dollar General, they're down 1.7. JP Morgan downgrades to underweight. EBC, Eastern Bank Shares, to sell insurance operations of Eastern Insurance to Arthur Gallagher, AJG, and enters into definitive agreement to merge with Cambridge Bank Corp. They're down 8.9. Nova is down 5.9 off of nothing. Seal, SEEL, Seal Therapeutics down 66%. Top line results from SLS-002 phase 2 study, adults with major depressive disorder. SPRY down 58. ARS Pharmaceuticals, FDA, issues complete response letter to Neffy. ICCM down 41%. FDA has at this time denied the company's de novo classification request for breast cancer. GRR down 13.4, 25 million registered direct offering. Tisha down 10.4. Tisha 120 program update, and OBIO down 7.3, profit taking after 27% yesterday on FDA approval. All I saw there was I'm glad we didn't look at the biotechs because they got murdered today. Honestly, I think you're probably only going to get like one or two big biotech approvals by the end of the year, and it may just start. We have to wait till next year. Pretty much, if you ain't getting approved now, you're going to wait till 2024. Excuse me. But Chad, you sent me the video? Did you email me? No way. How'd you get a video of it? For real? No way. Email me that. Let's see what you got, man. But also, before any emails, Chadadonia, we only got a little bit of time left. I hope you're ready. If you don't have any plays, man, it's okay, because I'm sure by middle of the day you will get some. But remember, by the time Powell is done speaking, there's like 30 minutes left in the market. Oh, Nathan Evans, baby. Good morning. Oh, wait, where's my horn? There it is. Amen, baby. Good morning. That's what I'm talking about. Now let's go. Now where the play's at. Oh, Nathan just came in with the hype. I'm telling you, you're going to have a lot of opportunities today. So, Chad, what is your first play of the day? What is your first play of the day? Post it in the chat, baby. I'm going to wait for a little bit. Give him some time. Post it. Post it, baby. Post it. What do we got? TQQ shares, watching SPY, Amazon, Nathan the Go, baby, GM, AMD call, Leap, sitting on my hands, TLT calls, XOM puts at 10:30, Tesla puts, NVIDIA puts, watching, AMD calls, Baba calls, watching CETX, BJDX, October 20th, calls on pin 31, Josh calls, and Meta 310 calls next week, Neil puts, SPY, ES, Bitcoin long, SPY calls, NQ long, TSLL shares, long on closing the house, baby, Apple puts, watching XOM, I do not trade, ARM shares, NVIDIA puts, ARM puts, Sweet Green calls, Tesla puts, good morning, Square Leap for me today, Ruin for the long term, UVXY, Mattel 22 weekly calls, Airbnb, credit spread, Tesla call, QQQ, Teladoc Leap, waiting for the crude oil dip. Nice, I like that. PFE calls, Bitcoin Law, Dell put, calls on the gym, Cart Shorts, TLT, AMG call, Tesla Apple calls, UUP, F350 calls, screaming that 10%, baby. Amazon, ARM Shorts, ARM put, SPX to 4450, Disney, long on X, calls. I'm even calling my ex. Weed is down, ain't buying shit, sidebin it up, ARM to $5, MGM calls, the Powell put, Apple shorts, sitting on my hands in the F350, RC350, Square calls. What? I don't know what I said. I don't even know. I'm just reading, man. And then for the Twitch SPY calls, UVXY, good morning. Oh, Twitch was lacking. They're busy playing 2K. They're busy playing 2Ks, baby. Oh my gosh, pray is the first play, baby. That was legendary, ready to play with AMD. Powell do nothing today. Papa Powell in the final plays. I know, that was a little flow, bro. That rhymed. I liked it. He said, cause, even calling my ex. And the final plays, GLD calls, SVX 90 put, pins in IBM long, and then I have some GM, and then we'll throw in 2K, baby. Amen. That's what I'm talking about. Good morning. Good morning, baby. Good morning. Oh, man. SPY calls or puts? Well, right now, if you think this will hold even after the cash open, you'll find out in like 10 to 15 minutes. But really, it's one move leading into Powell. And then I think we'll probably be neutral, but we could move a little bit. But I think after Powell, you make that decision based on looking at the bonds in dollar. I don't know if that's fair enough. You tell me, man. You know what I'm saying? You tell me. But Chattadonia, I got a couple plays. I'm going to be watching Cody and Pinterest from yesterday. Again, we still have Cody, so that one was interesting. And then WDC, again, they had some news there. Even with all the chips, none of them have been too hot. So WDC moving pre-market, I think that one could, oh my gosh, excuse me, could be interesting. And then ZT and ZB, again, watch out for the curve steepener, curve flattener. All in all, though, just today is going to be about rates. So, like I said, I may even just want to trade some of the bonds, if anything. So we'll watch out for that. eBet, they're up 30% on that little, they reaffirmed their agreement. Intel, after yesterday, again, guidance, people commented on it. Analysts were saying stuff about Intel yesterday. They were mad that they did not focus on some of the manufacturing stuff. And then I'll be watching CART just in case for the IPO wheat. And then the Klaviyo one, I don't know if I got my shares. I remember I put an offer in on it. So let's see, actually. But that's my only set of plays, Chad. So we got a couple of minutes. I'm going to check my Klaviyo offer. We got 2 minutes here for questions. Rob, you said you had a theory. Anybody else? If this is your moment right now, we got some time. We got some time to discuss it. So let me know. We got about 2 minutes. 2 minutes, Habibi. 2 minutes. Are they going to log me out of E-Trade, bro? Come on, where's my IPO center? IPO, is your breakup affecting your job? Damn, they didn't give me anything. Oh, they priced me higher. No shit. Yeah, I didn't get Klaviyo shares. E-Trade hates me. It came in too hot. Son, it's your birthday today? Oh my goodness, mayhem. God bless you. Happy birthday, baby. So I'm talking about. I got to resume my session. Oh, I had to, bro. I updated my E-Trade this morning. So, dude, it wouldn't load. It took me like 20 minutes to open my E-Trade, so I really hope all the charts are fixed. Bro, MGM, no. I don't know. I have tinfoil on MGM. It's not even tinfoil. I heard this from somebody. It's actually a viral video, and then a good friend of mine told me, he didn't tell me in detail the same, but he just let me know the MGM hack is huge. So, again, I don't know, but essentially, that's why I don't think they've filed it yet. No, it's not only that it's true, it's like legitimately, it's to the degree that like, dude, I even think all my data would be compromised. I think everybody's data with MGM is compromised. If you had, again, I think they got shut down, bro. It's actually pretty much, it's way worse. And yeah, it's still going on now, but it's way worse than we think. This is borderline like potentially it could be one of the biggest hacks ever. I know that sounds weird, but that's kind of what it is. And people are just saying now MGM is keeping it pretty quiet, but it was, dude, this is not normal. It's actually like not normal, bro. I deleted my MGM stuff too, but it's too late. It's honestly, that's what they're saying. And they're saying like to the point where even right now as they're trying to fix it, the hackers still have control. To the point where, like, they're installing backdoors while everyone's trying to fix it. It's wild. It's wild. But Chattadonia. Ladies and gentlemen, boys and girls, it don't matter what's going on. We got power. We got a lot of things. But here at the Cult, before we do anything, before we try to chase a dollar, we must first pay homage to a very special group of people that has sacrificed more than most of us ever have and ever will. And I'm talking about the veterans of the United States of America. So on behalf of the Cult, the people here, the people not here, I want to give a huge special shout out all the active servicemen, past servicemen, anybody who has served this country for real. God bless you. Thank you for your service. Even big shout out to your families. I hope you know you're appreciated, and I encourage all of you to show that love and appreciation to those who deserve it. And I'm talking about those vets. So shout out to veterans. Thank you guys again, as always. We love and appreciate you. And big shout out to anybody else out there giving back to their local community. All the doctors, nurses, teachers, firefighters, police officers, the janitors, the garbage men, the coaches, anybody helping out, giving back, bro, for real. Keep that up. And that is what makes this world a great place. And the fact that you know there's some good people that exist, man. So God bless you. Keep it up. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Son of a bitch! Oh, it's game time, baby. Oh, nah, let's go. Oh, I'm too hyped. That was a runaway horn. That was a runaway. It's okay. We're good. We're good, baby. Let's go. Good morning. Good morning, Chattadonia. Good morning. So get ready. Again, somebody asked a very good question, even though it's kind of simple. Calls or puts at the morning, we don't know. But the fact is, we haven't really opened up decently strong in a couple of days. I don't even think on Friday either. So we'll see how this takes us. But again, cash open. The vibe right now is good. You have good data out of the United Kingdom. Some stuff out of Germany too, but for the most part, no shocking news ahead of PAL. So 2 p.m. and then 2:30. Pins could be good. Remember, we had that play yesterday. We were watching it right when it went. It might be able to go. People are hyped. They got the buyback. They have all of that. But then also watch Cody. That's another one that's pretty much moving in line. But there's a play there. The only issue with pins is if it just doesn't, like, you just get clapped on it. You know what I'm saying? So Chattadonia. 1 minute till the bell. Hit that thumbs up button. Make sure you are subscribed, and let's have a good day. Let us have a good day and good luck. It's going to be exciting. I'd be proud you almost bought an Audi Q5. It would have digged into my 10%, so wow. I am proud of you. I know what that means to you, sir. You got the tat and everything. Wow. Amen. The long term prevails. Finger to the sky, baby. That's what I'm talking about. That's what I'm talking about. Oh, man. Oh, man. 99% chance. It could, but I mean, here's the fun fact. We got 30 seconds. I'm going to try to get this out. It's not going to happen today, but the United Kingdom, they're going to have a meeting tomorrow, but they had 100% odds of a rate hike, but after their data, they're not pricing it in anymore. So things might still be able to change. Let's see what happens. Jamar, baby. What's up, Lamar? I'm going to call you Lamar now. You know, that's no relation to the crack either. You know what I'm saying? He killed it yesterday. Round 1. Fight. S&B tomorrow too. Yeah, and then I think there's like 2 more, and then Bank of Japan. So let's see. Up a quarter. My NASDAQ's not loading. I hope my charts work today. I've reset everything. I had to re-download. I had to do like JavaScript updates, bro. It was crazy. So CAR, XPEV, again, Cody and pins. Those are 2 plays here off of the morning that we could see. Weird China plays are going up. Remember, Neo had bad news. Again, Intel, bro, like, and I don't want to align with the analysts, but, you know, people were feeling what we felt yesterday. They thought it was a good presentation, kind of, but more or less they were lacking the bigger updates. They wanted to hear about like an 18-something. It's like part of their manufacturing process. So let's see. Cody, again, a lot of biotechs are down. Some of the chip makers started up. AMD, NVIDIA is in the red. Microsoft red, Apple is in the green, Tesla. Again, Toyota is down. So watch Tesla, Ford, Toyota. I don't know how Toyota fits into it, but we have been keeping an eye on. Man, my E-Trade still ain't working, bro. They hate us. It told me to clear cache, delete, and reinstall. I did all of that this morning, but I don't know if it's going to work. My charts still look like they're tripping. MO on the high. Cody is COTY. It's a makeup company. They actually got clapped off of earnings. I've been holding it, but they just reiterated guidance. So they're up 7% right now. So just kind of one of those smaller movers. A couple people know about this, or a lot of people know about this name. Pinterest is up 5. That's already doubled up. So right there, remember it was 3. Maybe wait if it comes down, but if it holds that 5%, it might just do one of those all-day things. There's Microsoft. There's the SPY. All right, don't worry. I got the ghetto charts up here. We good. IEF, man, this thing's just holding. That's a nice, actually, pickup there on the bonds. Shout out to UK. AMD, and then oil is down by 1% too. So that's having its own effect here. Let's see. REITs are up this morning. Yeah, the rates, so that UK stuff helped a lot. Again, that's why even the 10-year, 2-year didn't move too much, I don't think, but they're all holding. USO's on the high. Remember, they're all down right now. So oil is down by 1%. It is not waking up after that Monday craziness gap up. Why is my Baba no load? Baba no load. Coin on the low. So is Walgreens. NASDAQ 0.1, SPY 0.2, Dow 0.2. Country Garden says the completion of the extension can relieve the company's liquidity pressure. Walgreens. If it's here when I have my deposit, yeah. And then assuming Disney doesn't go like $5 lower, yeah. Again, Coinbase had a bad candle there, bro. My charts hate me. They hate me. Crude oil is actually going vertical right now. So again, crude is down by half. Crude just went 0.5% in 2 minutes. Literally, last time I had the Thinkorswim up, crude was down by 0.9. Now crude is only down by 0.5. So watch, SPY's even at 44.53. So this is higher than we were pretty much since Monday, then even Friday. So it's kind of good, but not really. But watch out from here, 44.65 and then 44.73 next levels. Myrna's on the low, a couple of prints. Wells Fargo on the low. Again, oil is still starting to go. Yeah, that's weird. Again, it was down. It was down a decent amount. Cody's still up 6. Pinterest up 5.9. Pinterest might make another move. JD's trying to come up. Baba. Baidunius. Carvana. Let's see. Zscaler's on the high. Carvana's not too bad, honestly. It looks like it had a pin from the last couple of days. Again, I'm not like on the zoomed in on these charts, but you're seeing it move there. I think even with context of yesterday, it helps. Oxy's on the high. It's weird. Oil just woke up. Watch if this gives up or not, but I thought today was going to be relief. Disney's starting to pop a little bit. Oh my God, why did I do that? I should have just kept the chart up. So sad. So sad. Card is on the low, 31.75. Oil is still going. My goodness. Oxy's starting to move up, but Oxy's just at the price of yesterday. So oil's still negative. I don't know where all the other companies. XOM's barely green. CYBN. I feel like we've heard of this one. I don't know. Were they on the pre-market movers? This name sounds very familiar. Spot's up 2.5. I feel like Spot. They've been running, and again, they've given a lot of decent updates lately. Oh, welcome, Matt. We're down on Oxy again. I mean, do you know why? I told you that you brought it up, bro, and then I was like, I'm not going to look at it. And I looked at it. I'm up $30 on it, but now I looked again, so don't count on that. Don't count on that. That's it, man. We looked at it. That's it. We looked. That's it. Honestly, though, I want to hold it, though. As much as that play annoys me, and we got the dividends, though, like I'm saying, it's just every week we move forward. If oil keeps doing this, then that's it. Or I'm just going to ride it, though, I think, because, again, I'm glad we have a little bit of exposure to it. It sucks we have to make it all back, but for the most part, oil, good place to be right now. Or at least it's worth it just in case anything happens. And then if it does fail, it's over. CYB, and again, I don't think that was on the list. Was it? No, CCG. Interesting. Up 5.9. Let's check automakers. GM starting to go down. Ford sold off from the opening, but they're kind of holding. Tesla just straight chilling. Netflix still holding the 400s forever. Microsoft 0.09. Apple. Carvana is still running. CDLX. Is that weed? Weed's on the high. Again, 2% MSOS. Why does weed kind of look like Bitcoin? You went in on Metacalls, CCK, PSO, Enphase on the high. Maybe watch any of the other energy ones. EWJ, Japan, that's even moving there. So again, globally, I think everything was good. SPY is now hitting a new high right now of the day. So again, it's like 44.65 and then 44.70 or something. We will double check. Pinterest climbs as upgrade Investor Day off of Investor Day. Yeah, Pinterest about to hit a new one. You got a little Barron's report there coming out now too. Cody up 12, or it's, excuse me, up 6 still. There was one more. eBet. That's the other one. Oh, yeah, you guys brought this one up a lot. Remember, they were up 26%. I don't think I'm going to play that one, though. ARM is on the low now. So ARM, again, 53 bucks. Remember, 55 was the level, and then 51 is IPO price. Spotify's killing it. Nova, Yelp, DraftKings, Palantir, Spotify, Redfin. I feel like I'm seeing everything now. It's very, very broad. We'll check here in a second the dynamic. It's only been 7 minutes. Snap. Again, I think Snap is off of Pinterest. So, again, they had the same movement yesterday. Obviously, Pinterest went up more, but they have been reacting to that. Disney. Yeah, Disney was kind of running, but they chilled out. Again, oil's calming down back to 0.6, but oil names are going up. Low volume. It just depends. I mean, here's a great rule of thumb. Like 10 million in the first hour is like normal. A million, you know what I'm saying? It's like a million every couple of minutes in volume. It makes sense. But then like usually 15 is above average. 20 million is definitely above average. That's just off the first hour. Because obviously volume is relative depending on the float. And it's one thing about the price of the stock that makes dollar volume as well. But, it's just all up to you to kind of have general rules of thumb. So like I'm saying, in this case, it's that AMD popping. Check NVIDIA. I don't know if it's all of them. Micron, too. Remember, they were going crazy. Is that Qualcomm? Qualcomm's still down. Thank you, 15. 10 million. 10 million, 15 is above average. 20 is way above average. And that's how you know. But then sometimes you could start the first hour with above average volume. And then by the end of the day, it'll end up normal because the other 6 hours. So, but like 10 million in the first hour is like a lower, that's like a normal amount. 15 is like, okay, good volume, above average. But if it's like less than 10 million in an hour, I would call that really low volume. Just on the first hour, though. Yeah, AMD starting to rocket up 1.6 now. Maybe check Intel. Intel is getting mollywopped after they did that whole outperformance thing when the chips would go down. NVIDIA, 435. Ethan Evans, golden, baby. Hey, Matt. Congrats, baby. He closed it on the crib. Walgreens in the long term, baby. Finger to the sky. Amen. Spotify, 3.8. So Walgreens, 21 now. So, this or Disney by the next deposit, most likely. Netflix, Flip Green. Flux. That name sounds super familiar, but I can't give you anything off top. Let's wait till it kind of cools down and we can talk about it. Seems interesting. The name seems interesting. Seems familiar. Roku Pop. Williams Sonoma on the low. How? I don't know, bro. They sell like $1,000 microwaves and shit. You know what I'm saying? You could buy like a glass cup for $100. I'm like, why? WW, yeah, AMD's moving. Netflix trying to move up. Again, they've kind of just been in the middle of like leading on the way down and then just not doing anything. Watch Amazon because they've either outperformed or they've underperformed heavy. Rivian $2 or 2.9. GIS on the low. I thought they had good earnings. Damn, that's cold. General Mills had good earnings, I believe, in guidance. They were up and then they flipped. Card thread. SPY's hitting another high, though. You're working up. UVXY on the low. Bro, Spotify again. Wells Fargo now. Macy's, Meta. So you're getting some decent moves. Again, Spotify, there's some names up 3 to 7% right now. And then big tech is at the very least like anywhere from 1/4 to 0.5% or even 1% right now. Apple is still down, though, believe it or not. Yeah, Roku's up by 1.2. Cody's chilling. Pinterest hit a new high, 28. New high on the SPY again, 44.57.50. Actually, no, it looks like it was going to hit one. It didn't. Snap is even going. There it is. 44.58. Again, still a decent way to go, though. The meeting is today. Yes, at 2:30, you'll hear Powell. At 2 p.m. Eastern, you will get the release. So this is all the run-up into it. It's not what you think it is. Is it reacting to getting ready for Powell? Yes, but there was very good UK data or surprising data that changed rate hike odds and affected the pound massively, 0.5%. So that's why we're running up here for now. It's the first 12 minutes or so, and then we're going to find out. The UN is in New York, I believe. Yeah, there has been the UN Council for the last couple days. You'll probably hear from Zelensky soon. You heard from Biden not too long ago. I think the latest speech at the beginning of the week was from there. Bro, we're paying $6.15 for gas. Nothing is good, Dave. Dude, I paid $6.99. That's it. My girlfriend flexed on me because she was like, I filled up yesterday at $6.35. And I was like, why are you happy about that? Dude, I was like, what? She's like, because last time you paid like $6.80, $6.90. I'm like, this is a war. I had to sit her down. I said, this is not nothing to be. I was like, I said, they're squeezing us. I said, this is not, man. I'm so mad. When am I getting my car back? I don't know. I'm going to find out in a little bit. The YouTube don't know. They don't know about my story. Don't tell them. Don't tell them till later in the day. You know what I'm saying? We won't tell them later in the day. Because they weren't there yesterday. Even though I was late. I was late. It's still $3.65 in Texas. Listen, America #2. Okay, I know you guys are plotting to become secess yourself from the state in the world, you know. But listen, very simple. Texas, you should be the last people happy about this. Texas, you know why? Because you have all the oil, Texas. In Texas, it used to be 99 cents. It used to be the price of an Arizona iced tea. I don't get it. They got us, bro. They spent 1 year of price stability, and now we're like, yeah, that's not, oh no. Texas used to be negative. I thought they gave you gas just for being, I thought if you wore a cowboy hat, they just filled up your car for free. That's crazy. But yeah, bro, it's crazy. I'm seeing what's it called? I'm seeing posts about it now other places. I'm glad I'm not the only one who's like, damn, bro, why did this go up so early? Creste, play, BMY on the high, ENVX, talk, BMO. We're up by 0.3 SPY, 0.3 down, matched up perfectly. And then 0.29 on the NAT. Everything's up right now. It's crazy. It's hard to see the new chart on cell phones. Yeah, it's E-Trade, bro. So, like, if I keep things up, I could keep the same 4 companies up. I'm not going to change these, but unfortunately, we could switch back to these charts, like, later in the day once it kind of, like, balances out with everything going on. But I'll try to fix it again, but E-Trade has been messing up. Everything but Apple, pretty much. I mean, like I said, we'll give it a couple minutes. Actually, right now, it's 15 on the dot, so let's run it. Let's see where we're at. Oh. So, 15 minutes here on the day. I have not checked volume, but you have 93 names on the S&P 500 that are red. 408 are in the green right now. The Dow Jones, you have 8 names in the red with Intel and Apple leading on the downside. And then you have 22 names in the green. And then NASDAQ 100, you have 21 names red, led by Moderna and Intel to the downside. And then chip makers, AMD and Micron, are leading the upside with 79 in the green. Seattle's at $5.99. My friend posted this weekend. That's great. Honestly, like, here's the deal. Just go to any, like, city Reddit. You know how, like, Reddits have cities? Or, like, you know what I'm saying? Like, how everybody have their city on Reddit? You go to your city Reddit and just watch everybody complain about gas. And then the guys from Texas are just like, hey, we got $3, man. Screw y'all. We're like, why are you... Stop! Man, it's crazy, though. It's so early. You know that? It's just like I'm saying. You know, I don't even think last September. Very, very weird. Leading into October, we had it like late October, November. Gas started popping again, but that was like holidays, winter, and all of that. But my goodness. All right, Disney's on the low, Microsoft near the high. Bonds are still holding up their bid, and SPY is, zero point 0.3 away from hitting a new high. You're literally just melting up into this now. Amazon, another high. That's starting to go. The chip makers slowed down a little bit. AMD's still doing decent. I'd say Apple was the one that led. Remember the last couple days? There's a day the market was red, and then Apple went up 2%. These last couple days, the market has done jack shit, and Apple led. So today, I just think Apple was like the borderline leader, but that just depends on whatever time frame you look at it on, because obviously, you just got to zoom out, and then you'll start seeing whatever you want. XLF on the high. Yeah, banks are going up. JP Morgan. Regionals are even up. My goodness. I think all the banks are up. ZG, Zillow. Zillow's up. Redfin, again, interest rates. Disney, Apple, Airbnb on the low. Interesting. Airbnb is just low of the day, but it's still holding the gap of 0.3. I think Walgreens dividend is safe, yeah, for at least a couple years. Like, it's not even a discussion to the sense of, like, you know, they're struggling right now, but I think it's too early to worry about their dividend. And I say that because Walgreens has a less than 50% payout ratio, or like right on the dot. They have 68 years of raising dividends. They're a dividend aristocrat. They are struggling, but again, I just don't. I think their cash position is actually solid. So that's the good part about having them there. But like I said, you know, in a couple years, you know, let's say we waste 2024, you know, 2025. If things don't start getting better, I mean, you could spend that cash. So that's where some of the problem could arrive. You know, only other instance could be that maybe they want to just dump their cash to put it into developing the business, but I don't think they would sacrifice that. Italy's Meloni told China Italy plans to exit Belt and Road Initiative. Interesting. Italy to back out of the China Belt and Road Initiative. They'll just cut more pharmacy staff and screw the ones who are left there. It's like their pharmacies aren't even the issue. Like, if anything, that's their only good thing they got. It's just kind of, you know, you lost demand because of the vaccine, just how everything played out lately. But then it's also like people aren't walking in the store to get forcefully, you know, anything. So it's like it's kind of affecting it, and then it's brick and mortar stores, it's retail. So it's just kind of, and then not to mention the rent and the cost of everything, and then the theft. But if anything, their pharmacies are great. not for, like, I'm saying financially. So like I understand you're if you're a nurse, you probably like they suck. So financially speaking. Mm-hmm. Good thing you said that. Well, yeah. I mean, I've never, like, I guess my only experiences with pharmacies, like, I don't know, like, you could, like, leave reviews, I don't know, but it's either you go to a pharmacy and it's, like, super legit, or it's, like, super slow. That's just on the consumer side. I feel like working at one is, I don't know how they do it. God bless you guys. Because, like, that's, bro, you got, like, 1,000 people waiting, and then they all get mad. Then you got to go, and then you just in your Heisenberg lab cooking up everything. It's crazy. Pharmacies are sound and resilient. Walgreens still exists. Last time I checked, they're letting people walk out the door at $900 worth. I don't know how you could understand you stay in business like that. You know that's all of California, right? So it's not just Walgreens. Same thing as CVS. Again, that's why, you know, it's a big deal. It's not, you know, 2-3 years ago, your statement, like it would have held a lot more weight because nobody was doing anything about it. It doesn't mean it's not happening now and that they've came up with an effective solution, but essentially, you know, companies are aware of how this is, it's killing them. It's absolutely killing them. Again, they're closing a bunch of stores in San Francisco, but even in general, it's not like they're taking steps. They're talking about it on their earnings. At some point, You know, if inflation keeps going high and this keeps happening to these companies, they get that shrinkage. It's destroying them. Some little by little, but some all it takes is one bad quarter. You know, and that's so it's awful. But I feel you, but that's all of California. So that's why, like, after 3 years, you know, these companies are scrambling to try to figure out how they could effectively stop this. So it's pretty wild to think about. But definitely a couple years ago, nothing was being done. But they were making so much money that they didn't even care. That's the reality, in my opinion. In my opinion, I think 3 years ago, these companies were making so much money, they didn't give a shit about the theft laws or whatever was happening, because it wasn't hurting their margins. You know, it wasn't hurting them the same. If you were a big company, you know, God bless the small businesses out there, because we often forget about them when we talk about this stuff. But it's like they were getting hand over fist. They already had prices up. They were loving it. You know, the only issue they had was no workers. But now it's like at this rate, you know. I'd say if this happens for another 3 years, some of these companies might get damaged, like heavily. And again, even it kind of, I hate to come back to this, but it kind of reminds me of the MGM thing. It's kind of like, you know, that's what people were talking about. They're saying it's like MGM security was so bad. It was as if they thought nothing would happen, but then it's like, you know, or maybe they thought they could just pay it and move on. But like, no, it's like this could be the Achilles heel. I don't think it's going to make MGM go bankrupt or anything like that, but they're paying for this one, and it's really, really hurting them. So it kind of reminds me of theft in a weird way, where it's like, you know, people really don't care until it fucks up your margin, and then at that point it's either too late or then they start reacting. Companies will start pulling out of Cali soon. No. You know, what they're going to do is they're going to hire more people. They're going to hire security guards. I've already noticed it. Between now and last year, even the last couple of months, I will see more security guards at any shopping places. That's it. But again, it's obviously going to have its holes, and it's not always going to work. But they're doing private security. They're trying to set up deterrence, because they know even with the law, even, you know, they're not going to chase you. No one's trying to do stuff, but they're like legitimately, they're just trying to put people in front of stores, put big items in the back, and then that's it. And just, you know, they're trying to get that set up, but it's pretty wild to think about. It's more than MGM. It is. But MGM's getting murdered right now. I remember I'm telling you, I'm waiting for that filing, and I don't think it came out because I don't think they even understand what just happened. I don't even think they have full control yet, which is wild to think about. Caesars got hacked, and then they paid it, and then it hit MGM, and then it started spreading to the MGM properties, but MGM didn't want to pay it initially, and I don't think they have yet. But now it's just at the point, it's still down. This is almost a week, bro. This is like, we're talking about 1 week of no hotels, no slot machines, like it's crazy. No booking future travel. Honestly, if anything, this is bullish for every other travel company, not only just Airbnb, like Expedia, Booking, all of that, bro. They're losing out on all of this. So all of the VIP, and not only that, everybody's data is going to get compromised. But it's just like, you have all these people who have, again, there are a lot of people book with MGM directly, and then that's it. Some slots don't work. If they got some of them up, that's great. But at one point, there was at least 2 days or 48 hours, I think, where not one slot machine was working. Paying them is the worst case. It is, but it's just like, it's bad. Even if they pay them at this point, it's just like, you know, people are saying, again, to the point they were so vulnerable, these hackers will probably always have access to the degree where it's just, I don't even think you'll get them out. They're installing their back doors, and they literally cut them off at the knees. It's nuts. MGM owns the employees. Yeah, they're screwed. They said the employees can't access their 401ks. IBM on the high. I don't know who does their cybersecurity, but I don't think it was the company's fault as much as it was MGM's. So like MGM, like just people in the industry are saying that they're like, it was very like low quality. Like it's like they didn't care. It just, some people have talked about in the past, it's just like anytime there's been big hacks, like major hacks for software, it's like people getting cheap, essentially. It's a Mickey Mouse. It's a Mickey Mouse. It was Okta, but I think they were being cheap about it. Pretty much multi-billion-dollar business, and it was protected by a mask, let's say. A piece of paper. It wasn't enough and it was that easy enough to get in there. Want to cut them off at the knees? You said cut them off at the neck and put their head in a container. Wow. I don't know. We'll see. Because if the MGM thing does drag on, I mean, the point I'm trying to tell you, I don't even have a play on it, but it's like this could be probably one of the biggest modern hacks we've ever seen. Potentially, it's definitely top 10, I'd say, but it's starting to look like something that dollar amount, cost, impact, data exposed. It's looking big. I mean, it's not to the scale of what's it called? Dollar General dying after yesterday's move. They're on the low. Bigger than the gas pipeline on the East Coast? I think yes, because it's just different. But that one was a big one. Or if you guys remember that one was another hack that like disrupted a lot of things. Yeah, that was a good one. That's definitely a good comparison in terms of like how important it is, But I do think this one, it's like, because someone was even like, how much, SolarWinds, that's the one. They were like, how much are they asking for? I think they want 150 million or more from MGM, but it's not about how much money MGM has to pay. It's about how much money MGM is losing. You should read the statement, complete negligence when it comes to the info. That's funny. I didn't read the statement, but again, that's the going word right now. That's what a lot of people are saying. Again, I talked to some people in the industry, but they were just saying it was awful. It bordered literally negligent to the point where it's like, how were they doing this? The government got involved in the gas one. I think they will not for the casino. IBM, there's no news. It just kept going up, and then Dollar General slipped. SPY calming down. ARM at 52. A couple of oil names came back down, like CP, but Oxy, XOM, they're doing kind of decent here. What? I'm seeing they gave an update on their Twitter like 12 hours ago. But they give shitty updates, bro. I can't. They're going to get... It's just weird, bro. Cart sub 30 buy, maybe. But even then, bro, yesterday, that little 10-minute flip, it didn't work. But sub 30 would be ideal. Now just back to IPO price. But then again, kind of bad vibes. But it pretty much, Cart is going to have a random pop. You know what I'm saying? You remember when ARM was like selling off, and then before you knew it, that thing just started rocketing. It's going to have one of these, and then it's going to die again. So as far as you just got to speculate on when that's going to happen with Cart. FOMC reaction chart. I do not. No. But I do know the last couple ones, all the Fed meetings, it's pretty simple. Last two Fed meetings, I think we moved less than 1% or just around there, like 0.8. But the biggest movements this year have all occurred off the SEP, which is today. So pretty much every 3 Fed meetings is the third one is going to be the crazy one. I hit the gym after Powell nap. Oh, before Powell? Damn, that's nice. Gym will get you hyped. You might get hyped into Powell, get a nice little pump. If MGM is so bad, how is the stock still sitting there? Because we don't know anything yet. But it's down a lot. This is what I was saying the other day. I think everybody keeps telling me it's up. It's like it's almost down 50% from here. But even then, the last week since the hack started, it dropped 2 days before. But you're down about 10% since, which is kind of crazy to think about. But we don't know how much they like. Wait till next earnings. That's going to be the issue. And then we don't know the liability. And then, oh my gosh, remember for 46 months? Oh my goodness, yee. Happy Powell Day. God bless America, babe. And shout out to the vets, you know? God bless you. God bless you. You do 4. Okay, we need the new badge, guys. I need to get the new badge out here. We do not have much time. We need to get that new badge. McCarthy making some progress closer to avoiding shutdown. Oh, yes, baby. Oh, yes. And then step on snack. Miss all the chat. I didn't see that one earlier. And then Carbon Guard 46. Oh, man. You guys are making me. I got to get ready for this. We got to get a new badge in, baby. Let's go. God bless you. Shout out to Cole. Let's go. They flexing the badges now. That's it. They flexing the time. That's it. Today's time. I'm going to give one horn for all of them because I know it's about to happen. I know it's about to happen, Chad. So I'm going to give you the horn, and I'm only giving one for all of them now. Oh, let's go, baby. You know, that long-term club, baby. Amen. Amen. Get in there. That's the same thing for your long-term, baby. Let it be known. Yeah, they flexed 39 months, baby. 43, 41, 32. That's what I'm saying, man. This is, I hope y'all see it, man. That's it. Because, again, especially if you knew, I hope you know this is a cult, okay? And how it works is you'll probably see me once or twice in your life, and then you'll never see me again. But if you make it past those once or twice, I'm going to see you for the next 39 to 48 months and longer, God willing. That's all I'm saying. That's how it works here at the cult. That's all it is. Yeah, fairly new, but the long term is all, baby. Let's go. That's what I'm talking about. They know, baby. They know. They know, baby. Look at that. Look at that. NVO. Oh, I put NVO. MVO. Pony, baby. Dude, we're about to have another one. Again, NVO just had the stock split, right? Novo. Wait, I'm tripping. NVS is the one we want, right? No, NVO, right? Yeah, wait, no, this was, so NVO, we could have, that one's interesting. So this is Ozempic. That's it, they just split it. I wonder how much we would have got pre-split. Yeah, bro, that's NVO though. I remember I thought I confused it with NVS that one morning that it came in. We'll see. Yeah, man, 7 month. God bless you, Bardak. 7 month. I can't believe even the Twitch, man. It's crazy. And bro, did y'all not see those 2K games yesterday? Stop it. Arm is dying. Again, MGM's even coming down. I don't know. Cart 2 is going to be an interesting one. I'm not muted. You know exactly what I'm doing. Josh gets extremely quiet. I don't know if you heard the clicking or not. You should know exactly what I'm doing right now. I don't think it's unusual that my talkative ass just shuts up. You know what I'm saying? It's bad, yeah, bad timing, I think, on my part, but I think I see something. I took a $1,200 risk on an option, believe it or not. When Josh gets quiet, play him bam. I kind of like it. I kind of like it because I looked at the idea. I mean, we've given enough discussion towards it. We've given enough discussion towards it. I think it's going to be interesting. Cover me. I'm reloading. No, I'm just kidding. I'm just loading up 2K on my other screen. I'm sorry, guys. I made you think there was a play. I was just setting up my 2K so I could play until Powell gets here. Oh. Is this weird now? I'm sorry. I don't want it to be too weird. Yeah, different type of play. You want to play? We could. I have a Rust Brahma OG. No, I'm kidding. All right, here's the deal. Not a recommendation. You will lose money. MGM Death and Destruction. So we just talked about it, and I said I can't talk about it without looking at the option chain, and I noticed they all suck. However, there is some options on the chain that are cheap. So pretty much there's sub 10% options with time, and I pretty much went for them. There's, again, you could go even up to like December, but I went with January, and then you'll notice everything else just starts to get really crazy spreads and all of that. But the idea is if it gets any worse from here, it's pretty much playing worst case scenario. But I got January contracts, but I just think they're dirt cheap. So that's it. Again, $1,000 though for massive size. If anything bad happens with them, then we get lucky. If not, I'm gonna lose $1,000 in 3 months. I do too. I think it's not bad. You know, the only thing is that MGM just dropped as we just had that discussion and then they start dying. But again, I think the general idea is decent. 3 months. Yeah, it's just, they're down now. It's already moved, but is it too late? It might be, but like I'm telling you, it's just, I really think this might be a very, very bad hack. To the point where I just don't think, I don't think any of us I don't even understand it fully. I don't say this as if I know exactly what's going on, you know, but I just don't. I think it's a very, very weird thing going on there. So this is a lotto, though. There's nothing, you know, the only thing strategic about this is time mixed in with cheap options. But other than that, there's, you know, it's a gamble. I mean, word to MGM. You know what I'm saying? Like, word to MGM. You know, if I'm not going to go to MGM facility there, you know, we'll let it sit there, you know. The bench awkwardly hot. Mosby, 2K just hates you, bro. I don't know why they did that. It's crazy. I want NVO, though. NVO, we should have bought it pre-split, but I'm glad it's cheaper now. Honestly, that's not bad news. Got the F1 thing. Oh, yeah, right? I forgot about that. What are they going to do with everybody they booked for F1? It's no good. NVO. NVO is great. Again, I like the Ozempic stuff. I have for a while. I thought the split, I don't know. I keep confusing them with Novartis. And then SPY taking a couple candles down here out of nowhere. So watch out. We may start to head a little lower. There's carts at 31.96. Are the hacks affecting your stay? I'm not staying there. I'm not, you know, I didn't even have anything booked. Again, if I was going to go for the cool real estate stuff, now this kind of gets in the way. But even then, I was already having some issues. But no, I have not done, this hasn't affected me personally yet. So we'll see. I think Airbnbs, but everybody else, even Expedia, anybody is just taking up all the bookings. That's why I'm saying, like, the problem is what they're losing now. PTVE, cheap stock, but they manufacture plastic containers. Pactive. Is there another chat who likes this? It sounds familiar. I mean, be careful. This chart looks, it kind of looks shady here. The short term looks good, but we'd have to do more info on that. And then also what's your plan with it? I don't know about long term. If anything, it'll probably be a flip. Uber's on the high now. Uber's about to go green. SPY trying to bounce off the bottom. Disney is going into another low. Any trips on booking cabins in Big Bear? Just check every day. You know, try to find a good deal. Usually booking in advance is the best because a lot of people don't change their prices for winter. So if you do it out, you're good. But then at the same time, just check every day because the best deals on Airbnb are when somebody cancels. So like you may have somebody who booked the property and then they'll cancel a couple days before and then the property goes right back on Airbnb. Those are the ones where you could get a very high quality property with a pretty fair price. Apple's on the low. SPY's going down now. Are we below the open? Yeah, my goodness. So we hit 44.61. Sadly, this was just like, it's just right back to this little gulag that you spent time in on Friday and Monday. That's crazy. That's crazy, bro. And then Apple is just getting clapped. How does interest rate affect prices? Usually higher interest rates should make prices go down, but the thing that we're experiencing now is the lag between higher interest rates and then the effect on prices. But pretty much, if things cost more, you usually get less. Interest is the cost of money. So the higher the cost for your dollars, the less you're going to buy, and usually prices should reflect that. And vice versa. When money's cheap, usually prices even go up, and then there's more money, and if it's cheaper to buy money, it's going to be cheaper to buy stuff. You're probably going to buy more. So there's always a lag, though, between those two things. Apple, NVO, man. Tessie, they are holding up by 0.4, though. So, like, everything on the day, even the NASDAQ, you see it, NASDAQ went red, SPY up by 0.18, Dow up by 0.4. The Dow actually held on, but, you know, if it's a small margin, everything could quickly flip. Like, Tesla's one candle away from going red. IBM keeps ripping, again, all day today. That thing's up 2.5 right now. MGM. MGM slots. They put something on their Twitter that said the slots still like record your player play or something. I'll see it. Here's their recent update. This was in the morning, I think, or last night. Say current update, our resort services, dining, entertainment, pools, and spas are operating normally and welcoming thousands of guests each day. Our gaming floors, including slot table games and poker rooms, are open. Visitors to our properties may use slot dollars in free play, and our slots are recording gaming spend. Our slot ticket in, ticket out systems are up and running, and our amazing employees are available to help guests. We thank you for your patience and look forward to welcoming you. Please note, guests at Excalibur may continue to ask casino cashiers and slot representatives for assistance as we work to normalize operations. So they're saying things are up and running, and then other properties aren't there, but it's still and then this is the only update, I think, since 5 days ago. And then I don't believe they have a filing out either. So we are still I just know it's a shit show. But we'll see. Like I said, I'm not going to play a slot for the rest of the year, but I'm going to play those puts. I feel like there's not enough time. I feel you too. I feel like January is a lot of time, but it may run short if we don't hear anything soon. Because very well they delay it, problem, and then again, obviously even the repercussions. They might even get hit in a year if you think about it. Maybe not until next earnings. No, maybe longer. Maybe earnings is going to be bad, but then they're going to come in, and then it's going to be the lawsuits. So you guys remember Equifax? They got clapped. Why? Because data breach. So it's one thing about these guys losing money. Depending on what happens to everybody's data, they're going to have a lot of liability, especially if it was as negligent as some people assume. But that could take another year. That's the only thing. The timing is going to be difficult. But even in the short term, we'll see what happens from this. Tesla's just holding up. Oh, the OGs check it. I know, baby. Welcome to the cult. And get ready for Powell. We have I think there's a couple of Powell previews that we could also go over. We need to talk about the dot plot. Surprisingly, the morning assessment is a lot of people actually, as I think a slight majority, expect that the median rate for 2023 is going to stay the same. So we're going to find out. can I share my thoughts on the lockdown? I don't. Are you talking about the UAW? Let's see. They're telling me George Clooney robbed them 9 times and they didn't learn anything. Borderline. Borderline. What do dentists call x-rays? Toothpicks. That is a good one. I've never heard that. That's pretty good. I like it. It's good. I've heard a lot of the dentist jokes. Is it too late to buy gold or silver? No. If anything, it might be early. So let's see after today, gold and silver, bonds, dollar, it'll all move off of what Powell says. And even watch the market here. If we rocket past VWAP, this could just be a reload. So keep that in mind. Again, a lot of things are still holding up here. Oh, and the dollar's down by 1/3%. Shout out to the pound. How you doing? I'm doing good. Can't complain. Can't complain. I can if I wanted to, but I don't think I can. I feel great, man. I'm excited for Powell. I hope you guys are too. Again, I think it's gonna be it's gonna have a lot because right now the word on the street is that everybody is prepared for hawkishness, but I just don't know, and that's the thing. So keep in mind, last Fed meeting, and you're gonna hear me say this before, but last Fed meeting was a hawkish pause. Do y'all remember? Everybody forgot. That's why it fucked up everybody last time, but then it leveled out. We got the pause, right? But then they raised the rates, but then they hawkishly said, we're going to pause. So everyone got their rate hike. It sounded very hawkish, and even though there was a pause, people weren't feeling it. So today, it's not going to be a raise. It's going to be a pause, right? So last time was a pause. This time's a pause. That's pause. But they're going to say it's going to be very hawkish, though, still, too. But now this time we're kind of bracing for it. But that's the thing. We don't know if Wall Street's really prepared for it. That's everyone's saying they are. Everybody's expecting the bearishness. But that's why now the volatility of the SCP, the dot plot, that's what's going to make everything start to get a little crazier. How many months will the market lag behind reacting to rate hikes and recession indicators, such as the yield curve and bank rates? At this point, I don't know. And why I say that is because if they come out with, wizardry, pretty much making up policy and coming up with things to stop it, like borderline fake Bretton Woods, that changes the timelines. However, there's a timeline I could give you that never changes, 12 to 18 months on average. That's the middle line for the yield curve of when you should be looking. And I'm still operating on that. So as of July of last year till now, it's been about 14 months where we stand with inversion. So we're right there in the middle now, but it's, give it another 6 months. And even that timeline does correlate with the best bearish assessments all the way down to the best bullish assessments too, because think what's going to happen next 6 months. That's what we're looking at today. The 2024, does the economy slow down into Q4 this year? And then, your recession by Q1 2024, that's what we're going to find out. But I think the yield curve, 12 to 18 months is a great lag on there. And that's where it starts. And then I think even then, naturally, I don't know how CPI data and other stuff will, but, as we discovered and we went over on the watch list, I showed it there. There's at least a 1 to 2 year delay minimum on the CPI, or at least that data when it is recorded, it is a purchase from 2 years ago. This is when they recorded that data and they update it, look at it, compare it, seasonally adjust it, all throughout. So it's a wicked concept. Oh, can I read you this? Can I read you this? I need to read you this. I was going to read you this yesterday. I didn't have time to. I just forgot. This is the one that Jesus sent me, bro. It's beautiful. It's a very long article. Let me go to the bathroom first, and then I got you. Tesla. All right, I'll be right back. Wait, let's see, actually. Run it, bro. Yeah, bro, that's such a good article. Thank you for sending me that. I'm looking at it, I'm like reading it out loud, maybe a lot, but no, it was good, bro. It was good. Bond action will bring back recession talks. I mean, they're already there. That's it. I mean, low key, it's either you believed in the recession or not all year. And there's been a lot of people who stood by it and a lot of people who pivoted. Listen to the people who have always been bullish and always been bearish. But the pivoters, they're trying to scrape it all up in between. But in a weird way, just like I'm saying, there's some people who all year have said nothing's going to happen this year. Even at the end of 2022, they were saying, no, there's not going to be what's it called? There's not going to be a recession. They said end of 2023 will be a recession or again, slowdown leading into Q4 or a Q1 of 2024. Cart is on did Cart make that little stupid pop now? I think it might be. So that's why it's just like interesting to see, some people have stuck to this. Again, even Michael Wilson, there's people changing their price target. There's people who have, responded to what's here, but they've kind of stood by their, longer term view of just like what will happen 1-2 years out versus what was supposed to immediately happen. Some think we're already in it. For real. NVO. That's another one, but I don't even have long-term deposit. I don't know if I could buy the post split at the high. DTOC. United Health, Humana, and Cigna. I'm literally watching all of those go up right now. Something in that. Maybe it's because of NVS, but they're all going up. I think you're spot on with ARM 50. I just don't know how it'll play, but then again, we might have missed CART. I want to see if that one would go below 30. U.S. Cushing oil inventories, actual draw of 2 million barrels versus 2.4 previous. Crude oil inventories, actual 2.1 million draw. Estimate was 1.7. Gasoline inventories, negative 831,000. Estimate was surplus of 1.1 million. I don't know. Oil's holding up. Distillates, draw of 2.87 million. Estimate was 1.0 million surplus. Interesting. All righty. I'm going to go to the bathroom. Follow me on Instagram, at The Trading Fraternity. The oil numbers, keep that on watch there. See what happens. I'll switch you here. Walmart, CART, couple movers here. Not too bad. It's been 1 hour. That will BRB.
Years. So here's the pain that's taking some of the money out of the market, or a lot of money out of the market. Tightening conditions here, Guy, and it does suggest that we could have a little bit more pain ahead for stocks if the Fed doesn't ease off, which I don't think that there's any indication. If we have time for this Bloomberg terminal chart, we will see the S&P 500 right here since that Fed meeting, stuck in this range, a battle between the bulls and the bears. It looks like the last touch was to the top, which may suggest, again, we could see some of the near-term buyers step away, the near-term sellers step up and take that S&P 500 closer to 4,300 or so. But it will be interesting to see what happens later today.
What kind of a mountain are we climbing? That is the question we still don't know the answer to. When we get to the top, what are we going to see? Abigail, thank you very much indeed. Abigail, do look at what's happening in the markets. Investors certainly going to be watching the Fed very, very carefully a little bit later on. What will it say about the US labor market? What will it tell us ultimately about where it sees inflation going, and therefore how is it going to respond? Michelle Meyer of MasterCard Economics Institute joining us yesterday. Here's what she had to say.
The number one factor that drives consumer spending and will drive this holiday season is the labor market. And there it has been a story of strength with continued job creation, continued turnover of the labor market, and wage growth that's running above normal.
Michelle Meyer joining us yesterday from Purchase, which is the best place for MasterCard to be based. That takes us back to our question of the day. Are we there yet? And I think you can apply this question to a number of different central banks. Rabila Faruqi, High Frequency Economics Chief US Economist, joining us now. A little quote from you that was in a Bloomberg article earlier on. This is Rabila Faruqi, the quote. "We think the Fed has delivered enough and the funds rate is sufficiently restrictive. But if the labor market does not soften and there are upside surprises on inflation, there is a risk that the Fed will have to push even higher." Rabila, great to see you. How big is that risk?
Great to be with you. We think, the U.S. economy is going to moderate. Activity is going to moderate going forward. So we don't think that the risk is very high right now, but we do think that the Fed is in no position to say that, they are at the peak rate. We think they are at the peak rate. We think they've done enough. But the problem is that the economy is still not responding in a way that we would expect it to over 500 basis points of tightening. This re-acceleration in the third quarter, that is really problematic. And, what happens?
Re-acceleration in the third quarter. Indeed. BJDX, I had something this morning, I think, or some Chaz called it out. Good morning. So SPY coming up here a little bit, not much movement except for the morning gap. NASDAQ's back to green. We're waiting on Powell, which is going to be exciting. But now, would you guys like a blast from the past? Would you guys like to read a New York Times article from 1979? So this is how it looked. You know what I'm saying? This is inflation. We are fighting yesterday's war. This is an archive. It's a really cool one, honestly. I'd love to show you guys stuff from like the 70s, all of that. I've had a lot of videos, especially when inflation was going on. You know how we like to focus on the history of it. Again, I think even then, we never know what's going to happen. But, I encourage all of you to understand the history behind it. Especially with finances, you may not like all of history, but history, when it comes down to money, I mean, it'll open up your mind to how some things are so new and some things are not. So this is what I'm going to be reading to you. You guys down? Does this sound? I'm telling you, Jesus. Shout out to Jesus for sending me this. I saw it in my messages, bro, and I just started reading it. It captivated me. It was beautiful. So. I just wanted to show you it, but that's what you will be hearing right now. Inflation. We're fighting yesterday's war. The current Carter administration strategy for defeating inflation is the economic equivalent of trench warfare. As enunciated by Treasury Secretary G. William Miller, the country must undergo 6 to 7 years of austerity while tight monetary and fiscal policies create enough idle capacity to squeeze inflation out of the system. Again, this is all from 1979. This strategy will fail because President Carter's economic generals are fighting yesterday's war against inflation induced by excessive demand for goods and services rather than today's war against inflation induced by repeated upward shocks in the price of energy. Unfortunately, like the trench warfare of World War I, the strategy will also waste enormous human material and resources in futile effort to control inflation. The source of the ultimate failure is easy, as seen in algebraic dilemma. Since direct and indirect uses of energy account for about 10% of consumption, a 100% rise in the price of energy, the current rate of increase, will cause a 10% rate of inflation all by itself. With energy going up at this pace, price stability can only be achieved if the price of the remaining 90% of consumption falls by an average of 11%. But this means that incomes of those who produce these goods and services must also fall by 11%. Again, this is all from 1979. Mathematically, a promise to stop inflation is a promise to cut substantially the money incomes of most Americans. Economic policies can only stop inflation if they can force enough Americans to suffer the necessary reduction in their incomes, and it is here that the trench warfare strategy fails. It isn't powerful enough to cause the necessary income reductions. The problem also extends far beyond that of the once for all and all for reduction of incomes. Massive energy price increases have only occurred in 74 and 79. Given prospective supplies and demands for oil, our own policy deregulation, and the likely course of actions of the Organization of Petroleum Exporting Countries. That's OPEC. At the very best, this will not occur until the 1990s. Thus, a successful war on inflation must be capable of repeated reduction in the incomes of Americans not involved in the production of energy. Such policies exist, but they have more characteristics of a nuclear attack than trench warfare. The West Germans and Swiss successfully tightened monetary policy to stop inflation in the aftermath of the 74 oil hike, but in 78, industrial employment was 12% below 73 levels in West Germany and 10% lower in Switzerland. Both countries solved their unemployment problems by sending home millions of foreign guest workers. If America were to send home a large fraction of its labor force as the Swiss did, it would have to deport 10 million workers. This is in 1979. Given our growing labor force and citizen workers who cannot be deported, identical American employment policies would have produced a 1978 unemployment rate approaching 30%. There is no doubt that prices and incomes outside of the energy area would be falling or failing under circumstances, but it's fair to ask of what else would be collapsing with them. Living with millions of unemployed voting workers is very different from exporting millions of Turks and Yugoslavs. The policy also needs to be repeated wherever oil prices rise. West Germany's 1979 problems can still be resolved by sending guest workers homes, but it'll be interesting to see whether the tough German policies continue when it's the Germans and not the Turks who are being hurt. To say 30% unemployment will stop inflation is not, however, to say that 8% unemployment for 4 years will stop inflation. The problem is similar to that of bombing, little Chicle here, bombing North Vietnam. A gradual increase in the severity of the bombing was supposed to squeeze the Northerners out of South Vietnam. In the end, an enormous tonnage of bombs was dropped with no effect. But what would have happened if all those bombs had been dropped on the same day? Obviously, something very different. The ineffectualness of trench warfare strategy can be seen in the auto industry. Large price hikes were announced for the 1980 model cars, and a wage contract was signed that increased labor costs by something in excess of 12% per year. So this was something that stood out to me. Why? Because now I have a brand new thing to add right here, right now, related to 1970s comparison till today. Again, one of the biggest car price increases in labor strike or wage contract negotiations in 1979 or 1980. Yet the auto industry is now in the midst of a recession that far exceeds anything planned for the entire economy. But what is needed is not more moderation in wages and price hikes, but an 11% reduction in wages and prices. How far would sales have to fall for unemployment rise to bring the results about? That is the question to be answered when trying to determine how much idle capacity would be necessary to stop inflation. If major auto recession does not bring about the desired result, then a much milder planned recession will not work for the entire economy. Do you all read that? Do y'all hear that? I'm going to keep going. If stopping inflation is impossible, a more moderate goal is to accept inflation that comes from energy, but attempt to keep it from spreading into industrial wages and prices as everyone attempts to keep up. With this goal, there does not need to be enough idle capacity to force wages and prices down, but there does need to be enough idle capacity to hold wage increases to the level set by productivity. 1% per year, but even achieving the level of wage increases will require a level of unemployment that is far above anything now contemplated. A sustained period of idle capacity is more than a failure. It's an enormous waste of human and capital resources that undermines the long-run viability of the American economy. With productivity not growing at less than 1% per year, the U.S. already ranks in the last of the productivity growth race. Many steps will be necessary to accelerate productivity growth, but more investments is certainly one of them. But who's going to invest in the needed new plant and equipment in the face of today's interest rates, credit restraint, and more idle capacity? While sustained trench warfare will fail as a war on inflation, it will only be too successful as a war on productivity growth. The internal dynamics of policy, and hold on, couple things still moving, no other headlines. Just again, oil. I'm going to put up the oil chart here. Yeah, oil already came back, surprisingly. The internal dynamics of the policy will also demand period recessions throughout the ones. The one and I's. Over time, idle capacity gradually disappears as plant and equipment wears out, but as idle capacity disappears, anti-inflationary policy disappears with it. The same problem emerges on the labor side. In the process of normal job turnover, employers seek to upgrade the quality of their workforce during a period of high unemployment. As jobs become vacant, the least preferred workers, minorities, women, the young, are replaced by preferred workers, well-educated, prime age, 25 to 55. This leads to failing unemployment rates for the preferred workers, even though the national rate remains unchanged. But no one thinks that another unemployed teenager will cause wages to fall. Only adult males can do this. To keep white male unemployment up to a desired level and prevent capital shortages from reemerging, this is getting crazy, the administration must engineer repeated recessions that boost national unemployment to higher and higher levels. The process is clearly seen with the history of unemployment. President Kennedy started with a 4% target rate. Yeah, it got hella wild. I was like, what the fuck you just say? What the fuck you say, 1979, man? I'm gonna slap the unemployment out your face. President Kennedy started with a 4% target. Under President Johnson, this inched up to 41%. By the end of the Ford administration, the official target was 5%, and the private target something higher. The Carter administration started by accepting 6%, but now in the process of raising targets to possibly 8%. And under current policy, some future administration will be back in a few years to announce that 8% is too low, and the new target must regretfully be raised to 10%. If the Big Bang recession is ruled out in a country that cannot export its unemployment, there are two other choices. One is to adopt a full range of compulsory wartime wage, price, production, and investment controls. The production and investment controls are necessary since the economy has to address supply shortages while raising prices. But to be successful, the controls must confront the same algebraic dilemma. Again, I'm going to stop there. Do you know what that just said? That just explained to you all of the price caps and everything that you experienced in the last year, or at least there's a historical context that you could relate it to. Since foreign energy prices cannot be controlled, price stability would require repeated orders to lower prices and wages in the rest of the economy. Whatever the technical merits and demerits of a controlled economy, it's clear that America is not ready politically and socially to do what would be necessary to make them work. Controls are a theoretical but not a realistic resolution, unless you're in 2022. Because that's what happened. The remaining solution is to fight fire with fire. If large positive price shocks are going to emanate from energy, the government must act to cause large negative price shocks in other sectors. Government policies that are now in place to raise prices and wage prices could be reversed. Protective tariffs and quotas could disappear for steel, textiles, cheese, sugar, TV sets, and countless other goods. Agriculture price supports could be abandoned and never reappear even when prices are falling at some future date. Industries such as trucking, shipping, and communications, where regulations lead to higher prices, could be deregulated. Maritime subsidies could disappear. Minimum wage and Davis Beacon could be abandoned. There are plenty of areas. This is where it just starts to turn into 1979 opinion. But a democratic government would have to stand ready to lower their incomes of precisely those groups it's now engaged in raising. Largely political, powerful segments of population would have to suffer substantial income reductions. The knowledgeable label of such policy impossible, given the lack of congressional progress on deregulating trucking. I have no reason to doubt this judgment, but stopping inflation means cutting someone's income. If energy prices and incomes go up, some other price and incomes must go down. Which ones? It's a question without answer. Whatever the political promise is, no one is going to stop inflation until a solution has been found to the energy problem. All that can be hoped for is enormous human and capital resources will not be wasted in futile effort. Trench warfare wasn't smart in 1914. It is sheer stupidity in 1979. And I would add in 2023, it's insanity. Wasn't that beautiful? I love it. Again, it's very cool. There was a couple of things there. Again, like it's talking about energy. Bro, this is the same setup. That's what I'm telling you. This is 30, 40 years old, man. And I've been preaching to you 1970s for a while. So, Jesus, thank you for this. Very good find. And like I'm saying, you read it, talking about capital controls, government, again, lowering, like stock, inflation rocketed up, stock market goes down. Inflation cools, your stock market's chilling. What else dropped? Dude, it's explaining a lot of this dynamic. It was even hinting at changing targets and all of that. But my goodness, I hope you learned something there, man. Yeah, same playbook. And they learned a lot, though, from today. Like it was saying, back then, they didn't know what was possible and even how it ended. Like, you got to realize we're more accepting of inflation controls than they were in 1979. I hope you know that. So, like, straight up, it's not like, do you realize, like, we are more accepting of this. Again, we are more accepting of banning the whole world of stuff, of capital controls, energy control. Again, we are more acceptable of all of the same effery. However, we do not want to accept the fact that we have to control energy, our energy, and that this, again, literally energy goes up 10%, your inflation is going to rise to an almost equivalent rate, and then vice versa. And like it's saying, and we've seen this happen over the last 2 years, one place runs, one place dies. That's how you're getting some relative control out of all of this. And then again, the unemployment, back then they had their problem with unemployment was it kept going higher and higher and higher. Our problem is it's not going up. But ironically, they had a sticky employment situation as well back then, all throughout the decade. So, yeah. Isn't that crazy? Aren't you? I love it. 1970. I'll send you the article right now in the chat. I think it's a New York Times article. You know, I'm not really the biggest fan of a lot of places, but, you know, sub 2000, sub 2010, I'm down. You know what I'm saying? Like, that's where I got a lot of good information from there, but you can read it. You can read it. It gets pretty crazy on that one article. He just starts talking crazy. I got any tin about this crushing the middle class? Well, yeah, it's not even tin. Do you not hear what that article said? I mean, honestly, it should make you look around. The last 3 years was a fluke. They're trying to take income out of people who made the money, and also people, if you made too much, they're going to try to take it away from you. In the sense, like, this is just the economic dynamic. I mean, again, it makes a lot of sense. It's not even tinfoil, where it's just saying you have to kind of be able to prove, again, when incomes go up and down this next few years, it's trench warfare. People are going to die. That's why I'm saying you're going to waste resources because they're going to set up things to raise and lower incomes and again, prices to combat this. So what's going to happen? If you're not prepared for that, the idea is, like, you know, in stopping inflation, it is a generated effort to lower your income and demand. Do you understand that? By the government paying you 5%, they do not want you to invest right now. So yes, I do. It's a war on everybody, even the rich people too. Sadly, lower class, middle class are more vulnerable. Do you get it now? It's an attack on every American. And again, it's not like it's oh my God, a bad attack, but just understand what it means. You know, to slow down demand, to control inflation, you're asking everybody to make less money. You want prices to go down. You want people to lose a certain amount. It doesn't matter rich or poor, but the sad reality is that, you know, some people are more vulnerable than others. And that's where it's saying, you know, just how are we going to lower inflation, and are people going to be willing to do this? But again, we kind of are willing to do it because that's what we've showed the last couple years. I mean, I may not be willing to, but like I'm saying, it already happened. You already have things where society in general is okay with the last couple of years. Is they're okay with, you know, do this to other governments. Let's bring this down, do that. Yeah. I say we because that's just what happened, unfortunately. Yeah, that's, again, a good point. You know, if reading that article, we have a different immigration scenario. We can't do what people did in the past to fix it. We won't. It wouldn't work. But even like it's saying, even if you do that, it causes a problem in another area. This is the problem with inflation. This is what we're going through right now. One problem starts, we fix it, and then another problem emerges. And then we try to, it's that scene from Vegas Vacation with the gum. That's literally, I think I've gave you this analogy before, but that's exactly what it is. It's like, you know, you're patching up one hole, and then the other hole opens up a little later, and then you try to patch that one up, and then now 2 holes pop up. Then you patch those 2 holes, and then a bigger hole pops up. And it just starts to get crazy until there's an answer to energy. Will the next president decide if we get clapped or not? The next president might not be giving out free money. We don't know, but they're going to inherit. Always. Again, even Biden inherited some of the problems of Trump. Again, Trump did not Trump is not innocent in terms of fucking dumping money on the world. And neither is Biden at the same respect. You know, it was the difference between I caught Donald Trump at the club popping bottles, and then I caught Joe Biden at the club popping bottles, pouring them on the floor, and having a bottle war. You know what I'm saying? Like, it's like, whoa, 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 whoa. They both are to blame, though. You know, but again, everybody is going to inherit. So Biden inherited a little bit of Trump. You know, Trump got to inherit a little bit of Obama. And now whoever's next president is going to inherit a little bit of what Biden did. You know what I'm saying? And where we're at now. So it's just like, in general, we got to see where this all leads to. But I mean, depending on administration and policy, it's a toss up, dude. We have and people are crazy now. And that, like I'm saying, with social media and the ability to sway public support, who knows what they're going to come up with. That's what I was saying yesterday. At the end of the day, watch out for oil. Yeah, maybe we're in wave 2, but like, dude, we live in a new world. And what I mean by that is like I'm telling you, the solutions they will come up with are stuff they would have, that guy who wrote that article would have never fathomed it. Back in the 70s, 80s, if you were talking about a world, like in America was doing fucked up shit. Go read that article. It was so fucked up. Even again, the racism and all the things, you see where people were at, but like what they would have viewed the economic stuff we did today, they would have said, this is insanity. They would have been offended by it. If we said we were going to lock down countries, central banks, if we were going to literally put controls on energy and everybody was going to be just so happy about it. Oh no, it's wild. It's wild. So very good look at it, but we'll see. But like I'm saying, who knows what's going to happen? You know, who knows? Every generation blames the generation before. Nah, bro. If they try to blame me, bro, I'm going to be like, I told you, get a damn long term. I said buy the house in 2020, dog. In 2019, I'm just saying. I'm gonna get. I don't know. I don't know how me and the generation is it. What are you? I forgot what they're called. But yeah, man, history. You guys should read into it. The 70s history is all fascinating. All fascinating. Jen Arcad. That's it. Well, Twitch, you guys are beefing again. And Rob, this is your second beef with the Twitch chat. So I'm just saying, y'all got to work together. Figure this out. Last time you got me yelled at by another Twitch, and then he like, yeah, the kids table. I look over at the Twitch. I've seen conversations. It's good. I mean, I like that you guys were discussing very good until you just started fucking clapping each other. You know what I'm saying? Like, that's it. Right? Until it started getting into like, well, fuck you. Your fucking theory and your fucking own narrative. And then like, you know what I'm saying? But other than that, nice discussion is always nice. So show love, man. Show love. Always. Don't worry. And we have the same Congress in the 70s as we do now. Tell them, Chantel. Why you got to drop facts on us like that? Why you got to, oh, man, we talk so much good stuff, but we talk all, you know what I'm saying? But Chantel just came in with it's also the same exact people. That's crazy. Seems like every 50 years history repeats. I don't know. Can I give you something? And I don't know if you've heard this before. I hope you know where it comes from. But it's so true. I really believe this. I really, really believe this. And if you understand this, your life will change. I really mean it, because and it will change how you think about things. And maybe you will come up with a great, crazy idea once you realize what I'm about to tell you. There is nothing new under the sun. My brother, if it is below the sun, it is not new. It has already existed. It has already been here. The behavior, the human nature, the idea, AI is not new. Even Pat Gelsinger said they were talking about it in 1999. It's not new. You've had a chatbot since AOL. Again, the Roman Empire, there's nothing new under the sun. That's why I'm saying the stuff we haven't invented yet, it's here through existence already, is what I'm trying to. You could discover it, and you might be closer to discovering it, knowing it already existed at some element, shape, form, remix, who knows? But literally, there is nothing new under the sun. You do that, you're good. You understand that, and that's why. That's why I like history. That's why, sometimes it's combining different generations and years, but the general idea is there is nothing new under the sun. How about my kids? It's you. It's you, and it's your father and mother before you, and the father and mother before them. You know what I'm saying? It's you. It's not new though. AIM was fun. Smarter child. Copper looking like it could get a little. It was mad at some headline out of China the other day. I thought it was low demand though. I've never traded copper though. That's facts. Yeah, man. They even mentioned cryptocurrency in the 80s. Nothing new under the sun, man. Nothing new under the... Yeah, even me. Yeah, I've been above the sun for a long time. Anyways. Exactly. I've been in politics. The media used to love me. Then I got into politics. Then they turned it into a witch hunt. I said, why are you coming after me? It doesn't make any sense. Exactly. FedEx will be interesting, but transports in general, I'm curious of, again, as oil starts to go up. Yeah, oil's coming back up. CLO, what? Yeah, 90.5. Oil, again, it had very bad data with a big draw, and it was expected to be a build, and then we dropped, and now we're popping on it. That's good. Do you think I nailed the Trump voice? Wow, not too many people have told me that. They told me I was going to get impeached. They told me I would never run again, but they never told me my Trump voice was actually good. That's amazing. It's terrific. It's magnificent. I'm telling you, I've never seen anything like it. Wow. Jamar, bro. I'm not going to lie to you, bro. I was praying in my bed last night before I went. I told you on the Twitch, man. I said, go to bed, bro. Y'all need to go to bed with that thought in your mind. You know what I'm saying? That power, right? But like, I'm not gonna lie to you, bro. Before my prayer, I was thinking about you dropping a triple-double on our first 2K squad game. I was just crazy. I had too much fun yesterday, Chad. That was beautiful. That was, dude, the 2K squad, baby. Trump vampire. I don't know, man. It's hard to, like, there's so many people who could do the Trump voice so good, and I can't hit it like that, man. But I do this one great. I'm telling you, I embody this one. But this one, don't worry, I'm gonna practice a little bit. I have another year to the election. It's good. No, bro, Jamie Foxx. Have you seen Jamie Foxx's Donald Trump? Yeah, Shane McGillis has a great Donald Trump, and then there's that other guy, too. There's another dude who has a podcast, bro. It's fire. The difference is Trump would laugh and Biden would shut you down. I mean, so far, I haven't been, people are asking me if the song's even out, but at the same time, I think it's, it's good for now. I haven't been excommunicated and sent into an education camp. So it's good. The Bill Gurley talk Is that him? Is that the dude who does the Trump one? Because there's somebody I don't know, and he's like top tier, but I'll know him if I see him. Card, I don't know. The price is 30. Like I said, Card is going to have like a stupid pop, like maybe end of the day or something, but I do not know. Going to be difficult. I'm trying to see. I need to check, actually. Analysts killed our and chips, bro. A lot of things are getting clapped in chips. So the chip space, I heard a report of shorting it yesterday, but a lot of the chips are they're not looking pretty. What is it? I got scared, switched up your Webull, and now I'm down 40 on Webull. I mean, it's not, I don't know if Webull is the reason. It may have just been bad trades, if anything, and that's, I could speak from experience, but at the same time, I just don't like Webull. Just be careful. You know what I'm saying? That's it. And then long term too. But the Webull, that's not my issue is Webull. We won't know our problem with Webull until it happens, if that makes sense. Just like everything else, just like Robinhood or you won't know Webull is going to be your problem until it's too late. You think it's as bad as FTX? I think it is exactly what it is, and you do not have to be a rocket scientist to figure it out. It is a China-owned entity that is probably linked to the China government. It's not, I don't know any other way to put it. That it makes it should be obvious, but that is a government entity for finances that you're giving all of your money and info into. So if you're cool with that and you don't think, like, again, and I think that is a dark hole. You know less about that than damn Sam Bankman. But it should be very, very, very obvious with what they've done, their behavior, how it operates, like how they've copied a lot of things, how they've implemented. Like, it's not. And for me, I would never feel comfortable. Like, even then, maybe I should have felt less comfortable with a casino. But at the same time, it's like, yeah, Webull, it's a Chinese entity. It's not, if you don't know where it came from, how it started, you should do your research. If you doubt it, God bless you. Maybe the platform is that good, but they are FDIC insured, but it's just like, it's just look back into it, man. It is what it is. Like, you don't, even if it doesn't say owned by Chinese government, you're a fool if you're missing that at this point, because that's just what it is. It's a China brokerage, and if you're gonna be on that, that's all you bet. Like I said, I don't think it's gonna cause you a problem until it's too late. I'm talking out of my ass about Webull. I'm not. You guys, you should see how much money they offer me to fucking promote it to you. Again, bro, you should see these emails. I've showed them before. I have over 100 emails. I've rejected hundreds of thousands of dollars from these companies, Webull, Moomoo, all of the China brokerages that, again, I believe they are sketchy. If I personally would not put my information and my money there, I would not advise anybody to do it. So you could think again, like I said, why, like, what do I get out of telling you this? And same thing, like, if you're mad at me for saying this, like, I get it. If I'm not trying to talk shit on your brokerage, you like it. It doesn't mean anything about you, but, generally you will learn this down the road. I said the same thing about staking. I said the same thing about all the crypto shit. They all offered me money as well, too. And again, we learned from that as well. So it's simple. Your brokerages, you go with the legacy ones. You go somewhere there, but it's all on you. It's for competition. It's not. Again, just look into it. Again, who owns them, where it came from, how it originated, why they're able to operate, all of it. But again, if you have not done that info, but you gave them your money and all of it, all I'm saying is just you have things to look into. But denying it was not going to change anything. And again, maybe I'm wrong now, but I don't think I am. But like I said, down the road, it's not a risk. And it's just like when FTX and what was the other one? BlockFi. Again, I had fat checks offered to me, and I was going to take one of them. But like I said, I couldn't. I can't live with it if I tell you to put your money in there. Like, again, if I make a bad play, I put my money on with it. Again, we own equity. We'll get our way out, in and out of that. But I'm like, to run you into a fucking scam or a threat that I could I could feel the threat. I cannot put you in that and give my name and stamp on it. So again, call me whatever you want about it, but you can look into it yourself. And at the same time, just for me personally, I don't run that risk of putting people who watch me into trouble because I love you guys. You guys have had my back. Again, a lot of people come and go, but the people who ride with me, they know I've done this for years. You know what I'm saying? And it means a lot to me, and you mean a lot to me. So it's like, I'm not going to, maybe I'm wrong, whoop-de-doo. But if I'm not wrong, I don't want you in that position. And it's just so much, the alternative is so much easier to go to E-Trade, TD Ameritrade, Fidelity, Interactive Brokers, anybody in the world who's been around for 15, 20 years plus. And I don't get paid by any of those people. But I have used them all in my past. So like I'm saying, it's just, come on. They provide you better data. That's I'm not saying that that's untrue. I'm not saying that they operate. I'm just saying you do not know what's going to happen. They said the same thing about FTX, mind you. FTX's platform was OD, bro. FTX had the best platform. They gave you data. They gave you access to cryptos you couldn't trade. And guess what? You don't find out till it's too late. And that's all I'm saying. If there's a giant red flag, you don't want to put your money there until it's too late. That's just, I don't like that game. That comparison is ridiculous. It's not. Again, maybe the comparison is they're not doing fraud. And maybe I'm not trying to insinuate they're doing fraud. But what I am trying to say is that, no, my only red flag is it's owned by China. That's it. What other China legacy broker do you know of? I'll wait. Fuck it. You tell me. Give me the other China brokerage that is used by Americans widely. Before Webull, where did people put their money? There is none. Again, it's a very odd thing. Again, with capital controls and a lot of stuff too. I could get way deep into this, but like I'm saying, this isn't a conversation that if I have to explain it, then I don't think we're ever going to learn it, So we'll leave it there. But good. I wish the best for all of you. Like I'm saying, I don't think you're in immediate danger, but when it's too late, it will be too late. Josh, Anton. No, I just know how it works. That's all. It's just not gonna. You saw it. You saw money getting tied up. What happened with what happened with staking then? Like, you know what I'm saying? It's just seriously. It's the same thing I said about staking. I get it. You got the returns. Everybody fought. Bro, again, you guys were reporting me. Every time I tell the truth and it's unpopular, I either develop a stalker who hates me for the rest of my life, or I get reported, or I get threatened to demonetized by YouTube. It's insane. Literally, from Ryan Cohen to AMC to, again, the staking, you guys got so mad at me 6 months before Luna and all of it. And I just said, listen, I get it. It's high interest and it looks good. And maybe you've been doing it for a little bit. But I just said, when it's too late and you get your money stuck, you do not want to be in that position. So that's all it comes down to. But like I'm saying, take it as what I'm saying, but try not to get mad at me for it. I am trying to help people out. And if I'm wrong, nobody gets hurt. But if I'm right, it's fucked. Do you get my logic here? I'm not trying to hurt you. I'm not trying to talk you out of it. The way I look at it is that if I am wrong, nothing happens. If I'm wrong, all you do is benefit. But if I am right, that's a fucked up right thing to be about. And again, same thing with the dividends. Or that's why I said go dividends instead of staking, talking to my brokerage. You want to settle this outside? We could, man, but it's not, like I said, it's at the same time, I don't care. Why? Because my money's not there. At the end, my God is good, my life is great. So what's it even mean to me? I'm telling you, at the end of the day, I'm going to sleep perfectly. Again, I didn't lose anything on staking. I cashed out at a very good price on crypto. I got, you know what I'm saying? So it's like, I don't care. I'm not gonna feel it in that same way. So I'm telling it what it is. I hope I'm wrong. And that's it. Josh Fudd. I owned crypto for like 3 to 4 years before you knew what that meant. Before it was even a crypto word, I owned crypto. So yes, FUD. I'll take it. Again, I'll tell it how it is, my guy. We respect the FUD. I mean, respect yourselves. Protect yourself. Wall Street has showed us a lot, bro. I'm telling you, all the money around the world, what you've seen the last couple of years, you know, like we said, end of last year, man, just don't trust anybody. You know, it's on you, and you respect yourself, respect your finances, your future. I understand hearing things like this may make you scared and worried, and that's not the point, you know, and if it does and it gets you on the defensive, like, chill, because that means you're exposed if that's the case. Because then that you don't want me to be right about it, and that's why it's like, oh shit. And if that gets you blood boiling, then I would just see and just be real with yourself about it all. And if you feel comfortable, just know and make that decision today. You know, because that's what I do. If I know something is risky and there, I address it and I know it's there and I do it if I'm okay with it, and that's it. But I don't cry when it happens, and it's very, very hard to, you know, I don't know if you have those moments that you've dealt with it like that, but you got to ride through it. So it is what it is. You know, amor fati. Long term. Once you're selling one long term to buy another, some people have done it, and it's kind of like this discussion. It's up to you, you know, because you will not learn the lesson of selling long and switching in the long term. You don't learn that lesson until it's too late. You know what I'm saying? So it's just, you got to really, really look into it. But I would say, no. No, I'm not a fan of it. Four fingers. Listen, man, it's cool. All right, you guys are right. I'm totally wrong about Weeble. Go ahead. Just sleep okay today. And if you listened, you listened. That's all. Yeah, I'm not here to argue with you. You know, if you want to get back to the day, we can. Keep using your Weeble. Do whatever you want. You know what I'm saying? Like, I'm cool. I love you. I love you. That's all. Yeah, let's go. You're right. It's insured, period. Exactly. Perfect. Great. Next conversation. See, where the F did CZ go? You sold the 1K TSM, bought the MFA. Yeah, but maybe down the road you'll see it all. Kyovio, it is going to IPO. It's above target, but we don't. I didn't get my shares. They scammed me. Can we talk more Powell? Yes. What time is it? 8:16. Mad early. It's actually, we still got 30 minutes till what? Yeah, 15 minutes till Euro close. Oh my goodness. But yeah, we talked about a little bit with the dot plot today. what people are expecting. I think the statement is going to be interesting. We'll go over that. But other than that, let's see if the hawkishness expectation is real. Because it does seem like everybody is ready for this thing to get clapped. But that, if everyone's ready for it, then it's not going to, that's a good thing, is what I'm saying. Clavio 30, 19.2 million shares. How long do I have to hold it to not use? 60 days or 30 days. So, I don't know. You could just sell it. I mean, listen, unless there's any other crazy IPOs that you want, you could just sell out whenever you want. Like, that's remember, I sold out. They still let me apply for the IPO. They just didn't give me any shares after. Square. Damn, Square's getting murdered right now. 1.9 down. Still going down. Oil's breaking out, but actually oil's green. And then PayPal's getting clapped here too. Powster comes on at 2:30. The release is going to be at 2 Eastern. Yeah, oil is actually, dude, oil flipped like 1% today. Bottom to top. Apple. Hedgies have to cover the bond short today. It depends though. So take a look at the UK bonds, but they didn't have their Fed meeting. It'll be weird, bro. But that is in the cards. That's what we have to watch out for. Why the payment processing industry is so competitive. Finances, again, it's big money. A lot of players in the space. And the issue with them is growth. Everybody right now is just competing for market share. And then that's it. But how do you compete for market share without spending money and making sure you could actually, that those efforts are going to lead to growth too? I think that Powell is looking for it to raise. It seems to me that the labor inflation is pointing towards higher, but he seems hesitant. I think he's waiting for energy now. As weird as it sounds, like we were saying, because if energy starts to go up, he has a whole nother world of problems. So I think Powell is trying to have strategic ambiguity. I think Powell is trying to waste time. Like I don't know. Like I've been around people who like to waste time. I don't know. I picked up on it pretty good, but it's like I think he's just trying to waste time. Like that little article gave you some insights, but hopefully you get it into the sense of like you need time to keep one area of the economy lower while the other one's hot. So now the stock market's hot, energy has calmed down for the last year, but if energy runs up, then he might have to get the market to cool down. And then vice versa. What if they're going to, again, the auto industry? I don't know, bro, that was mind-blowing. 1980, they had another labor union strike wage contract that led to price rises, that led to an auto recession, and they used that auto recession to say inflation was going down. So it's like you need one up, one down, and that's why, like, legitimately, I think he is wasting time. I don't think Powell, that's it. After the beginning of the year, and even after SVB, once he had it just, like, in place, he didn't say anything different. He just flipped the script from the end of last year, allowed the market to go up, and then he just kicked it. But I don't think he is trying to do anything. So, like I said yesterday, I told you what to look for. If we are not going to be unprepared. Let's say Powell pulls out, a crazy bear out of a hat, and he wants to flip this script today. We know exactly what to look for. We know where it will happen, the statement, the SCP, the dot plot. You know exactly what will happen that will cause a big move. However, he's not going to do that. He is supposed to keep strategic ambiguity because right now you could get away with the second pause, have the rates still high, have the market 60% odds ready to respond to the latest thing of whatever you say, and then it still buys you time for the next 2 months until the end of the year and to see how the start of Q4 is going to look, or Q1 2024 will look. So it's crazy. It's crazy, bro. Hey, Marks, 3 months for me quitting my job and trading options full time. I don't know what an option was before your channel 2 years ago. Let's go, baby. Hard. I hope there's a long term somewhere there, but that sounds like a great story. I can't wait. I can't wait to see how it progresses, baby. Share the chapters with me. Let's go. Will the market take it as uncertainty or good news? No, they'll take it as good news or the same. Again, there will be people who will react, but he's not supposed to do anything, and he should keep it the same. But that's the thing. If he doesn't keep it the same and changes it, when he changes it, that's where you have something. That's literally where you have something. Because then if he changes it, the reason of that change is what's going to get people to think of, okay, what's happening now? Why did he do this or not? We watched the ZN and the ZB and the ZT. I'm down to flip it, honestly. I say fuck the ES. I'm probably just I'm gonna take a page from Open Face's handbook. I think I'm gonna just hit the bond flips, worst case. Because honestly, I think it's better action and it's easier just because equities are too jacked up. You guys hear that stat yesterday? It's crazy. Approximately 44% of S&P options are dailies. Literally, 44% of S&P options are dailies. And then I think the rest though is where was it? Oh, it's on the watch list. Hold on, I forgot the second half of it. It was in the rest, it's 7% of something. So again, I said this even on the watch list though. If you guys ever go to the description though, I have been giving you nice little breakdowns here. So yeah, where is it? 0-day options make up 44% of S&P, but only 7% of total contract outlay. But I don't know the timing on that. So if you Google this headline, you'll find a Bloomberg article. I included all the sources as well too. But yeah, isn't that crazy? 7% of the rest is dailies. Isn't that weird? That's wild. I see the Nikki T tweet saying 4 things standing between us and soft landing. One was casually mentioned as market rupture. I did not see that. Quick volatility. Cities on the high again. Banks are running. Apple's still at the low, but so is the SPY now. But NASDAQ's the one that's red. Dow is killing it. Dow is not giving back any. And then SPY's up 0.16. Chewy. I haven't looked into it as much. I mean, their last earnings, I was impressed by the volume. I was not impressed by the margin, but I don't even have a dog. You know what I'm saying? So I don't even think I'm in the pet game at all. I do think people love their pets more than kids in this country. Or some people, that's why they have dogs instead of kids. But at the same time, I don't think I'd ever invest in any animal play. If that makes sense. I'm not in it. I'm not involved in it. And they have high volume, low margin. I don't know where it grows from there. I don't think they're bad, but I don't think I'd buy them. You now have you have another dog? And then you got 2 cats. This was because you had a merger, right? This is because you had a merger agreement with the girlfriend. That's why. Because initially you had News and 1 dog, and now you have News, 2 dogs, and 2 cats. This had to be a merger. Yeah, I was gonna say, there's no way, bro. No way you went from puppy to another dog and now 2 cats. That's crazy. What was his name? Was it Cisco, Swift, Tom, Ted? You read my comment quietly? I did? Oh, my bad. I swear you watched it 2019, right or after I invested in the Doge, 17 to 33. think eventually I caught that D-Walk. That's good, man. That's good. You went from stock options, now back to options and futures, going back. Any long-term in there? No long-term? No long-term. We need long-terms. But that's good, though. I'm proud of you guys, honestly. Like I'm saying, I think you find your talent, ability. It's even better. I hope you guys can be able to use it and provide, too. And, again, bounce ideas off of people. But at the same time, too, like I'm saying, man, long-term, add it. Todd, yeah, I remember Todd. I was like, there's some Sonny and Wilson are the dogs. Stevie and Todd are the cats. That's a great lineup of names. Sonny and Wilson. Feels like a sitcom. Please look at cattle futures. I looked at them a while ago, but I'll see. I haven't looked at wheat, but yeah, it's I'm ready for wheat, honestly. That's why I said on the watch list yesterday. That's why you got to watch the watch list, baby. But it's still very, very low. I'll run through the contracts right now and just see the time. Because remember, I was on December shit. What? No. Oh, it's a trap, I think. Boo. Yeah, so the futures contract on wheat, you can't get, what's it called? You can't go past December. Usually they give you like a couple months, but like I should be able to go. Wait, why did they change this? Oh no. Yeah. Bro, wheat you can't buy past the month. That's crazy. So you could buy this contract till December, but like usually you could go ahead. You could buy ahead of it. But my goodness. That's wild. Russia's defense ministry vehicle with Russian servicemen got under fire in Karabakh. And then China says Putin meets with China Foreign Minister Wang Yi. Wang says China and Russia should strengthen. Probably October. Yeah, that's weird, though. So I don't know, though. That kind of makes me nervous because my plan was always go 1 month ahead on some of the commodities. That's crazy. So, I like the 583, though. 583 is not a bad price. There's no news on this drop. No, nothing. I mean, you're getting these headliners. Russian defense minister, Russian peacekeepers died, IFX. They're on quarterly contracts, but last time I bought wheat, it existed. So the last wheat play that we hit, which is like a month or two ago, I didn't buy the front month. I went to the next 2 months or so. But now they removed it. So you can't even trade that on TD anymore. 2 months ago, you could have. You could go long on wheat stock, yeah. 830 push-ups, baby. Let's do it, man. And euro close right at the low. You're getting a green candle. 8, 9, 10. That means we got 3 hours till we hear Powell, 2.5 till the statement. Oh, my goodness, Chad. But we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile, press high chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts boot camp and real estate costs. But ladies and gentlemen, it's push-up time. We've been here for 2.5 hours. We got 4.5 hours left to go. Sitting is the new smoking. I need you to get beside your desk and do 10 push-ups. Can't do 10, you do 5. Can't do 5, you do 4. Can't do 4, you do 2. Can't do 2, you do 1. Can't do 1, get her knees, do a push-up, plank the worm, anything. But get the body moving. So let's go, man. Move the body, relax the eyeballs, stare at the object 10, 20, 30 feet away, blink a few times. Blink, 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 blink. Oh, man. Oh, man. All right, man. I need to move. Relax the eyeball. I'm looking for weights, resistances. I could do some push-ups. I need to hit that door stretch, though. Hits, bro. That door stretch hits, though. You know what I'm saying? Amen. All right, I'm doing it, so you better start working out, bro. Hold on. I need to get this. This thing is so trippy. Ba-da-ba-ba-ba. Sorry, I'm doing the stretch, Chad. I'm doing the stretch. I gotta focus. It's like making a play. You know, I need to get good posture. I need good I don't even know if you can hear me. I hope you can hear me, Chad. I love you. If you don't hear me, it's okay. I'll be back soon. I'm actually working on my back. All right, there you go. Now we get some resistances. That's it. That's beautiful. Oh. Shine in the helmet right now. Let's go, baby. We're back. I'm good. I was just doing the back workout. I don't know. I didn't think I got to show you that one. I only was able to show you, like, the video. Oh. Chuck Schumer, Senators Merkley Daines, Kirsten Sinema announce a Fair Enforcement Regulation Banking Act. Jamie Eat Bank Act. I don't know if this is like the new one or not, because remember, they were doing all those regulations recently. FDIC's been doing a bunch of stuff. And even then, regionals, regionals are right back to SVB level. I think they're up today, but this was like legitimately like peak SVB, except after this was, I think, FRC and everyone else. Europe markets ending in the green. I think very green. Some more than others. They had Germany 0.7, Euro stocks 50.8, FTSE 100 break even, it says, like 0.09 green. But still, again, that data was very good. Oh, are you kidding me? What scammers? They priced me out by $1. Regionals. Amazon announces in-call translation on Alexa devices. Clavio, no, it's Coheta Gabriel. But it's like a marketing company. It's like a automated marketing email thing or something. I barely knew about it. I read the prospectus, but I still just seemed like a software tech company. I wanted to go in the offering because they had it on E-Trade, but then they scammed me by $1. Check CLX. Yeah, they did. They said it was material. Remember, they got hit by a cyber attack too. You didn't hear about it as much, but they said it was a material impact. Again, I think they're going to resolve it much easier than the MGM one, but that was news. And then MGM bounced. I think contracts stayed up though. Kyvio long term, no. Unless you know about it, but this is what we were talking about yesterday. Nothing IPOing is cheap. You guys got to realize IPOs right now are so bullish. Just like the peach. Oh my gosh, ladies and gentlemen, boys and girls, Bradley Frizzle and the Peach here on Powell Day. You got Powell in like 3 hours, but you got Bradley Frizzle right now. Peach Nation, get your ass up. Hard on. Oh my gosh. Oh my goodness. Oh my goodness. Wow, Peach Nation. Oh my goodness. God bless you, Bradley Frizzle. On a magnificent, he doesn't disappoint even on the big days. That's what I'm saying. It don't matter. Small day, big day, that's it. They do it. Oh my gosh, God bless you. Cavios like Breeze and Hubs. Some products CRM owns like Marketo. Oh, I did not know that. Yeah, it's impeccable. Impeccable. God bless you. Tesla. MSGS, the Madison Square Garden. They're killing it. They say, wow, very good. Peach, top 3 moment every weekday. It's great. It's great. My girlfriend sent me something. I forgot what it was. Oh, she had a Celsius peach. And all I did was respond to her. Shout out to Bradley Frizzle. And she knew exactly what I was talking about. So I'm telling you, it's everybody knows, bro. The peach, it's amazing. It's amazing, bro. It's amazing. It's amazing. Oh yeah, I have. I'll show you the text. I could post it. It was about Bradley Frizzle. And then she also gave me the peach emoji back. She knew the vibe, bro. She knew the vibe. How many minutes till Powell? A lot. We have about 3 hours till you hear Jerome Powell talk. Just right under 3 hours. And then 2.5 hours till we get the statement. Zelensky demands UN revoke Russia's Security Council veto. Sunak, he's talking green energy. It's the UK Prime Minister. SPY new low. There's no news. Again, the biggest news of the day right now was in the morning. It was UK CPI coming in lower than expected, dropping the dollar, dropping the pound, all of that stuff. And it's simply because it changed their rate hike expectations. GM and UAW are far apart in talks, people familiar say. I think that's coming out right now. Yeah, GM, Chicle, UAW are far apart in talks, people familiar say. Little Chicle, see Stellantis and Ford too. No B&J news, but we get Japanese data, I think, tonight and then into tomorrow. But then it's Bank of Japan on Friday. and face highs. I think all energy, Dollar General's back up. That thing went 115 down to 112 and it's up. And you guys were asking about AAP yesterday. I think it was because of AutoZone earnings. Yeti. Is Kim Jong-un really going to be on Aiden Ross's stream? I saw a couple chads say that earlier, but I didn't know if this was a remixed plot to the movie The Interview. But I do not know. I've not got a report on that yet. Amazon announces new Echo Dot Pop and Pro for tablet for kids. But I feel like Amazon has announced like 15 different things. Real life of The Interview. He confirmed it last night. That'd be crazy. I feel like it'll be a troll, but if he pulls that off, bro, Kim Jong-un interview, it's literally the plot of The Interview. If you don't know, if you've never seen that one, bro, like if you haven't, like the movie The Interview, it's like a reporter who's like, people like, he was just like a funny reporter and he was like, this could be the biggest thing. Like it would really be the biggest interview in the world. It's like, it's very similar to the movie, but then very, very different. But then like, I don't know, man, maybe. UK Prime Minister Sunak, we are going to ease the transition in electric vehicles. Consumers, not government, should be the ones making choices to switch to EVs. Should be consumer, not government, who makes this choice. We will meet all our international commitments. They target net zero emissions. Sunak, we will delay ban on sale of new petrol and diesel cars to 2035 from 2030. After 2035, we will still be able to buy and sell petrol and diesel cars secondhand. I said we are aligning our approach with other countries in petrol car bans. Wow. The UK, look at that. So they're extending the petrol gas car ban by 5 years, and then they're saying you could even resell them afterwards. That's good. I don't think they're tripping. I mean, if anything, you know, bro, that means in 6 years they were going to ban every vehicle with a gas engine, and then they were going to fine the shit out of you if you had like an old car driving on the streets if it was gas. New Echo frame glasses. Wait, what? Amazon has like a Google Glass thing? It's a rational thought. It's a first step doing away with the bans. No, it is. I mean, I think it's... See, that's the crazy part. I don't know how people, like, the governments haven't realized. I guess maybe we don't give enough credit to rational approaches, because I think that's good. I think that seems more realistic, that you will actually make a switch instead of just saying, we're banning it, figure it out. But it seems like they're making a system with it, or at least a more reasonable process. Sunak will not force anyone to rip out existing gas boilers, only have to make switch when ready until replacing and not until 2035. A new exemption to some homes never have to switch heat pumps. Yeah, dude, he's going in. UK, where is Prime Minister Sunak? He's giving a bunch of statements right now, but it seems like they're easing up on the energy controls. Sunak grants upgrades. Residential gas boilers will rise to 7,500 pounds from 5,000. We're giving people far more time to make the transition to heat pumps. Feels like not much happening. I'll be honest. It feels like a lot of sectors, energy prices, autos, UAW, travel bans, travel disabled, hacks, iPhone sales down, chip AI hype down, banks clapped. I agree with you. The only problem is that a lot of the names, banks are the ones that are really low, but it's all within the same price range we've borderline been in the quarter. So even the currencies, again, the dollar's up and all that. It's like we're waiting for something, but I do agree with you. It is good to notice all the things happening right now, but you know, we're in our own little world, and a lot of the world is focused on the monetary policy first, and then we're going to decide to freak out about everything else. Or it was priced in. No, I know. Exactly. Roller Coaster Tycoon, yeah, bro, it's the first game. Oracle 114, Sunak will not ban new oil and gas in the North Sea. We will not force any household to take energy efficiency measures. What the fuck is happening in the United Kingdom right now? Dude, these headlines, I feel like it's an AI who got hacked. That's crazy, dude. What is this? My man is he's like, yeah, bro, we ain't gonna make you do anything after trying to tell you we were. He's like, it's cool, bro. Yeah, so honestly, there you go. The Liz Truss replacement. It was about a year ago we had the Liz Truss debacle. You guys remember that? The fucking European bond market almost blew up. DG double top. That was already a crazy move on the day. I mean, it opened up, gap down from where it was yesterday, sold off, and then just bounced right back up here. But a lot of staples are doing good. Like Walmart's up. I think even Target, 0.4, Home Depot, 0.16. They're all just holding. Again, the Dow has actually been magnificently stable. She never said sorry. That was a wild, wild experience, bro. She called out the new prime minister the other day. Really? I mean, bro, she almost destroyed everything. I have not met. I was going to this morning, bro. Be careful. So like, I reset the cash on E-Trade, and like I did the cache, not cash. You took out your cash? No, the cache, CACHE. But then I couldn't open up. I had to restart my computer twice this morning. I was so delayed this morning. I was like 25 minutes behind schedule, just trying to get everything up because I reset it. I had to re-download it. I had to uninstall it. I had to reinstall it, and it still didn't work. None of it still works. That's the crazy part. I uninstalled it, reinstalled it, finally got it working, updated my Java. I did all of this in the morning, and then I re-get it on, and then it still don't work. Biotech ETFs, no, I've usually gone a la carte, but there's some good, the biotech ETFs, they do give you a nice, you get a little bit of everything as some of the big dogs, which ends up being very, very good. You say Dow is stable. We have 12 one-hour candles. Is it? It looks stable. I mean, we haven't moved. Like today, as the NASDAQ has gone red and green a couple times. It's even around here, but then they've just been selling off, and then the S&P in the middle. But Dow is just low-key, just straight up comparative to any of the other indexes. So a lot of these value safer names, I guess, depending on how you look at them. They're holding up pretty decent. I don't know if they have an investor day, man. They've announced a lot of stuff in the last couple days. Mm. Three, 6. All right. Might even talk about young Powell. Yeah, Rishi Sunak. I don't know. Do you guys want to see Sunak live? I'm going to go to the back. Maybe. I will attend COP28. Target's kind of tripping out here. And SPY right below VWAP. Roblox acquires speak recognition startup Speechly. Amazon announces new Fire. All right, let me check if Amazon got an event, bro. Where is Amazon announcing all of this? Amazon just announced like 5 different things. Excuse me. Yeah, no, they got earnings. Damn. That's crazy. Chad, Amazon earnings are in a month. So we get the Fed today. We're going to have like 2 weeks, maybe 3 weeks of not, and then we're going to have CPI and everything else to follow up. Yeah, then Amazon earnings. I'm looking for this event, and I'll just see the earnings date, and I see October 26th. I'm like, what the fuck? Yeah, earnings was like last week, it felt like. But realistic, I guess it was like 2 months ago. But yeah. Apple for the long term, it's a little higher priced. I mean, long term, I don't think you'll get mad owning it. But that's it. You're definitely going to need to either average down or it takes over. But, I mean, it's a good name. Maybe even like a SPY. At that point, though, in a weird way, like if you want to buy Apple right now, why not just buy the SPY ETF? I don't know. That's the way I kind of look at it. SPY pays a better dividend than Apple. They're both high. You get all of the exposure still for the most part, but that's it. Baidu, I'm ready to average. I'm just waiting for like action. So that's it. China went from headline to we haven't heard shit from them in 2 weeks, if you think about it. So honestly, it's anything 130, but if it does break the, I think it's like 130 down to 126, that's it. So if it breaks now, we wait, but I'm ready to go on it. I think it's like, yeah, 126, you break 130, you go down there, 126 to 120. But I'm even down for here now, but we need action. China's too quiet, and the currency is unfortunately too weak. Where's JD at? Apple doing okay. Yeah, JD's getting clapped, actually. That could be a good average, too, but... Yeah, JD might be better. I'd average on JD before Baidu. Baidu's the better play, but JD, at least it's not, you know, because if you average on both of them, bad China news, they're both going to lose. At least JD is lower. Boston Scientific has Investor Day. CrowdStrike has Investor Day briefing. XOM has Product Solution Spotlight. Let's go, PX. That's what I'm talking about. Thank you for that update. It was trying, dude, it's crazy. But then the currency, they did say stuff last night, bro. They were saying stuff about the currency, people shorting it. I mean, they said they've been saying a lot, but it hasn't been that like, it's crashing, it's stimulus, cut. And then yesterday, they chose not to do it. One day you'll figure out my name. Okay, I did. I got it. I figured it out. I read it. I didn't know if it was letters, but now that it pixelated. One of my favorite things in the world is reading license plates. I hella be finding license plate words that wasn't even meant to be like. It's pixelated. Yeah, now I get it. Now I get it. I thought I didn't know if it was like, it sounded like you were an EV, like a PXL 8D, you know? I was like, maybe he makes EV vehicles, and that's, SPY is about 7% from all-time highs. Apple is 10%, basically the same. Yeah, so I think I would rather own the SPY than Apple just out of safety, because then if Apple drops more and you own the SPY, you get your SPY exposure, but then you can just go buy Apple too if you want more. But it's roughly the same. So I would just take the SPY. Otherwise, if you buy Apple, be prepared to buy for the, another average down, and that's okay. But that's the best company in the world. So there's not, I mean, you know what I'm saying? Right now we're talking about price, but you could work that in with a long enough time frame. YouTube here for the likes, baby. Oh, good morning. What's up, Charlie? Charlie, what's up? I saw you on the Twitch. I've been looking here and there on the Twitch. I don't know. It gets a little wild there. So I'm staying focused on Powell Day, baby. That's it. I'm gonna be a very agreeable person today. I'm focusing. I got the eye on the ball, baby. Amen. Amen. Support on Square, I mean, wherever that low has been at, but they did a little better than, they forgot. They were doing better than PayPal. They didn't have the death blow, but probably like 33 to 40. It kind of looks like Disney now. GM and Union continue to talk at bargaining table. Wall Street is bracing for Fed's hawkish hold. Crazy. Rishi Sunak. Today's September 20th. I'm looking. I'm trying to see this other thing. Yeah, I'm sorry. Every major bank, Bank of America, Barclays, Citi, Deutsche Bank, Goldman, JP Morgan, Morgan Stanley, Nomura, and Wells Fargo, they have all updated their September meeting calls to pause. All right, we got a little bit. All right, I'm going to go to the back. I kind of want to listen to Rishi Sunak, bro. I know I'm a weirdo. I want to see this.
They would have done, but also could have meant that they had to make costly improvements to their energy efficiency.
There's only audio on the left.
Which could have been upwards of £20,000. Now, that's to give you a sense of the scale. Or you take energy efficiency upgrades.
Okay, I'll be right back. Follow me on Instagram at the Trading Fraternity.
Imposing on people, the average cost of those energy efficiency upgrades is about £8,000. For a quarter of all households, they're well upwards of 10. Right? These are the types of numbers that we're talking about. So, look, I get that lots of people out there are going to be critical of what I'm doing today. They'll have their own views. But as I said earlier, I guess the question for all those people who are criticizing this approach is to ask them to justify to all those families up and down the country why they think it's right, to ask them to find £5,000, £10,000, £15,000, £20,000 at a time when budgets are obviously tight, because we're working on getting inflation down, in pursuit of a goal that we can deliver without doing those things in a measured way, and still at the same time be world-leading with our ambition. That's the question for everyone else. I'm interested in doing the right long-term thing for the country and actually bringing people along with me and minimizing those costs on families. And that's why I think what we're announcing today, it is a break from the past. It is a change. It's a different way to approach these decisions, but I think it's the right thing to do, and I think it will have very broad support in the country.
Referendum?
I think we've had enough referendums, quite frankly. But I think the point about consent is important, and that's motivating me to do what I'm doing today. As I said, we haven't had an honest conversation about these issues in a long time. Right? It's not enough to just announce these targets, because it's a great headline in the short term, but kind of will this thing to happen. That's not right. That's not the type of leadership that I believe in. Right? I'm Prime Minister. I want to be upfront and honest about what we're doing. I believe in net zero. We're going to get to net zero, but we're going to do it in a fair and proportionate way that is mindful of the impact on families. I'm absolutely confident we can do it. We're going to double down in all the areas where we can make a massive difference. We're going to save people money in the process. But throughout, we will do it with people's consent, because that is how we're going to bring them along with us. And if we don't do that, those of us who believe in delivering it will lose people. And that's not right. And that's what I'd say to those people on the extremes of this debate, the people who approach this with an ideological zeal that they will happily pay any price, they'll impose any cost on families in pursuit of it. That's not right. And what you will end up doing is damaging the cause of net zero.
Bro, I like this.
Will be turned off, and I don't want to see that.
I'm actually like, wow, this is the first politician in a while. I've been like, all right. I've got you, bro.
You've talked about phasing out the installation of new gas boilers.
I don't trust it. Yeah, I feel you, but no, this is a
building strategy from 2021.
That's a great. You haven't heard anything out of anybody like this.
So, how is the policy you're announcing today any different from what the government's already committed to?
So, when it comes to heat, there are a range of different things that were being proposed.
Give them another minute.
Of course, look, it's right. We need to decarbonise our heat first and foremost. Right, everyone who believes in net zero has to acknowledge that over time we need to change how we heat our homes. I want to be upfront with everyone about that, because that's what's necessary. I wouldn't be being straight with you if I was on the one hand saying we're going to deliver net zero, but then pretending that we weren't going to have to change how we heat our homes. We do, but we can do it in a much more measured way. Now, there were a range of things that were being proposed. In just a couple of years, some property owners were being forced to massively upgrade the energy efficiency.
He is a billionaire, right?
At an average cost
multi-millionaire,
of about
$100 millionaire.
£8,000. We stopped that from happening. A year after that, we were proposing that those off the gas grid were going to have to make changes to their boilers. And as I said, for many of those people, this was exorbitantly expensive or actually just deeply impractical. We stopped that from happening. And for everybody else, we will have to make the change. Right? 2035 is the right type of time frame, because boilers on average last about 15 years. And if we want to get to 2050 and be net zero compliant, you work backwards. That's about the right time frame. So we shouldn't be doing things before then, but that's a sensible time frame to do it. But
interesting. GM's current offer said to pay $150,000 a year in pay and benefits. They want $300,000. Dude, the strike is even getting weird, bro. Ford was talking shit yesterday. So we'll see if this drags on. But again, they said today or even by Friday, if they don't have anything, then they're gonna walk out on like a couple more facilities. They're all talking shit. Mercedes also, and then meanwhile, Elon Musk is like, "Hey, come join us." Elon just like, ha ha. Elon just in the middle of everything, just making fun of everybody. Okay, he's lost. That was crazy. I don't know. That Sunak thing you guys are bringing up a lot. I don't know what he's done recently, but I have not heard anybody in anything in Europe sound like that ever. So I was like, wow, that's great. There's no Amazon event, bro. They announced new Faro Max Wi-Fi. Yeah, dude. I think he has to be somewhere, but I don't see anything. Usually, I got a calendar that will find everything, but all I see is earnings for him. Maybe there's something else. They may be hidden in another event, if that makes sense, or they're just coming out with 15 press releases. Google, from October 1st, all new and existing customers of Google Cloud Networking Standard Tier are eligible for 200 gigabytes of free internet data transfer every month. I think that was an advertisement, but it came in as news. What we going to do with MPW keeps flushing. We holding it. I mean, for the long term, I'm going to keep holding. I still have those flip shares. Like I said, I'm waiting for rates, and we finally got it. But, last hope is going to be today. We'll wait a little bit. But, I mean, at the end of the day, it has a dividend. If I hold in the long term, that's why I'm kind of cool holding it on the short term. But I just don't like it. But at the same time, I think a lot of things are getting flushed and ran up on a lot of no reason. So I don't want to take that one until I'm ready. But I'm trying to attach it to a bond play. So until I see the bonds move, I mean, I'm looking at them. All the real estate stocks, bonds, they are doing the same thing. And then MPW is getting definitely a little bit extra on the head. But sell out now, though. You've asked me every day. Don't wait for me. If it's worrying you, you can't handle it, get out of it. Again, it's already failed. You'll get, depending on your size, you're going to get your, 5 to 6% back on the dividend. But again, I'm telling you what I think every day. My opinion hasn't changed. You're only going to hear when I sell it. Because like I'm saying, I'm waiting for the bonds to try to mitigate it. But at the same time, if it's getting there, if it's annoying you, just get out. Air quality plays. Wow. No. But what did you have in mind? Walmart. Enphase did rocket today. Again, energy. Just anything energy related. Actually, XLE ended up coming down, but I do think oil might still be up. And then we're right below the level, 44.52. Yeah, oil's actually back to red now. What today would make you sell Bill? Nothing. Again, bro, if I didn't put money into Bill at the beginning of the year, I would have felt like a real schmuck. Again, we used it for the long term as well, too. But just, speaking broadly, Bill is the best thing you could do right now. Hands down. Again, you're getting paid to do nothing. The market is it's an awkward volatility where you're going to get that. But, dude, it's fire. So there's nothing here. The only time I'm going to be cutting Bill is when they cut rates. So that's it. They cut rates, we cut Bill, and call it a day. No, I'm not. I have swing MPW, and that's what people are asking me about. But that's what I'm saying. It's like, I don't plan on selling my MPW long term. So that's why it kind of makes sense why I'm holding that swing a little longer. I had the exit day I got greedy. I had the exit day after dividend. We got like 2 extra cents on the average down, got the divvy. It was up 7%. Didn't sell. So that's it. But I also thought bonds were going to move up instead of down, but that's what we're waiting on. But long term, I'm going to be holding it. The flip shares is what I'm talking about selling. But like I'm saying, I'm not really. It's a annoying bad play, but I'm not really in a rush to force it just because nothing's happened. Again, we haven't heard shit from them. UWMC, I have it in Colt Sister, but I took a tax loss on it last year, and I never was able to buy it back in cheaper than where I sold it. I don't know if it's down there now, but I haven't looked at it since. Yeah, I think I sold out at 480. So yeah, it's still higher. So I'm not going to buy it back. Fuck that. And then I think it's up on Colt Sister. It might be barely. So that one it's been locked away in there. About Vanguard, just check the rate as long as it has the same stable movement, and the rate isn't like too far off from money market funds or Bill. Then yeah, you go anywhere. Again, I'm most banks, dude. Even I think E-Trade offers 4.25 on money market as well, so you don't even have to go to Bill. I think you could just get more out of Bill. But again, there's other places that are just offering, letting it sit. And that's pretty much all you need. American Express 425. Yeah, they're all charged. They're trying to make their 1.2 off of it. But that's why I think you could get a little straight up money market. Even don't forget about the bonds too. You guys could buy the short-term bonds if you really want to. USFTC says they add another senior executive played key role in prime enrollment scheme to case against Amazon. McCarthy, Ukraine will not be a part of any stopgap bill. Buying up my share of the government debt. PayPal, remember, Square got clapped too, so that's part of it. And then I guess maybe we'll give it like 30 minutes. Or should we go? We'll go over Fed stuff like what? At like 10, an hour before? So again, it's starting to cool down a little bit. We're holding, keeping the pin. Had a little run up off the gap. Gave it up, but not too much. NASDAQ barely red. SPY barely green by just under a quarter. Dow just over 0.5%. And the Russell's up. Again, banks, regionals are all doing good too. So we'll get into Fed previews here in like an hour. Jerome. SEC oversight would be limited in government shutdown. Gensler. Oh, no. Oh, hold on. I gotta send the document. Please hold. Yeah, bro. Yeah, so, bro, the issue, yeah. My guy just texted me. He wants me to send him everything. He says everything was paid for, bro. That's crazy. They jacked me yesterday, bro. I got robbed. That's crazy. Ba-da-ba-ba-ba. Sue him? Can I? I don't want to sue him, but like again, I don't. I like my police officers, bro, but that's kind of whack. That's crazy. That's crazy. So hard. I'm sending this to him. All right. Did you get your call? I didn't tell the story. I only told the Twitch yesterday. It was a really funny story. But I guess I'll tell you. I got pulled over yesterday, and I thought like I was speeding or I ran a stop sign or something. I was like, what the fuck? It was right after the gym. And then he was like, you know, I stopped you. I'm like, no. I was like, did I run the stop sign? And he was like, no, your plates are expired. I'm like, I didn't think they were. I had like the dealer like paper plate on there. And then he just like starts to go on and on about this. And I'm like, that's really weird. I was like, I have this all covered. Like it should be there. And then he like goes back for like 15 minutes. I have it recorded too. I was listening to it, bro. It's crazy. And then he just comes back, gives me a ticket. He's like, all right, well, here you go. And like, I didn't have my license on me too. I was coming back from the gym. So he was kind of mad about that. And then he was like, yeah, here's the ticket. I got to give you a ticket for this. And then he was like, I need to take your car. I was like, what do you mean? He was like, I need to take your car. He's like, you can't have, he's like, how do I know you're going to not have this car registered? I was like, are you serious right now? And I was so nice to, dude, I was so nice to him from the get-go. I did everything. I stopped the car. I turned the car off. Keys on the dashboard. All windows rolled down. I'm like, I'm hella respectful to this dude too. And I was like, oh man. Like, I was just like, dude, I was even driving perfect. I didn't even like, I was vibing the F-350 for real. I was chilling, bro. I was chilling. And then he took my car. I tried very, very hard. I was like, this is a joke, right? And then then they took my car. But I told him, and then I waited because I was like, dude, I have my accountant. I was like, please let me get a call on him. I was like, this should have been paid. Like, I've never had this issue in my life. Like, I was like, look at my driving record. I've had one ticket in my life. Like, out of any, I was like, dude, there's no way, like, this is paid for. I was like, what are you saying? And then my accountant even called. So, like, I wouldn't sign the ticket until I got my phone call. That's not obliged, but I told him, I was like, well, let me wait. I'm not doing anything until I hear back. But, and then straight up, I called, my accountant calls. He's like, dude, everything's paid for. He was like, I've paid every single one of these. And he was like, every single thing is paid for. I was like, then I said, can you talk to the police officer? He was like, yeah, I'll talk to him. The police officer talked to him, and then he showed me. He was like, all I see is that plate is expired. In my system, I don't see anything paid. He said, he's like, I can't let this car be on the road. And I was just like, are you kidding? And so he took my car. They took my car. And that's why, but my guy just texted me now. He's like, I have everything. He said, everything is paid for. He said, tell me where the car's at. But he said, this is crazy. So I was right. My accountant is lying. No, he sent me everything. It's all paid for. That's why I'm like, what the fuck? Sue him. I don't want to sue. I mean, it wasted I was an hour late to the stream, but I was like, man, yeah, thank God the government protected me. San Diego, California. Bro, usually there's hella chill with me, bro. I know a bunch of people in the police department. Like, I was nice with the guy, but he was just not, dude, he just was not with it. Do you think you stole the car or something? I don't know. I think what my accountant said is most likely they probably thought like worst case scenario, like there's something sketchy with the car, so they just wanted to not let me go or like take it just in case. But because but at the same time he was like, that shouldn't have happened. Like he was like, you could assume the worst, but that shouldn't have happened. That's a hella scary situation. He searched my car afterwards. He tricked me. I didn't have anything in it, but even then though, he asked, I already moved stuff out of the car, and then he was like, do you have a weapon? I was like, too late to ask me that, sir. But I didn't have anything on me. I told him, I was like, man, go. He's like, I need to check it for weapons before we load it up. I'm like, go ahead, man. Go do whatever you want. I said, don't mess it up. I said, that's it. That's why he did that. He wanted to search your car. I know. That's why I'm like, go ahead, bro. That's it. The car tow truck's here. Fuck you. Could have been a lot worse, but I'm like, man, whatever. I was really nice. I told him thank you. I said I appreciate his service. And then I continued to drop 30 on their head on 2K. Why did he target you? Well, that's it. I had the plate. The plate was a reason. So you know when you buy a new car, there's a dealer plate on it. And like I'm used to, bro, I've driven around for like 6 years on dealer plates. Stop playing with me. So I'm not like, I didn't think that was like, I had the dealer plate on there. And then it says it was expired. And then I guess whatever he saw, I took a picture of everything. I have it all, but that's it. You actually thanked him? I did. I might even have it on camera. I said, I mean, he's doing his job. I'm not going to get mad at him, but like, obviously something was wrong, but if he would have fucked my life up if I tried to fight it at the moment. That's why I was like, go ahead, bro. Just fuck it. This is over. I don't know. I don't want this to escalate. You just want my car? Go ahead. I need to get on stream and play 2K. That's it. So I just figured, I said, worst case scenario, I get my car. I'm fine. Yeah. DMV confirmed. Everything was paid, up to date. I got another text. I said, verify this. Yeah. Not his job, was fishing. Yeah, bro, he came out of I was driving good. That's why I was like, damn. Like, last time I got a ticket, I was like, okay, I was above the speed limit. I feel you. But I was like, damn. Like, he came out of nowhere. You have to pay for the tow? I think I will, probably. But I'll see if I could get them to compensate me for it. But dude, just watch out, bro. Bro, just watch out for the those paper plates though. They'll catch you if they're expired though. It's like they're just a bullshit reason. He just wanted to pull me over, but like low key, it's there. They love making people bow to their powers. That's why it was weird though, because like I kissed this dude's ass and there was no love at all. He knew he had power from the get-go, and I gave it to him, too. I was like, man, you're crazy. Been there, cool, took a L. Yeah. You got robbed. Yeah, well, I'm going to get it back. I don't care. Fuck you. Yeah, you know what I'm saying? They started taking him serious 3 years ago. Yeah, bro, it's crazy. You lose respect when you give it up easy. No, but I mean, I just knew not to fuck. I didn't have my license on me, so like he was gonna fuck me either way. There's no point. I asked a lot of questions. I took 10 minutes to sign the ticket. I had everything recorded. I was like, honestly, like he was kind of chill though. Like it's really, really weird. But at the same time, it's like, no, he gave me a ticket. He like ticketed it and then towed my car. And then now apparently my nothing was expired. I was being very polite, yeah. Why don't you take your license to the gym? It's because I keep it in my car that I normally drive. So I literally, again, I was trying to go. I even left the gym early. I was thinking about the stream, bro. I was like, let's go. Let's get this on here. And then, nah, man. I had nothing on me. Like the guy knew, like I was sweating and all I had was a protein. And like, I looked beat, bro. I looked beat. I wasn't driving a Tesla and self-driving and you had a video and the cop pulled you over for a phone ticket. Damn. You down? No, I didn't even down the protein, bro. I was so mad. And then I got home and I was like, dude, I left the protein in my car. It's like, fuck. You lose gains, I know. It's gonna reek when you get back. Nah, it's like closed. It'll be chill. I hope so. Makes all things work together. Bro, I mean, dude, Sadly, the highlight is what we did after, bro. And the Chad made my day. We had such a good squad run yesterday. You have no idea. It was beautiful. The impound was required. I did. I had to unleash it all. It was great though. That was beautiful. You usually get out of your car. Oh my God, don't listen to this guy. Right when the cop comes up to my door, it's usually I was thinking about running. I'm not going to lie to you. I was sitting there for like 15 minutes and I had to record. I was like, what would happen if I turned this car on, put it in the drive and just dipped? I had the thought. I'm not going to lie to you. It was a very intrusive thought. I felt so guilty for even thinking it. I did. I was like, man, I'm just going to dip. Like, that's it. I was just sitting there for so long and I'm like, come on, dude, that was before he even told me he was going to tow it too. That's why I was like, man, I was like, I don't know, bro. He's just, I see how it happens. You know what I'm saying? I see how I feel like people who get into police chases, I swear they're just like, they be getting bored. Because I was I wanted to stream. I was like, this is bullshit. I'm done with my gym. Like, this is not supposed to be here right now. You know what I'm saying? Like, and I was just like, man, what if I just zoom, zoom, zoom? And then I think that's what happens, bro. I think that's what happens. The gas tank was still on empty, but I'm gonna keep driving it all week, bro. You know what I'm saying? We're turning in here live. We're watching the F-350 running away from the police on the 101 right now. So we're going to see what happens here. It's looking pretty crazy. Dude's crazy. I should have gone on Instagram Live. I even asked him if I could play him F-350 because I was like, listen, you're towing my car. I was like, can I film you your song, your reaction to my song? And then he was like, yeah, Mark is a cop. I forgot. Mark's like, do we need I'm sorry. I just admitted I almost ran from the cops. It wasn't almost, but I had the thought, bro. I had to be honest. I've never had that thought in my life. I don't know what it was. Maybe it's the water or something, bro. But I was just like, I don't know how. I felt bad. I didn't run. Again, he took my car. And look at Mark. Some of the Chads are confused at me right now. They're like, this guy told your shit and you told him thank you? I said, of course I did. Like, honestly, like, you know, it's not illegal to think of escape. That's what I'm talking about, baby. It was a very intrusive thought, bro. It was a very intrusive thought. But, yeah. But, no, I was going to play him F-350, but then... And then my accountant called, and then like I didn't have the vibe that he would like the song, and I was like, you know what? I feel like I could have played him that song, and then he would have arrested me for some reason. I didn't want to play. You know what I'm saying? I got over the TikTok phase, and I was like, I'm gonna just take my shit, bro. Just let's get this over with. You couldn't run when he had your license. Yeah, man. But I don't know. I was just sitting there for too long, bro. I wanted to play 2K. Did you Uber home? Nah. I had to call my girlfriend and she just laughing at me. She thought I was joking. That's honestly, bro. That's why, like, you know how much I troll my girlfriend? It backfired yesterday. Because, like, I'm straight up trying to be serious to her. And I'm like, the cops just took my car. My car is on a tow truck right now. She's like, ha, 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 ha. Yeah, okay. Hangs up on me. And then I call her. Then I'm like, dude, no, that's not. I'm like, seriously. She's like, and then, dude, it takes me like 5 minutes to, like, I'm like, no, for real, bro. It's like, it's this. I need you to come get me. Like, it's down the street, but, like come get my ass. Like, no. Oh, man. Yeah, boy who cries wolf for sure, bro. Because she thought, she was like, you idiot. She was like, what are you saying? She loved it, bro. She loved it. And she's like, you're not going anywhere now. She's like, I got to drive you. That's it. Nope, I don't want to until you get that. No, I was like, what do you mean? I was like, I have another car. She said, nope, sorry. I was like, I failed my license. She said, nope, She's like, who gets their car towed by the cops? It's like, word. Fair enough. Yeah, bro, it was funny. Oh, you guys just missed the whole story. I just had a nice story about what happened. But if you're tuning in late, 30 minutes, all you're gonna get from me is Powell in 30 minutes. Hold on. Josh, you were close to being shot. That's not cool. I don't think I was. To be honest with you, was the guy a little bit of a dick? Yeah. But I mean, again, I don't think that was the case. I just think he wanted to hit quota. That's, I think, and I was the perfect victim. Again, the reason why he pulled me over, can I speculate on that? Of course I can. But at the end of the day, I mean, I did feel safe, and I also 100% guarantee he felt safe too, because I'm a puppy, bro. I was like straight up. It was just that wasn't it, man. We should talk about this. The end of well, let's see. Let me get my car back, bro. I'm telling you, I got all the updates. They said I did nothing. Nothing happened, bro. If you had your license, might have got away. I think so too, honestly. Or if I didn't even have any photo identification on me. And I was like, look at my YouTube. Oh, never mind. It wouldn't even work that way. So I was like, fuck. They owe you? I hope so. All right. Okay, I'm gonna go to the bathroom. Follow me on Instagram at the Trading Fraternity. Saying the dollar's dropping. I love you. Good morning. And that's why today you get F350 now.
Angel on the track.
Yeah. Loading on my F350. I don't drive a fucking EV. Gas tank still on empty, but I'm gonna keep on driving all week. Think I just missed my exit. A Prius wouldn't let me merge. My driving got my girlfriend stressing, screaming in my ear like a bird. Told her, while they driving in the slow lane, if they ain't going slow, man. I used to say the same thing when they was slow up in the fast lane. Now with Kia tryna pass me, thinking Nissan almost crashed me. I'm just tryna make a lane change. Now I'm late and I got road rage. Loading on my F350. I don't drive a fucking EV. Gas tank still on empty, but I'm gonna keep on driving all week. I think I just missed my exit. A Prius when they let me merge. My driving got my girlfriend stressing, screaming in my ear like a bird. Wherever said carpool is faster, hasn't seen the 405. It took me 30 minutes just to go a mile.
Yes, that's all you get. Okay, so hopefully it comes out, I think, September 28th. If we're lucky, you'll get it right at the end of the month. Yes, Josh Ants. This is my song. Again, my uncle raps. I guess I inherited the countryside, so it's cool. Everything. I got album covers and everything. It's on the way, bro. It's on the way. So just be a little patient. You'll get it. You'll get it. You'll get it, bro. You'll get it. This one is me. Yeah, actually. That was actually me. I know. There's like filters on it. Like, I don't, it's like you ever see a girl and then you see her in real life and it's a lot different. It's kind of like that. Like, this is like me, my real life voice that you get now. Like, I don't have any like real filter on the mic right now, but you put me on Twitch, oh my gosh, it's crazy. But that's it. Yeah. I sound like uncle. I do. I mean, I think genetics, you know, that'll probably be the only explanation I have. So you're fighting the ticket in court? I'm just trying to get my car back first. First and foremost, bro. Okay. You know, I have a very expensive car missing from my garage right now. It's just not. I honestly, I didn't even remember until somebody said it in the morning because I kind of forgot. But it's fucked. So we'll see. But now we have to talk about Powell. That's it. You got music. You got stories. We've already talked about, if you don't know the biggest data of the day, why we're going up, why everything's happening. One, we are waiting for Powell. Two, UK data in the morning was very low. They surprised on CPI, and their rate hike odds just instantly dropped. And that's where we're at right now, bro. That's where we're at right now. So there's a couple of previews. I don't know. I want to talk about it now, but I don't want to do it too early. Because, again, we still have to wait about an hour and a half. What's the difference between an F-150 and 350? I don't know. I try to explain this to somebody. YouTube cut me off for Powell. Sorry. Okay, I'm back, YouTube. I'm back. Oh, don't worry. Go to Twitch if it failed. Oh, no. Hatag. Yeah, I forgot. A big Powell day. So, yeah, make sure you guys follow the Twitch. Okay? That's all I'm telling y'all. Follow the Twitch just in case if the stream goes out, especially during Powell. Because, again, the Twitch is literally zero downtime. Mini clap, yes. Number Thug says, yeah, the rapper. We haven't raided in like a year, bro. That's it. We got to get the raids on. Always on, pal. No, it's going to get crazy, man. Very wild day. Everybody's waiting for it again. Hawkish pause is expected. So that's the name. Last time was a hawkish rate hike, right? They called it the hawkish raise. Today is the hawkish pause, meaning a pause should naturally be bullish. However, Jerome Powell is expected through the statement and the press conference to convey hawkishness, although they are stopping rates again. You know, and this will be the second time we paused. Remember, it was like May coming into June, we paused, and then we raised last meeting, June coming into July, and then we said that we were going to signal a pause. So now today will be our second pause of this cycle, and then if it is the final pause, then there you go. So we will see. Josh, I'm formally challenging you to 1v1 on Guardian and Halo 3. I'm formally rejecting your challenge because you failed to email me an email for a job. So what would a challenge to Halo change about anything? Yeah, because I can't even bet money with you and trust you. So unfortunately, I formally decline. But I will formally invite you to join NBA 2K24 Colt Olympic team. Can I get that email? I'll send the challenge on the email. Sir, you've known me for over 3 years in your life. If you do not know my email at this point, this is another reason for the rejection. Again, I love you, and I formally invite you to play 2K with us and join Colt International Olympic 2K team. Thank you. Thank you. No Pokemon battles, no. I formally accept. Really? I love it. Oh, I can't wait. That was fun, though, dude. It was a lot of fun. It sucks, though. The only problem with this now is we finally got a squad of 5, and now I think we have more than 5 players. So we're going to have to do some rotations in there. But we killed it yesterday. We did very, very good. That was crazy, man. Colt has a future. Colt has a future in 2K. I'm very, very, very proud. Very, very proud. D-Talk pop in. I think we saw that earlier. I'm making another move, though. Whoa, that's a 1 minute? So someone called, this thing's moving like crazy. It's up 120%. DTOC. Let's see. Digital Transformation Opportunity Corp. Resume trading. Shareholders approve pending business combination with American Oncology. Oh, that makes sense. Has Validity elected to redeem their Delatalk Class A options for a full proratia of the trust account and the proceeds from DTOC's offering of approximately $10.50 a share and $17.9 million in the aggregate. So somebody just exercised their whole entire IPO position to buy it at the price, but this thing looks crazy. I'm sorry. All right. So, Chad, if you lagged out in the last 5 minutes, just tell me what happened in the chat. I saw yours, Battleborn. You were saying that you can't get in and out. If that happened to you 5 minutes ago, just say I in the chat. That's all we need to see, please. I. So all of these are people here cut off. Okay. Does anybody still have it saying offline? Wow. Very creative. Of you. Okay, you good now? No. In and out? No. Okay, so temporary. No offline. No. All right. But not cut off. I got both on. Good. Just refresh, came back 50 seconds later. Okay, thank you. Clavio, dude, I hate them. Bro, I put in a fat offer and then they priced me out by $1. Nutty. Clavio. Delatalk. I'm calling it Delatalk, bro. I don't know what else to call it, but it's going to be called Delatalk. It feels like you're expecting a YouTube clap. No, you guys came through. Like I told you, send me this information if you have it. And people did. And I've sent them hundreds of them now. That's why I'm like, so now I've learned how to document it all. So I'm documenting every single piece of it. That's all, just because it's legitimately, it's unique. That's just when it's all said and done. They all say it shouldn't be happening. They give me a lot of reasons. Some people have helped me out with it at Google, but it's definitely, yeah, it's something up with it. But now I have it recorded. I have the chat recorded. I have all of the metrics recorded, as well as the stream, the link. They want you to document it like a damn lawyer. Clavio opens up. Damn, I already dropped. KYVO or KVYO is a 19 million share offering. Again, software company. Does the 15-minute interval after the statement still work? Yes, but it's not. It's harder to hit in the sense that just watch for fluctuations, but it's not going to tell you which way it's going to go. But pretty much every 15 minutes, though, does hold, it holds some weight. So just keep that in mind. Then, where's MGM? Snap is still up. Let's go over Pinterest. Cody's still holding. That was the other one, Pins. That's all. It's all chilling. Everything's calming down. Even now, Dominion, they're on the high right now. See if any energy goes up. And then Clavio, I don't know the volume on it. It's been 5 minutes. 5 minutes, 3 million? Ugh. Why does that seem deathly? So they got to do 8 million, I guess, or 9 million and 6 more million in the next 5 minutes. Yeah, they are now trading. FedEx will be on their own or get Tango. It'll be on its own, but it also just depends on everything else with how it depends on the weight that Powell brings, But for the most part, if it's a major beat or a major miss, it's probably going to, I think FedEx will do its own thing. Otherwise, if it's borderline in line, people will take info from it, but it probably will just move in line with the market. Welcome, Cambodia. My man. Cambodia. I want to go to Cambodia. I've had friends who went and they love it. Pin joining the Twitch. The Twitch says, come to Twitch, join the dark side. I mean, the link is pinned on the YouTube, but if you really do have connection issues, though, and it's common for you, the Twitch is very stable. So if that does bother you, I mean, you do have an alternative. Your wedding in Bali? Oof. I want to say maybe, but I even told last wedding offer, I said, listen, it got to be close. So if you get married in SoCal, that's more it's still low odds, but more likely. But I don't know if I could do Bali, bro. But that sounds like a blast. Do you need an account to stream? No, I think you could just listen in. I'm still long on MPW, yes. I'm going to be holding it for the long term again. I think get out of it, though. If you're really long term, that's a different story. But with the trades, for real, MPW, we've been saying it since they cut the dividend. Now, again, I've been waiting for an optimal exit, and all it has done is die. But, at one point, you're either going to have to cut losses, capitulate, or really convert to bag holder or figure out what you want to do with it. But if it is getting in your way, I get out. If it's long term though, and you added that to your balance of the long term, I wouldn't trip about it. We're going to work our way in and out of that in the sense that you could buy other things, you still get a dividend. That one we have enough time in the long term, but short term is a little different. But like I'm saying, you got to that's it. You get clapped. Vata Chadism. Amen. CCI. There's a lot of REITs that have extreme value right now, but the question is, I think it's a good play. I think deep value on REITs is awesome, but you're fighting the tide of a lot of people just, if there's more panic, they get worried. I mean, that it's real estate is going to be a victim in terms of commercial, especially if it has not been able to pick up by now. Open O hits 7. That would be crazy. Is that even possible? What would have to be? O at 7? I feel like that's a no-brainer. But even then, O's kind of bouncing. Still very low price for O, man. This last, I guess all year since February, SVB, but really even from August, bro, the REITs have been murdered. Murdered and demoralized. Yeah, Klaviyo open. I have the volume up. It needs to do 9 million by the first 10 minutes. Not there. So, honestly, though, if this could easily go red, which is great, because then we could still monitor the criteria. But you're 10 minutes in, and you have half of half. 25% of the offering sold right now. Maybe after Powell, it'll pick up, but so far it's not there. And I was saying it earlier. I didn't get to, I don't know if we explained it, but in general, I've been bringing this up over the last couple days, but speaking of IPOs, if somebody was asking about adding them to the long term, and we said all of these are very expensive. So I don't know if you are aware of this, but IPOs are a bullish sign. When you look at the stock market right now and you see companies IPOing, especially like Instacart and ARM and all of this, again, even this Klaviyo, this is, they're raising a shit ton of money. That is a bullish activity. You know what I'm saying? You don't, when things are depressing, you don't IPO, right? When people are worried, you don't IPO. When money is dry, you don't IPO. If people aren't optimistic, they don't IPO. If there's no money, no IPO. But it's the fact that we have witnessed, again, I read it on one of the bullish talking points this morning, the fact that we are seeing IPOs, that speaks to the bull side of this year. Where it's okay, are we going to really go up or down? But it's just base level IPOs are bullish. It's showing you market sentiment and how people feel. But also in that same respect, that's why I'm saying they're all companies with high future valuations that people want to pay for today. And that's what I'm saying. It's just I don't know if I would add those to the long term unless you really like some of them. But it's showing you that there's still some positive sentiment when it's all said and done. And then healthcare stocks are moving up again. Could that be bearish because they are out of money and need to raise? No, because they would raise money elsewhere. You could do it in other ways, but it's not like they're raising money because they need it. They're raising money at a overly inflated price. So if you could sell something for more than what it's really worth, that's how you know there's positive sentiment. right? So it's like, yeah, if they needed $1 million, they could find them. They could sell private shares. They needed millions. They could do other things, but to spend money to go public, spend on the fees, and then, be operating at a 10, 20, 30, 40, 50 times multiple, like it's not really a sign of they need money, but it is a source of fundraising. Isn't it a lagging bullish sign? I feel like it's a response to AI pump in early summer. Maybe not, though. I think you're in the right direction, and I guess the answer is we never know. But it's just like, essentially, it's a bullish activity. It says bullish sentiment, but who is to say that this will be the last one? You know what I'm saying? This could be the last IPO, and then all of it crumbles, right? So it just, in a weird way, it doesn't tell you about the future. I think that's the best way to look at it, in the sense that it's showing you how people feel either from the past, recently, or right now, but it doesn't necessarily guarantee that the flow of money will keep coming. But it is a good sign, and people do get hyped when they see it, and that's why one IPO goes, the next 5 follow after, because everyone's like, oh, the money's there, let's do it. Take 50. Crowdfunding. It's cool. I mean, if you have a cool company, you make a cool product, it hits. I mean, I don't know. Do you guys remember when, what was it called? Kickstarter? You guys remember Kickstarter when that first came out? That was when you first started watching Shark Tank. You were watching Shark Tank, and then Kickstarter became a thing, and then people would go on Kickstarter with ideas, movies, and companies, watches, phones, wallets. You know what I'm saying? And it was a very big thing. So it was a lot bigger a while ago, but I still think it's a viable way to raise funds if you want. If you have a cool company and it's really for your customers, crowdfunding could be a very good way. I don't know if it has the same popularity as it used to, but it's definitely it's a viable option, especially if you got something cool. I think GoFund. I think it's all the same. I don't know if GoFundMe. I was under the impression Kickstarter's for businesses, and then GoFundMe is for charity. No, I don't know. I'm not too familiar. Like I said, there was a wave, bro. There was a bubble at one point where crowdfunding was for for startups and stuff. It was big. It was a really, really big thing. Kickstarter ripe for scamming. I don't know if you want me to break the news to you, but then again, I'm not. The moment it turns to an argument, you win. Okay. I hate to break this to some of y'all, but do you know all investing is ripe for scamming? That's why Kickstarter is ripe for scamming. All investments are. Oh no, every investment. That's why when they're on the stock market, they should be different. There should be a different quality. But your friend, the startup who says, "Give me $50,000, give me it's the same thing, because all investments, the responsibility is borne on the investor, assuming everything is disclosed and it's not fraudulent. You know what I'm saying? But take a page out of Nikolai Handbook and all the other people you've seen on CNBC, True Crime or whatever. You know what I'm saying? It's all investments are ripe for that. Even on the stock market, all it takes is if someone really wants to lie and do a couple things, they're making hundreds of millions. And then guess what? Or again, Elizabeth, what's her name? The Theranos girl, Elizabeth Holmes, it's the same thing. You get people, all of it's ripe for investing, because when it's all said and done, especially if it's not a public investment, the responsibility is on the investor. That is why they have accredited investors, and that's why they put in stupid PDTs and stuff. Or you think it's stupid but it's all part of this, because it's all ripe for scamming. That's why 3 to 7 and understanding 3 to 7% return will change your life. You know what I'm saying? But it's investments a lot of them are designed to rip people off, where it's again, they're just saying, I'm going to build a cancer cure, a desalinization plant. This is what penny stocks do a lot. It's you can raise money, but it's if the person's oh, I failed. Sorry, I'm bankrupt. then that's it. And then they did their thing. I've raised millions of dollars for clients on Kickstarter, GoFundMe, pretty legit companies with products and ideas. 100%. I'm adding what I just said as the other thing, but definitely, that's what I was saying earlier. Like, there was a wave, bro, where like people were getting big money fund, like good startups would hit Kickstarter. They'd raise a couple 100,000 or a couple million, either have a prototype or get it moving, and then boom, they're already on their next seed of funding, and then it just goes from there. So it's like, it's legit, but I don't know if it's as active as it was. Maybe you can answer to that. Nothing about F-350. I think it's died out from all the scams, but then I wouldn't discourage it though. You know what I'm saying? Like, don't ever sleep on it though. Like, let's say, sometimes like if you come up with a good idea, get it protected. But like sometimes if you need the money and you're like, hey, I don't know investors, you know what I'm saying? Like, I don't know, like, dude, go on Kickstarter. Again, I've seen shit happen. That's all. Like, what I could say is like, through my investing career, even with like private equity, not public equity, I've seen some wild shit off of Kickstarter. Like, it's a good platform. It's a good platform if you have a great idea. It will really act as a launch pad with the right idea. But other than that, it's not, I don't know if it is what it used to be. You made a haircut appointment in 30 minutes, so you're going to miss FOMC? 10:30. No, you might make it right back, right at the right time. You're right, shit happens. No, it's like, I believe in it. Like, you know what I'm saying? I don't even think you got to get lucky. I just think the right product. Just don't forget, like, the thing about Kickstarter is that it's to community, it's to people. So like, if you could get like something that just like is really for people and it is a good idea, it will blow up on Kickstarter. It will. But it just doesn't, you haven't seen them happen lately because it's just not. And nowadays too, you get a good idea, why take it to Kickstarter? You might be able to raise money a lot easier, as weird as it sounds, but I wouldn't ever put the idea past you. PayPal is now available on Venmo to select users and will be rolling out and fully in the coming weeks. I think they want daily active users up. Tesla. Candles. Green candles on Tesla. What do we got here? Yeah, Ford, something. It could be with the automakers. I see something on Russian Lavrov. Hold on. Tesla's popping and automakers are moving right now. No news. I'm checking. We're going through the wire. I'm going to double check individual tickers now, but I would keep watch on that. Yeah, Tesla, that's waking up. But then I think Ford and a couple automakers moved too. Ford is getting volume. Yeah, GM was collapsed. Stellantis, no, not as much. Honestly, the Ford, Stellantis ones, they're moving off the bottom, but it's not. Tesla's the one leading. Something's going up there. Again, it's either going to be a random headline. It could be random just movement, but that's a pretty decent move. And then again, it is Tesla, though. But it seems like there's a slight trend with the automakers. Trying to raise $1.5 million for a business, but struggling to find pre-seed. It's for growing weed in the UK. It's a hard business, dude. Honestly, I would send it over. You could send it over to me. I'll take a look at it. And if I like it, I'm down, or I could let you know. But that's a hard one, dude. I'm telling you. If this was 2014, you would have had my money. 2016, maybe you would have had my money and a lot of other people. But right now, it's hard. I don't know the market in the UK. That's why I'm willing to take a look. But is it Kickstart? You think you could get away with it kickstarting? And then if you already have a pre-seed is hard, but I mean, if you got any revenues, you could do a lot with it. If you have revenues, that'll combat it. But you gotta, if you could address the right challenges, I think you could convince the right person. But it is difficult. But I'm open to take a look. Would love to see it. And then have you ever used the Angel List? There's other websites too. If you're trying to get capital, again, it helps by having a door. If you have someone who could get you in, like, again, I don't know, maybe if I'm down, I could give you a small investment and that could open up the door for other investors. But it's like, I have to really believe in it. But that's where like Angel List and a couple of other places, like, I mean, if you're really serious, like I'm saying, like just with Kickstarter, you have ideas, you got a company, you're trying to raise money. I mean, try it, put it up there and see what happens. Medical weed is legal. 1.5 gives you $350K per year. That's 20%. But again, address the thing. Send me an email. I'll take a look at anything. But like I'm saying, Angel List too. If you've never heard of Angel List, it's a website with angel investors, accredited investors, as well as places where you could post your companies. If you're trying to, there's 5 other sites like that too. Oh, UNH pop all day. It was going up, dude. So maybe we're just getting CVS on the low. Yo, something related to health insurance, bro. Nah, check. Yo, something related to health insurance. I guarantee it. CVS down, UNH up. Bullshit. Again, Walgreens isn't even moving as much, but check Cigna. Cigna not popping. That's crazy. Bro, CVS straight down and then UNH straight up. UNH and meme mode mentioned twice. Yeah, but this was the candle. That was the one I wanted there. But wait a minute. Is that my... Oh my gosh, it could be my E-Trade tweaking out. No, that last two. Remember, all day we called it out from the morning, but now with CVS going straight down, hopefully you guys can learn from this. This is that's a relationship. You know what I'm saying? United Health, eShares Health rise after disclosure of chair. I don't think it's something related. It's something related to health insurance or pharmacy. Again, UNH up, CVS straight down. That's what makes it kind of like, okay, you might have something right now. Yeah, they own Aetna. I'm not seeing anything on CVS coming out. Again, you also have Tesla still moving. Yeah, I looked at Tesla, there was nothing. And then that UNH stuff started hitting. Six Healthcare. There's a Barron article on UNH in the morning. CVS study shows continuing suicide crisis. No, nothing. I think it is Medicare stuff. 100%. CVS down, them shooting up. They've been getting a bid all day. It would be nice to know, though. But there's definitely something. It's kind of like when we had those events going on, but I'm just connecting the dots between the industries. Walgreens study of non-infused bio. Is this it? No. That's why I was hoping Walgreens would be if that was the case, but they're not. But they did drop a little bit. So it could be something more specific. And it's not as if, like, even Cigna, they had a pop, but they didn't go up. What's the other one? UNH, Cigna. There's one more I'm missing. Aetna. I think CVS did buy Aetna. So UNH still kind of holding. Humana. There it is. Thank you. That's the one. Yeah, Humana is even up too. So that's it too. These are not small moves either. I'm going to go out of the limb. Say it's Medicare insurance related, but we'll see. Now pop. It could. Is your E-Trade tripping out? It's from the bottom there a little bit. $1. Tesla because of the tweet about Neuralink. Maybe, but like watch the automaker. They got a little bit of lift too, but not as much. It's clearly Tesla. And then CVS is bouncing. Humana's on the high now. UNH. Yeah, when you get that Bloomberg headline, that means something's going on, but they just don't have it. Nobody knows. Something's happening, though. Stocks don't move like that without the headline, usually, unlike UNH. So we're going to have to find out. Elon's tweet of I didn't read his tweet, but I'm still like, I'm just not a fan of anybody putting anything in my body. Like even Elon. I like Elon, kind of, but he's funny. But no, I'm not fucking. You guys could test it out you could put Chat GPT 8 brain in your head. That's all you, bro. That's all you. I'll go find it though. Things gonna get crazy when the blind can see and the paralyzed can walk. I feel, man, that if that's what that technology can do, awesome, man. You know what I'm saying? Yeah, if it's consensual, do what you want. I feel you. Like if that with brain stuff, AI, hell yeah, bro. It will be cool. We don't know yet. We do not know. Again, I gave you the knowing what's happening. This is as far as we're getting. We caught it in the first 10 seconds. Again, he called out UNH. Troy got UNH on the high, a couple of chats too. We got CVS dropping immediately. We have an assumption. We try to connect the dots, but there is no headline coming out. If anything, watch the wire in front of you on the screen and you may get something. There's Transportation Secretary calls low air traffic controller staffing unacceptable. House hearing. Biden reiterated concern about fundamental changes to Israel. Biden tells Netanyahu. Biden invited Israel Netanyahu to visit. Nope, nothing related to healthcare. Dominion's still going up. Well, my biggest thing, the only thing I'm worried about with the Neuralink stuff is that some of you are going to get it, right? And then just you remember the first iPod? Yeah, exactly. Fuck out of here. That's all you guys. So maybe I'll get the 18th generation. Maybe we'll see what happens. But fuck that. Y'all can do trials all day. I'm not going to install no hardware in my head that's based on technology. Yeah, it's chill until 10 years later, bro. You're like, oh, sorry, I get these weird headaches. I can only search so much because I'm on the first edition. That's it. Now you got to upgrade your brain, bro. Are you kidding me? The new iPod comes out. You're going to be like, yeah, I get to update my skull. The fuck? So that's my only issue. That's my only issue with it. That's the only thing I'm like, yeah, I can't. I'm not going to be in the first batch. I'm good, man. Honestly, I don't trust technology. Technology literally got my car towed yesterday. And humans plus technology failures, not a good mix. That's word to Nassim Taleb. But yeah, so here's what Elon tweeted. The first human patient will soon receive a Neuralink device. This has the potential to restore full body movement in the long term. Neuralink hopes to play a role in AI risk, civilizational risk. What the reduction by improving human to AI and human to human bandwidth by several orders of magnitude. Imagine if Stephen Hawking had this. Okay. That's Elon. This is Elon's tweet. Elon just tweeted this out about 10 minutes ago. So that's why some people are saying Tesla's going up. Definitive positive for injured. I could get behind that a little bit. That's what I'm saying. I think as a medical device, I think it's awesome. You know what I'm saying? Where it's if you are struggling already and you have an issue and it's you know what I'm saying? Where it's this would actually have way more beneficial stuff than potential harm. PDUFA's, FDA, that makes sense. I definitely could get behind that, but I'm not going to install one if I don't need it. That's kind of where I'm at this moment. Clavio, 8 million, bro. Yeah, so it hasn't even turned half, dude. Yikes. So we're at what, 30 minutes in. You haven't even traded 50% of the float. The news on Tesla, we don't know, but there was 10 minutes ago a tweet. Again, it does kind of correlate here. I mean, you're at 10:15, 10:17. So yeah, like right around here. It was already moving up, but it got crazy around the Neuralink tweet. But then that tweet was 24 hours ago. Elon just made a tweet about it 10 minutes ago. Clavio. Yeah, CVS is coming. No update on that UNH thing, man. Crazy. They were talking about that 5 a.m. That can't be it. Like I'm saying, yeah, the tweet was 24 hours old. Elon just quoted the tweet and said something about it today. But otherwise, there was a slight relationship between automakers and Tesla on that little pop. But we don't know. Again, right now we've had two big poppers and droppers without any news associated with it that we could verify. $4.9 UNH calming down. CVS had a little bounce, $1, but still $1 off where it started. The tweet was Elon quoting a tweet from Neuralink about the first human trial of Neuralink. Again, I didn't look it up till the chat told me to, so I went and saw it. What's up, man? Thanks for doing what you do. God bless you, Mr. Premium. What I'm talking about. And let's talk Fed. Honestly, I'm trying to burn time because I don't want to give you all this info and then we sit around for like another hour and a half. You know what I'm saying? Honestly, let's kill another 12 minutes and like 10:30 we'll go over the preview. It's super simple. There's honestly not much today. Again, I'm going to recap the watch list for you since you're a lazy piece of shit. I'm just kidding, man. It's okay. Relax. Don't take that too personally. But honestly, I want you to have the full context. We're going to go over everything. I'm going to talk about what we talked about already. Some of it will be old. Some of it will be new. I'm going to share with you the new developments coming into the morning. I already dropped a couple on you, so you should be up to speed. And then, we got to... we got to get in the game, baby. We got to get in the game. And then, boom, 30 minutes statement. Then another 30 minutes later is Powell. And honestly, I mean, looking into what we expect from the press conference, it will be interesting. But I'm fading Powell. I don't think he's going to say anything new. But if the dot plot changes, then let me start with this. Before I kill another 12 minutes, let me start with this. If that dot plot does change meaningfully, then Powell's speech will be meaningfully different, more likely, or somebody is going to have to, somebody is going to have to grill him on it. Okay? No meaningful change in press conference. If there is anything subtly that we get, then we're going to have a problem. You think Powell could interfere with Tesla momentum? Definitely. It's just Powell. But here's the thing. If Powell don't do nothing, it doesn't, Tesla will do whatever. If Powell says the same script, again, no meaningful change, we don't have, I would go back to just focusing on what you were. You know what I'm saying? But otherwise, if Powell, this type of event, it has the ability to take control of the whole entire market, especially because we will be getting a SCP. But keep note of what, oh my gosh, again on Tesla, or is that just my chart? But just keep note of what Tesla is doing. So what I'll tell you is before the event, Tesla is clearly an outperformer. So if Tesla is remaining, it could still go down, but it still might outperform after Tesla. or after Powell, if that makes any sense. Yeah, bro, I don't know if it's Neuralink or not. Now it's just going too crazy. Again, can't even confirm it. Just went nuts. Humble business. That's what I'm talking about. Order. God bless the Chad. God bless the business. My man, the myth, the legend. They don't know. We have many man, myth, legends, but that's humble. That's humble business. You got Bradley Frizzle and the Peach. You got humble business. You got Father Edgar. You know what I'm saying? You got a couple of others there. Don't ever forget, man. You don't ever forget. Everybody got their own. Tesla Benzinga. I could still get it if it hits, but I don't see it yet. Like I'm saying, I think most people are just saying Tesla's going up. I see 927 Tesla sedan drag race to $4 million Bugatti. The results were surprisingly close. That's it. They gap filled Cybers on the high. And then SPY is just hugging the level, man, for the last couple hours. Short Tesla, nah. I'm waiting. Wait till the data. Dude, we got a big day today. Again, potentially. So we'll find out. But even then, like I said, worst case, bro, I think I'm going to flip the bonds today. I kind of just say, let's see the reading, see the bond market reaction, just down and go back and forth on a couple of bond flips. But other than that, I don't think it's going to be, I don't really have any pre-Powell intention, if that makes sense. All right, I need to go to the bathroom. So please hold. In the meantime, I'm going to give you Uncle. And that you had some news, then you had the other one, now you get Uncle. And honestly, you guys don't know, bro. You don't know. They didn't even know this stuff was out. They didn't even know this stuff was out, bro. Okay, you get no bonds. I'm going to leave you. Oh, you can't see anything? Well, there you go. You get your over office freestyle. There you go, just a little bit. Why isn't it playing? Why can't I hear anything? What the fuck? Why can't I play on Spotify? Just want to go pee, bro.
Shout out to Percy, that's me. You could just call me JP. I do not answer no questions. You could leave.
That terrified me. Dude, that was like a Joe Biden fucking jump scare, dude. AVXL popping.
Hey. First 4 p.m. I have 4 p.m. so I wake up.
Yo, AVXL, 3% pop.
Shout out to Percy, that's me. You could just call me JP. I do not answer no questions.
Right back.
You could leave that to Shaki. Kamala riding with me. She'll lock you up for some weed. Say bad things about the vaccine. I'ma make sure you don't speak. Got a laptop you won't see. Hunter, I love her, but that shit was weird with his feet. I love my Congressman Trey. Shout out to Nancy, she paid. Double your gas in a day. Them will say Putin's to blame. Real politics in your face. 500 bill on the way. 500 mil to Ukraine every day. Javelins keeping them safe. Fuck it, just send them some planes. Tell them keep growing them grains. All of my bros in 8-0. None of their borders is closed. All of us got climate goals. All of us straight together, strategically releasing the ore. They said that Putin won't fold. They ain't my cabinet no more. Fuck the squad, fuck the foe. Had it 9, fuck a roll. Now we going practical. Hunter, my dog, that's for sure. We ain't gon' fall about shit, especially not 10%. We ain't gon' fall about hoes. Me and Nance get the votes. Lobby that shit on the low. I got Congress in control. I got your student loan froze. I got your mortgages froze. I got Keystone on froze. But mention and cinema froze. I'm getting faded. I'm eating this ice cream. I don't like voters who whitey. Questions from press that's unlikely. Bring up Trump if they don't like me. They give me the Eddie, I wake up. Passion bills, that's a layup. I'm the big man, I got say so. They lock you down if I say so. Booster on booster on booster. Mandate on mandate on mandate. I just get EV a test spray. Fuck you, Elon, I won't even say your name. Came in the office already ballin'. Silent just ain't change my name to Stalin. Right off the screen and I'm gone with the wind. Do nothing about something till they pass a bill. Pull up in a brand new Benz truck. How about fresher than a bread truck? How I got it, how to chefs, yeah. How I gotta make it one car. Station on your block, took off. Mixing up my words, I'm live. So I think they mad, my fault. Talking about inflation, I caused. Dumping our oil turned me to a savage. $1 saved on a gallon. Fuck OPEC and King Salmon. And fresh, I'm tired.
Oh, yes. All right, man. How much time? How much time, baby? How much time? 4 more minutes, baby. 4 more minutes. And then we're going to begin talking and recapping and going over everything. So sorry, I had to go to the bathroom. There, yeah, you could go to Uncle Answer Spotify, okay? Just do it for y'all because I don't know how some of y'all didn't know that was available. You'll need another Spotify for the other one, but either way, I got you, bro. Go to Uncle Answer. I put it up there because I'm surprised people didn't know. They were like, that one's not out. And I said, hey, come on, man. Come on, bro. Come on. Man, that volume though in the beginning was crazy. Uncle Answers. Uncle Answers on Spotify. Anywhere. Cribs. Tesla, Raul, little. Bro, that was just nutty. We don't even know. And now NVIDIA, there was nothing on AVXL. NVIDIA is starting to drop. So is AMD now. Petition to add 0-day option play under 100 and also keep random play for Monday. Are you saying every day or once a week? Because that would be $500 a week if we did every day. Kind of a good idea, but what are you going to give me? We got to, so what's the other? I'm kind of down if you want to try it, if you want to make an account every Friday. But at the end of the day, I mean, what do I get? What's the return? Do we have guaranteed likes on the table? Do we have, you know what I'm saying? If I quiz you on the watch list, will you actually pass it? What's the other end, you know? Man, we're just chilling. You can make me something out of stained glass. That's pretty cool. You do that? That's awesome. We love you unconditionally forever. If I do something, that's a condition. I'm not. This is bullshit. All right. I think it's time. Let me send out a stream alert. Run at the highs. Okay, give him a second. And then spies. I mean, maybe if the spy moves, a lot of just crazy movement. I'm trying to see. So right now on the market, let me refresh. There's crazy moves on individual names, but the SPY, oil are just staying there. 7 names down on the Dow, 23 up on the Dow. NASDAQ 100, 28 names red, 73 names green still. Seems to be the same setup. And then S&P 109 red, 394 in the green. So literally the same as earlier. Microsoft Rice. Moving huge, and levered ETFs not moving anywhere near as much. Not sure this reweighting did anything. That's what I'm saying. It's just like an index level doing nothing, but today definitely has way more individual moves, it seems like. And we at least started off a lot better. It's better. You're kind of doing the melt up. We would have just been doing this on the bottom if this was Monday or Tuesday. So we will see. But now, Chad, Adonia, are you guys ready for your recap? Y'all ready for this? Bow now, down, 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 down. Everybody fed now. Bow, 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 bow. You guys ready for this? It's good. It's a beautiful time. Again, 30 minutes now. We will be getting the FOMC statement, and then an hour from now, we will be getting the press conference. Honestly, hold on. Damn it, I have to delay. I'm sorry. You could blame Mr. Market. Get your ass up and do some push-ups. Actually, it's perfect time. So before we start, I'm gonna ask that you stand up and stretch because I need to, because I'm about to go deep into this. You know what I'm saying? I'm in full power mode, baby. I need to move around a little bit. So like honestly, stretch around a little bit, get the body moving, relax your eyeballs, stare at the object away from the monitor, calm down a little bit, you know, chest to the sun, flex the core, tuck the hips in, no legs wrapped behind your computer chair. You know what I'm saying? So let's go, baby. Let's go. I need to get some out. I'm gonna get some out. But yeah, I'll keep talking while I'm lifting. I'm gonna get me my resistance bands. But you know, to give you guys a breakdown of everything, like I said, we're gonna recap the watch list that we did this week. So honestly, you could always come here the day of the event. I would love to help you out. If you want to get prepared earlier, you know, shout out to the people who are already prepared because it's a weird event we have today. So I said it earlier, and I hope you're still doing your push-ups, but we were talking about it in the sense that if something big was going to happen today, we would know what it is. But to start off, nobody is expecting that Powell is going to change the script too much. So the real play is going to arrive, and I don't think it will arrive, but if there is a big, meaningful change. You know what I'm saying? That's where we are at this point. So that's the first part to start with. Another thing about just even Powell, this event, what is going to happen, and this is the main point that we talked about on Sunday. You know what I'm saying? And it's the fact that today we will be getting a summary of economic projections, and that only happens once every 3 months. Hold on, I'm getting sore. I'm doing this while resistance saying, hold on. So SEP, the SEP, my brother. Summary of economic projections. Can everybody say it with me? Can I get a summary of economic projections in the chat? I just want y'all to know what it is because a lot of people think I'm talking about September. It is not. SEP is summary of economic projections. So it's not that we are, you know, somebody, you know, genuinely they're like, why is September so important to the Fed? It's not. It's the SEP, the summary of economic projections. Yes, exactly. And let me even show you. I'll start off with this again. This was all on your watch list. And here's to give you something else. I'll try to keep the SPY up here. You might miss a couple of things. But to get all of this, go to federalreserve.gov. Even though they are not part of the government, they have a .gov website. Then you're going to go to monetary policy. Then you're going to go to meeting calendars and information. And then you are going to go down and you'll see the ones where it says projection materials. This is every 3 months. So if you'll notice, January, you don't have anything, right? February, this is January and February. March, you do projection materials. May, no projection materials. June, projection materials. Again, this is March to June, 3 months, every 3 months. So let me ask you a question. Why do we care about the SEP today? And there's something else I'm going to show you, but why do we care about it? Like seriously, this thing comes out once every 3 months. What makes this so special? It's quarterly. Great. You're on the right track. What makes it so special? There you go. Adita. So I'm going to give you the caveat to this as well. But quite simply, this is going to be your last one of the year. One of your final ones. You feel me? So that means this is going to be your last look for whatever the Fed is going to guide up until December or January. This is your final look at the Fed, higher for longer, what they feel, what they believe. This is your final look until 2024 practically. Exactly. I told you, I end my year in October. The Fed is pretty much giving their final projection up until December, January, when we start getting into that. Again, the December meeting should have one. You know what I'm saying? I believe December meeting, if we have that scheduled, should have a SEP. But for the most part, this is borderline your final one that you're getting, leading us into now the 2024 year, which again has a lot of things that people are both confused about and looking forward towards. So that's why this is so big. And I really hope that has been stressed enough, or I hope you've been able to read between the lines to understand that. But this is your last look of the year from the Fed. And now all we're going to get after this SEP is data that could move it up until, next time you get this SEP, you're going to have Christmas and then a new year and all of that. So it starts to change things drastically. So very cool, honestly. For me, that's what makes today so fascinating. But sadly, I do think even though this is the last look, I don't think Powell is going to risk it to try to surprise you. And that's what I'm saying. Above all else, I started off with this. It's very, very simple. Just Powell is not expected to do anything. Right now, coming into this meeting, I'm going to read you some previews. They are already calling this the hawkish pause, in the sense that means that the market knows the language in the statement, the language in the press conference, even down to the dot plots. The market is preparing for something hawkish. We are slowly, if you haven't realized this, the market is slowly being socialized into accepting higher for longer. And then that's kind of what all of this is highlighting, and is exactly why I believe he's not going to try to change anything. So now let me show you number two. I'm still on topic number one, but I'm trying to get to you to understand the gravity of the situation today and how it compares. So the best thing now is, let's look at the last Fed meeting, July 20. Maybe I'm going to make this chart big for y'all. So look at that was a Fed meeting. Honestly, you were moving bigger a couple days ago. Every day in August was way bigger than the July Fed meeting. You had a crazy pop and drop because remember, there was non-farms and other shit that followed it. And then what happened? We started to drop. Borderline, last Fed meeting, nothing. Call it what you want. June 13th, June 14th now. Let's go a little back. And what do you see here? Again, these candles, smaller than the days after and smaller than the days before. It led to another 1-2 day thing. Then you came down and then you actually went up. Again, that was June. And now let's go to May. And remember, this one, even the reaction here, there was a SEP right here. May, second and third. You had big moves ahead of it. You actually had a big down day on this one, and this one was not a SEP, led to 3 days down, then stabilized, then ultimately led to the rally. And then we're going to go January 31st, and then March 21st. So January 31st, big day. Powell confirmed bullishness at beginning of the year. You were just getting out of the gulag. And then March 22nd and 21st, again, what day was that? It was just right after SVB. That was a big day. That also included summary of economic projections. So pretty much this whole year, I think the May meeting, May 2nd or May 3rd, excuse me. Where is it? May 3rd was probably the biggest non-SEP day. except for Powell at the beginning of the year. But I would argue Powell was an outlier at the beginning of the year because it was still operating off of last year and changing that tone. So what I'm trying to say is usually you have a bigger reaction on SCP days than not. You could even look this up. You'll find history behind that. So the idea here is today has the potential to give us a different point of view coming into the end of the year. If it changes dramatically than what we've already witnessed, we're going to get surprised. That's where the play is going to emerge from. If not, we're going to fall back just like all the other ones, maybe move around a little bit more depending on which dot goes where. And then we're going to move on and then react to CPI, non-farms, ISMs, and all the other data leading into earnings in 2 weeks from now or a month from now, which is crazy. So that is number one. Y'all with me? Y'all with me? Are y'all ready to go? Any questions, actually, before I move on? I didn't think about it. I was about to just run through this. Again, we got 20 more minutes till the release. I still got time. So any questions? Quick ones if you got them. Again, try to make it as simple as possible. If not, no questions, we'll keep it moving, baby. We will keep it moving. You're with me? Okay, good. Good, big SCP. And again, I said a lot of statements before. Remember, the bigger the statement change, the bigger the Powell change. The bigger the dot plot change, the bigger the Powell change. I would note that down too. And then also, hopefully, so that you could witness it when it arrives. Super chat. I didn't see one. What you got for me, bro? Why didn't it show? It says XLF and USFL merge. Is that big news for HOFV? I don't know. I personally, I've not looked into HOFV, and I'm talking about the Fed. If you have any questions about what I just said about the Fed, I would love to answer. Otherwise, I'll get you more detail on that later, if you could wait. The 2-year, 10-year doesn't matter. I'm talking about what we just said. Keep it on topic. Otherwise, don't worry. If your question's not on topic, feel free. I will ignore it. But I'm saying, we just went over part number 1 barely. I just want to make sure nobody... Ooh, look at that chicle on the SPY, bro. What's up? A little bit. It's actually now hitting a low here of the day. Okay. So again, I think we're going to move on. A lot of questions, no opinion questions or anything. I'm saying I want you to listen to what we talked about. And if you have questions about that, if you're not getting it, I would love to clarify. Everything else, though, no room for opinion right now or anything because we got to get this. So like I'm saying, monetary policy on the website. Go to meeting calendars and information. And then what you got to do is come down and hit, oh, wait, that's July. Hit projection materials. We're going to use the next one or the last one. So today, when it comes up, it will pop up. You know, it's going to pop up today. You'll see summary of projections. You'll be able to click that one or economic projections. But this is the first thing to look for. I've taught you this lesson. Again, this was towards the end of the year. And if you remember, this was a very profitable lesson. When you first discovered this last year and we called this out, bro, oh my goodness, there was big moves off of it. So what you need to be looking for, number 1, is the federal funds March projection. So I'm going to get a little ahead of myself and I'm going to combine part 2 with this now because what I want you to see is that number I'm showing you is literally the median of the dots. Are you following? So 5.6, whatever number, this is what I'm trying to tell you. If you even want to save time for analysis, you know what I'm saying? You do not even need to look at the dot plot until we start really looking at 2024. You get what I'm saying? Why? If this number goes higher or lower, that means the dots changed. If this number goes higher, there's one more dot at 5.67 or wherever it's at. If it goes lower, one of those dots moved. So this is what I was trying to show you. Wall Street, and this is why I'm like, come on, Wall Street. Every headline you've read has been telling you dot plot, dot plot, dot plot, dot plot, dot plot, dot plot. Yes or no? Again, that was video number 2 on the watch list because there was an obsession with it. Everybody wants the dot plot, but what I want you to understand, your dot plot is right here. The only thing now, so I'm going to jump back to this, but I want you to know the first thing we're looking for in the next 15 minutes is going to be the federal funds rate projection right there where it shows up. The next thing will be 2024, and that's where you dive to the dot plot now. Because if this number goes higher or lower, people will also freak out about that. Remember, this is the main focus of the meeting. How much higher for how much longer? I have said this many, many times on the watch list, and it's a simple phrase, but there is an answer to this. Depending on what they do on this, again, 4.7 for 2023, 5.0, if that 2024 dot plot moves, or it goes lower even, that right there is going to tell you, it's going to tell you a lot. You know, you're going to be able to see that, and then boom, right away, we know something from there. So I hope you're following here, but that's the only thing for the dot plot that matters is 2024. Then the specifics, that's what you're really, really, really going to want. So watch out for that. But now, like I'm saying, just pay attention to these two numbers. We're going to jump back to table number 1. But then what you got to do, the dot plot, just look for here. This is the thing nobody has talked about with the dot plot. And I didn't put this in the watch list, so I'm glad you're here right now. I talked about it briefly, actually, in video number 1. But I was saying, look at the variance. Look at how scattered this is. And like I'm telling you, the more, I said this on the watch list, the more scattered the dots, the more volatility we will get today. Why? Because then you're going to have every jackass pulling an idea out of a hat mixed with an opinion because it's not going to tell us anything. And that's the problem with 2024. This is why it's important coming into the final SEP. But before you know it, this shit is going to get outdated. Why? Because there's no, like, where's the median? If I can't see the median. I have to figure it out. And that's volatility. That means Fed members all over the place. Yes, they don't dissent, but it means that there is a problem, or at least there's some level of disagreement. There's no unanimity into where we're going into 2024. So that's something I would say, watch where the majority of the dots end up. If we could walk away after today with the 2024 dot plot looking a lot more certain, with more voters where it's like, damn, that's the median. You know what I'm saying? That's going to be the money move today. But like I'm saying, again, I have to keep countering all of this because I don't think Powell is going to do much today. But then I'm telling you, you should be prepared if he does. I don't want you to come in hopeful thinking it's going to be a monster play off of whatever he says. However, you should understand now, okay, this tightens up, this scatters, you have an idea. This median moves higher or lower, you have an idea. Then you're going to get into here, federal funds rate. Again, it's the same thing as that you're going to have an idea. And if we get big changes, move. Otherwise, just let mother effers figure it out. But now, let's go to the next step. And this I would put at number 3 because it's probably number 3. And this is sadly what I'm kind of assuming is that, let's say, federal funds rate 2023, 2024 does not move much. Let's say the dot plot does not end up changing too drastically, right? What is Wall Street going to do? Let's say nothing changes. It could change, but it's not going to do it drastically, right? Again, nothing to do. What do you look at next? What is Wall Street going to do? They're not going to dump. Never. They're going to try to sell you before they sell a stock. Come on, man. Come on, man. Like the video. Free 99. We love you, baby. What are they going to do? They're going to try to sell you. But how are they going to sell you? What are they going to sell you on? Come on, big day, data event. We all waited for it. Months. Oh my gosh, Powell, the man, the myth, the legend, Jerome Bro. What are you going to do? What's the next thing you should look at then? Because if they don't get inflation, monetary policy, Fed funds rate moving, they're going to look for something else. What? There you go. There you go, Antonio. There you go. They're going to look at the data in the SCP. They're going to look at the CPE or the PCE projection. I think that's what you meant to say. And then you all copied him and put the wrong answer, assholes. PCE, the data. And then guess what? The GDP. And then the inflation. An unemployment rate. So, Chad, I'm trying to show you the priority. Prioritization. Number 1 priority. Jerome Powell, interest rates, the Fed futures path, where it's going, how much higher for how much longer, that is number one. Priority for everybody in the world right now. Priority number two, everyone's going to go to this stuff now. If priority number one does not change too much, you go to step number two. Step number two is going to be inflation, unemployment, and then GDP. And these numbers now let me tell you, this is new information. I did not have this one on the watch list. Coming into today, people are expecting a massive move on GDP. Believe it or not, GDP number comes high into 2024. Don't be shocked. What we would be shocked by if the market takes that as negative news because it's so good, it's bad. Pretty much high GDP, high inflation, market won't like that. High GDP expected, inflation comes in kind of normal, thumbs up. Right? And then now unemployment is going to just be weird. We don't know how to read it. Why? I think we do. We all have ideas, but let's be real. You know what I'm saying? So at the same time, we have to find this dynamic, and unemployment will be sticky. But I'll just tell you this. Look at these years. Do you see any variance? Not really. Besides last year, 4.1, when the March projection was 4.5. But look, these things haven't moved a lot. Even look at the central tendency. Remove the outliers. This shit is tight. It's sticky. So if simply, I can't tell the future with unemployment. Nobody can. It's too delayed. It's too messed up. Very simply, if this sticky ass component has variance, it moves, then we're going to get that volatility reaction. You know what I'm saying? So we will see. And then that's pretty much it. So I have a little more I could say, but that's my watch list recap. Again, as some of you astutely noted, if you just watched the videos, you would have had all of this ahead of time. Again, there's a couple things I added, but even then, whether you watch the watch list or not, you're getting it right here, right now, 8 minutes before the event. I hope you are prepared for it. And now you have people saying a bunch of stuff. So I got a couple of analyst comments right now saying Federal Reserve officials have been hinting at a possible interest rate hike at this meetings. However, what's more important is that they suggest the meeting in November. Again, dot plot. And actually, let me skip ahead. I'm going to give you one more. We're going to just go over this. Fed is set to pause. Focus on the dot plots will likely show another 2023 move. With inflation-related, FOMC will want to keep options open. So now I'm going to read you and get you some previews from analysts and propaganda. So again, these are not my opinions and what I outlined, but I do want you prepared. Again, oh, fuck, I have another wire. You don't see it. It's spitting out analyst comments for me right now, but I don't know. Which one do you want? You want opinion or do you want breakdown that was written earlier in the morning, the latest new information? I honestly think the latest might help you out. The opinions are just going to fuck with you. Federal Reserve is expected to pause its interest rates on Wednesday for the second time this year following the slow-in. Expected to raise it to 5.25 to 5.5, a 22-year high. Powell has signaled that Fed leaders would prefer to wait to evaluate the impact of the economy as they are near the end of the hiking cycle, with inflation still well above the committee's 2% target goal. Every Wall Street bank so far is unanimous that this will be a pause. Quote, they are not confident enough to say they've conquered inflation, said Julia Coronado, founder of Macro Policy Research. A former Fed economist says it's still too high, so you just keep your options open. I don't think Powell is going to give us the all clear. Anna Wong from Bloomberg, and she's actually very good. She has a great history so far with this. She says the rate hold at September 19th meeting is a foregone conclusion. Still, the mixed data over the intermeeting period means that the next move, October-November meeting, is less clear. We expect the updated dot plot released this week to indicate that the median FOMC participant see one more rate hike in 2023, but it will be a close call. I love this comment. And why? Because it's based off what I just showed you. Chad, if the dot plot shows one more rate hike for this year, is that a change? Is that new information? So let's say the dot plot comes up today and shows one more rate hike. Would that be a change? So right now, go to monetary policy. Go to the last one and just start looking at this and familiarize yourself with what it's showing. Because believe it or not, one more change, one more rate hike is already what we have today. Right now, we are at 5.2 to 5.5. The current rate on the dot plot for one more hike is at 5.6. You can't get to 5.6 without one more rate hike. So even if the dots move but imply only one more rate hike, you got hustled. You see what I'm saying? So that's what you got to watch out for, which I would add to Anna Wong's comments. The FOMC forecast, Wall Street will be focused on whether Fed officials forecast interest rates. The so-called dot plot shows that the committee seems determined to hike again. The central bank is divided between more dovish policymakers who are ready to keep rates steady for the rest of the year and hawks who want to nudge it up to 5.6 or more. Economists surveyed by Bloomberg expect the median projection will show one more increase this year, and several of them expect a number of cuts for 2024. The committee could raise their forecast for 2023 growth to about 2%, double their view from June. A look for firmer labor market with less unemployment. That's what I was telling you about GDP, that people are expecting that to double. We think the Fed has delivered enough, or the Fed's fund rate is sufficiently restricted, said Rubiella Faruqi, chief U.S. economist at High Frequency Economics. But if the labor market does not soften and there are upside surprises on inflation, then there is a risk that the Fed will push rates higher. Fed officials also gave their first economic projections for 2026 and update their view on the neutral long and long-term interest rate, which some economists expect could rise above the 2.5 estimate in June. Now, this is the new thing we didn't cover. And I'm glad we have 4 minutes here. Literally, there's going to be a 2026 showing up on the SEP, and I don't know if it'll happen. I don't believe it, but some people are expecting long-term interest rate view to edge up higher. If it does, that's higher for longer, my guy. That's Powell trying to cement it. You know what I'm saying? So the bulk of the meeting statement is likely to be nearly identical to July, retaining a hiking basis without a firm commitment to more rate hikes. The committee is likely to continue to describe growth as moderate, though it could tweak their description of the labor market, which has become less overheated in recent months. Governor Adriana Kugler, central bank's first Hispanic policymaker, will be joining the committee following her confirmation. No dissents are expected. In Powell's press conference, he will be pressed on whether they expect another rate increase this year, and if he agrees with the rate forecast in the dot plot. He is likely to emphasize that Fed officials will stay the course until inflation is under control, said Stifel financial chief economist Lindsay Piegza. He wants to keep options open, and the last thing he wants is for the market to price in rate cuts by early 2024. The chair is also said to be quizzed on upcoming challenges to the U.S. growth, including recent increase in energy, prospect of government shutdown in October, and the resumption of student loan repayments. Ta-da! So that's it. The last that we didn't cover this statement, but Chad, we only have 2 minutes. So I hope you're ready for it. Again, statement shouldn't change much, but we should know what to be looking at. But get ready, ladies and gentlemen. Your wire will flash with everything you need to. So have no fear. Have no fear. Again, you keep this up. Oh, wow. We're moving a little, too. I got 2 Teslas. I want an Apple chart up here. 30 minutes after. So don't you worry. Again, this first statement, if there's nothing that comes out of it, don't get your hopes up. But at the same time, like we're saying, that SEP, the long run, 2026, median for 24, median for 23, the composition of the dot plot, that is all going to move us. So we got about 1 minute till FOMC, Chad. Get ready for this statement. Get ready for this statement, my brother. Up. There were whole rates. Yeah, but that's why the numbers will give us more info on that. He could say it, but if they raise long-term target, he means it. You see what I'm saying? He could say whatever he wants, but that's why everyone's going to look at the dot plot for credibility and evidence to whatever he says. 30 seconds, just above 30 seconds. Get ready, baby. And hey, there's a Twitch link pinned in the chat right now. We have been known to have a lot of lagging and problems on this channel. So if you really want to stay locked in and it does lag out, there is a backup link that will not go down, okay? So God bless you all. 20 seconds. Let's go. And we play NBA 2K at nighttime if you're into that. Let's go, baby. Kaivo, round 35, it came up. All right, 5, 4, 3, 2, 1. Boop. And we're off. Uh-oh, you're getting a drop now. Is that hawkish? 5.5 versus 5.0. They keep rates unchanged. Hold on, July statement. I got statement. I got the statement. Where the fuck is the projection material? Tell me when it comes out. I'm going to go through the statement. Recent indicators, economic activity expanded at a moderate pace. I think they used moderate last time instead of modest. Job gains, robust. Unemployment, same exact thing. Banking system, sound and resilient. Tighter conditions for household and business are likely to weigh on economic activity. It's the dot plot. I can't load it up here. Statement, projection material. Oh, there it is. There it is. I was like, it's the same one. I think I clicked on July. I'm an idiot. All right, here it is. What do we got? 5.6, it's the same. Oh, whoa. 5.1, oh, fuck. Nope, hawkish. They just put 2.5 rate cuts. Oh, but look, no, they're fucking with you. So now the median, no. Oh, this is great. Dude, they're leveling it out. Look at that. Now you're between one hike and two more go down. You could also get a pause. That's it. No more hikes. But then they're leaving everything on the table by look at that. There's no variance, mother. It looks like a fucking computer. That's insane. But yeah, they just priced in 50 basis points of hikes for next year, but then they also lowered the risk of more hikes this year. Are you following? So they're saying you could have they're saying you could have a shit ton more. Hold on, let me double check this. That's great. Again, you're going down. First read on that is hawkish. I could get behind that right now. Where's the bonds? Bonds should be catching a fat bid off of this. No, they're selling off though too. So they believe more 2024. So the 2023 dots don't matter. Bonds are reacting to 2024. Where the fuck is it? Excuse me. Yeah, 4.6. No way. What the hell? Yeah, 5. Well, wait. So it's still pricing in the cut. But that's weird, bro. They're leaving these hikes on the table. They're leaving one hike on the table. They're still talking about cuts, but then it is just not as clear cut. Remember I was telling you about the variance earlier. Essentially, this doesn't give you much, but it does have a hawkish tilt there. You are pricing in less rate cuts than the market was saying. And then based on the dot plot, this is my opinion. And again, you heard my logic, literally right before this. There's not there's no positioning here. This dot plot could pivot. So they're leaving you with the same uncertainty. They're leaving you with the same uncertainty until the year. Actually, let's go to 2026 now. And then let's go. Let's see everything else. But first read is hawkish. 2026 GDP expected at 24. They don't expect unemployment rate moving for 3 years. Very odd. They do expect unemployment rate to drop. So again, that's partly bearish. They're saying by the end of the year, the unemployment rate is going to go lower than where it has already been. And then 2024, they're thinking that'll come up, but it's all in line. PCE, they think a little higher. So I don't think that does not show that they're worried about inflation or oil. And then they do think, where's the long run goal? Longer run, 2.4 to 3.8. That's a very wide range. Holy shit. I don't know if that gives an update. In the 2026, they're thinking 2.4. Some people thought it could have been at 2.5. So that's not as bad. Yeah, yields are rocketing. But not all. Let me see the other ones. But I think hawkish read for now. We need Powell's presser, but first read, I think a little bit more market confusion, but I mean, it does seem whether you believe this is that hawkish pause. Honestly, what I would tell you is this right now: be prepared possibly for a bullish Powell, if that makes any sense, because this communicates Powell is serious. At the very least, to me, it communicates he could go whichever way he wants once again. So again, if this could communicate hawkishness, statement didn't change much. No, I think Powell might be Powell's going to be friendly, is what I'm assuming. But this is kind of giving you a pretty hawkish tilt right now. So that would have come, again, like we said, we were preparing this. I don't know. I don't think people thought half a basis point higher on 2024. I think this one might be one standard deviation off from what people were expecting. This one's a little surprising. It does insinuate rate cuts, but definitely not to the degree Wall Street. And a lot of people thought this would have went lower, believe it or not. So Powell is making sure he's chill. No, I don't think 5.1 was priced. I think people would have maybe like 4.8 or 4.6, but you got to realize it's barely insinuating cuts. He's saying we're going to raise one more time and then cut you twice right back to where you are. When earlier, up until last meeting and to today, people thought he was going to take it to 4.5 or something. So we'll see. But initially, this is hawkish. I think unequivocally, I think this communicates. I think it communicates the hawkish pause, if that makes sense. This is what you want. So that way, if Powell sounds good right now, we'll see. But if Powell's negative, this is double hawkish. And then I think this kills September for the month. So that's it. It rides in Powell. But right now, first statement, I could read this as hawkish for sure. I don't think it is bullish at all. Again, that 5.1, 5.6 number we already knew, but I don't know. I started tripping out on this dot plot, bro. I was showing you right ahead of this meeting how it looked prior, and I was showing you how everything else was. It's pretty wild. Rate cuts this year is fantasy. I don't know though. At the same time, they made this tighten up, and now you still have the variance, but like you see it. Get rid of. That's why I look at central tendency for 2024. If you're not familiar, central tendency, it removes the outliers. It removes the highest and the lowest one. So even then, that brings up 2024 to 4.6 to 5.4. And then again, June projection was 4.4 to 5.1. It's a lot. Everything's higher. Even if, that's what I'm saying, even off the dot plot, you remove outliers, bro, hold up. It's just like, it looks a little weird. I don't think a bear trap, like I'm telling you, I think that this part is hawkish. The market was expecting that. I'm telling you, Powell might be bullish because that statement was, now he got the hawkishness out of the way. So we'll see. But for the most part, I think this statement is really hammering down that higher for longer is real, and Powell wants to be serious about it. Federal Reserve policymakers believe long-term the benchmark rate should be around 2.5, but they have been cautious about raising it quickly. I'm trying to. Hawkish means bearish. Negative. Wheat went up. I'm checking the bond curves now. Yeah, 10-year dropped. The 30-year is still green though. Hold on. That's funny. Yeah, because the short term, you're getting dot plot moves. This isn't change. People aren't changing long-term views yet. I'm just telling you, if TLT is still green and SHI and IEF go, and they're still holding green, that's it. I thought this one on the future looked red, but it's not. I think SHI is at break even now. So watch, the bonds haven't moved, but long-term bonds aren't losing control. So if they don't lose control, that means people aren't changing their long-term views despite a longer-term statement and, you know, that what's it called? That terminal rate going up. So let's see. Very interesting. But again, right now, the reaction is what? Maybe 0.25%. A little bigger, though. This is definitely bigger than some of the other ones, unless it just bounces up. Yeah, nothing else. Let's see. So the higher for projections for 2023 growth, 2.1 from 1% in June, shows the economy has improved since then. When there were worries about a recession, it's an update to reflect the better economic outlook. Federal Reserve policymakers believe long-term benchmark rates should be around 2.5. You have PERS talk more hawkish. I don't need to. I don't need to say anything. Again, you saw everything I saw right ahead of it. I showed you it all. That's it. This is a little bit. I don't know if I should call it a surprise because we all knew this was going to be a hawkish skip or a hawkish pause. You know what I'm saying? But it's the shape of the dot plot. They want, again, it looked like randomness to then they just went 3, 3, 3. That's not a coincidence. That's it. Now you even every Fed member you hear from, you're not going to have any idea who's who in next year. I don't think you realize that. The dot plot is crazy right now. And then, like I'm saying, they gave you the 5.6, but this is a different dot plot. There's nobody higher anymore for this year, but there's 2 people higher for next year. But then, like I'm saying, removing outliers, it starts to get weird. But the way the dot pile is compiled, it's tightening up. but it's tightening up while still raising questions. Right here, right now, I'm telling you this today before anybody in news says it or they even bring it up to you. I'm telling you, right now, for the next 3 months, do you realize how difficult it will be to interpret who is who on the dot plot? That means anybody that you hear of the Fed speakers tomorrow, the next day, the next month, the next week, you are not going to have any idea who is who. Why? Because look, they're all quarter points split up in groups of 3. It's crazy. They're running squads on 2K, bro. This is nuts. It doesn't matter. It does if you want to know who's a voter, who's not when they talk, if we want to know who to respond to. But the general idea, like I told, is strategic ambiguity. That's what the answer is. Does this mean that, oh my God, oh, what's happening? No, this is all very strategic. It's strategic ambiguity. Now it's so ambiguous, you can't even fucking guess who's saying what and who's who. Now you got your one little hike still priced in by 0.1% with all the dots there, but then you also have half of the members now below it, or just under half of them. So what does that mean? That means you could also get a cut this year. I hate to break it to you, that's still on the table. That's all through the dots right now. They're making it very ambiguous. They're baiting in all of the bond vigilantes while still holding with everything they said about higher for longer. They got long-term rates going up as well, but they got unemployment not moving at all, which means that's not going to change up until 2026. That's at least what they're saying, projecting. But then GDP is going to rebound and then level out as well too. So it's quite wild. And then even then they think inflation longer run will calm down, but at a slower pace. So yeah, I think it's kind of wicked what they just pulled off right there. But that's hawkish. That's what I'm saying. It doesn't matter what I say or anything. I hope you look at the data that is presented and compare it to what it was just looking like right before this came out. So now we're waiting for Powell. My theory right now, I'm shooting off the hip, but I think Powell is going to be nice. I don't think Powell is going to be bearish. I think Powell he's going to say a couple things hawkish to hammer it home. You know, someone's going to ask him about the longer run. They're going to ask him about that. And then he's going to even talk about it. I wonder, Nikki T, if you're listening, please ask them about the ambiguity of those dots on 2024. Please, I want to know that. But anyways, it doesn't matter because I think Powell, if you want this to be a hawkish pause, that statement is hawkish. That SCP is hawkish enough. So if Powell wants to calm us down or leave you right where we started, he could do that. And I'm thinking he'll chill. Oil, I don't know, but they don't seem worried. But that's where I think their fatal flaw is. Again, PCE on the SCP is barely expected to run up. Oil's dropping now, but I don't think I don't think it'll run like that. That's crazy. So yeah. So right now it's honestly, get ready though. 2 more minutes, 15. You might get your bounce here right at 15 minutes on the dot. We've talked about this prior too. So watch, either flip down lower or we rip out here. Maybe we just even chill out. But next 2 minutes, next minute and a half, you might get some movements. But then honestly, that was a very easy interpretation. There's hard things to get out of the dot plots. But like I'm saying, that was easily hawkish. We'll take that now. Now let's see what Powell does. Powell has a nice setup now. Buddy, 10-year bond is on the low of the day. If it goes, I can't explain how many trap buyers there will be if this thing massive red days are made out of. It should. I think it depends on Powell, but that's why I'm saying TLT should be dying. If people want to get bullish, the rate should run, but they immediately sold off. So that means they're interpreting that hawkishness, but the problem is that the rates are still very strong after the UK CPI. So I agree with you. If that starts to blow out, and I'm short on ZB right now, to give you context, I closed out of my long 2-year yesterday. So we'll see. Some experts believe there might be one more rate hike this year, but they expect unemployment rate to rise and potentially trigger an economic downturn later in the year. Unlike the Fed's outlook, that's not what the SCP says. That's an analyst comment. They removed a recession prediction for this year, which suggests a more optimistic economic outlook. Federal Reserve kept rates steady as expected. However, they made more aggressive rate projections for 24 and 25. Bryce Dottie, senior portfolio manager, suggests that the likelihood of a rate hike hasn't decreased. Currently 25 for November. Stock prices might have fallen. The lower probability of a rate increase is helping support stock prices. Ayaka Yoshioka, essentially, they want to be cautious and vigilant to avoid any negative economic outcomes in the future. This approach is seen as a way to prevent a situation similar to the economic challenges experienced in the 1970s. They also say that this means they are less concerned about the exact level of interest rates at the moment and more focused on how long the economy stays at these higher rates. So according to them, their senior portfolio at Federal Reserve, senior portfolio manager, Federal Reserve's approach is leaning towards maintaining higher interest rates for a longer duration. Wait. Did my doorbell just ring? Did y'all hear anything? I don't know if that was or if I sounded like an angel. I think my doorbell rang. Bing bong. JT. All right. We'll see. All right, man. Not too bad. Not too bad. Federal Reserve policymakers believe longer-term benchmark should be at 2.5. Interest rate futures indicate that there's a slightly higher chance of another quarter-point hike by the year-end compared to the previous day. Opinions among traders are split with the probability of such a move roughly estimated at 50-50, meaning it's uncertain whether rates will go up or stay the same. Powell is going to be in 15 minutes. Honestly, though, it kind of sucks, man. If I'm right and Powell is bullish, and again, hawkish statement, bullish Powell, the rest of the year, you're not going to like it. It's going to be the same thing we've seen all year. I'm telling you, because it's the same shit. That dot plot traps everybody. And it just makes you rely on the data up until then. But I feel like it's going to be the same exact thing we've already witnessed at this point. I'm D-Sam on YouTube. Remember, I can sub here. Hey, man, baby. I better see you on the Twitch, man, for the 2K. And again, during Powell, I don't know if anybody's got cut out here. We've had a lot of lagging issues. Maybe you don't like the advertisements. I don't know. YouTube forced that on us too, but there is a Twitch link. They force advertisements as well, but just in case you need a backup, that is pinned there. And then if you got game at NBA 2K, you better hit the Twitch and stop playing with me. All right, 30 years coming back up. Again, the bonds are telling me Powell might come back, bro. MGM report. That's from their tweet. So if Reuters is putting it out now, they did make that. They made that statement before we made the play. I was just talking about it. So if they're reacting on this now, that's very odd because that news came out 14 hours ago, if not longer. He might be late. I don't know, but let's see. I'm sorry. I was trying to. September 20. I got it running. We'll see. This isn't like it's slow. I mean, you're getting bigger movements. Again, the latest Fed meetings, like I showed you, we didn't really move like this. So, your SEP has a lot. Like I'm telling you, before Powell has even moved, you know what I'm saying? We have a lot of info right now. You have a very big change in the dot plot and all of that, man. It's crazy. I'm secretly turning the ads on? No. I could just do that. See what I'm saying? Did you get it yet? Exactly. Way better. Even way better monetization than any sort of advertisement. I know it was jokes. I feel you, bro. I feel you. I know it was jokes. I have friends in high school who used to do that with me. I don't talk to them anymore. They were haters. I love you too, but I'm just saying, bro. I'm just saying. That's it. That's what you give me after an hour of Powell analysis? That's all you have for me? Amen. Amen, bro. Amen. God bless you. Got premium, no ad. It's free Bezos bucks anyways. But no, we recently went to non-members on the Twitch, so it's been good. You could blame 2K for that. All right. I got all the feeds up. We'll see. I'm going to have multiple. Chad. We're going to have them already. This is crazy. Everybody waiting for Pow Pow. Here it is, man. Here it is. So again, it has not started yet. We're going to get them on in 20 minutes. Okay, oil futures are down by $1 a barrel off that. Interest rate futures indicate slightly higher chance of another quarter-point hike by year-end. However, opinions among traders are split. Move is estimated, meaning at 50-50. It's uncertain. That's crazy. So hawkish dots, all of that. But then it's like, bro, the Fed futures aren't even moving for November. That's exactly what they outlined in the dot plots. But damn. So Powell holds a lot here today, as always. But like I'm saying, I'm biased towards a positive tilt on this one. Dumpster comes soon. We'll see. Again, 15 minutes. You've been up since the 15-minute candle, but low-key we're trapped. I mean, give it some more time and see if it could take us out of here. If not, though, that will not be good. You wanted to try on here? Well, welcome, man. Welcome. We got both. I have both chats up. Like I'm saying, though, if you are getting mad lag, though, because that will happen. Once the meeting starts, I don't know, just YouTube always does it. We get mad lag. So if you don't want to miss it, just get your Twitch set up ready to go. And the audio quality is nice, too. The MGM comment, Reuters just put out the news that MGM dropped in the morning. MGM put out that statement like 12 hours ago, and it seems like they just got like a Reuters piece on it or something, but MGM's moving off of that. And then SPY hasn't moved much. Again, hawkish dot plot, if you're just getting in here, the dot plot was kind of trippy. UAW says it's reviewing the new offer from Stellantis. But again, the dot plot there was very, very ambiguous. Fed pricing in a lot more less rate cuts in 2024, still pricing in a rate cut for this year, still expecting unemployment isn't going to go down, and a slight moderation of GDP. And I mean, again, there was a factor out of the statement and everything else. They did. It seems based on this data, they're removing the talks of recession or economic slowdown. So if there is anything based on the statement in SEP, it does seem as if the Fed is feeling more economically optimistic, or I guess that's what you could infer based on that removal. Hi. The gap filled on the morning too? Yeah? Oh shit, no way. Yeah. So we'll see again. I think statement hawkish, that's easy. We were expecting a hawkish pause. The hawk has arrived. If Powell is hawkish, then you get moved. Then the bonds go red. Right now they're not going red though. Everybody took a knee-jerk reaction. Good info on that gap fill, but now we just gotta it's in Powell's hands, bro. It's in Powell's hands. And then you got 6 more minutes. We've been landing for 2 years now. And Powell, we trust. I don't know what you're looking for, though, from him. That's it. Just he's bullish. And I'm short bonds. So, again, his bullishness won't be good for me. But I'm only short on 1 ZB that I've been holding as my curve steepener, but I closed out the front end. But I do feel like if this was going to be a hawkish pause, you got the hawk now. And then if Powell is going to do it, then we see what happens. So hawkish pause. But then again, if people like the pause, they could start buying it. But I'm the only, you guys, I don't know if you get it. I'm not, am I shorting the bonds because of Powell? No. I already was in the play, and why I decided to hold it still, oil. I don't care about any, I'm telling you, that's it for now. We'll see the next data sets. Now you got 1 or 2 months, bro. If oil data keeps getting rocky, I mean, I do think this ambiguity that the Fed has, it's going to get thrown out the window, and they're going to pivot to the side of oil whenever it's there. So that's a big reasoning why I'm still holding that one. Till after Powell, yes. Honestly, because remember, like I showed you, SCP days bring out big reactions. However, the days after, like 2 days after the Fed, we've watched like bigger shifts, or even like a week and a half. So don't even be afraid to get a little bit more time, or if you're down a hold around there, or even position, just remember those moves arrive later. Schwab dumping, yeah, good call out. Low key, they are. S&P probability, what's this? S&P U.S. recessions risk still elevated amid uncertain growth prospects. S&P says probability of a recession in the U.S. starting in the next 12 months has moderated since beginning of the year, but remains elevated at 30 to 35%. Analyst Derek Tang, an economist, shared his perspective on the Fed dot plot. He noted that while most of the plot aligned with expectations, the projection for 2024 caught his attention as it moved up from 5.1 from 4.9. He highlighted that the absence of any dots above 5.6 for 23 suggests a more dovish tone, indicating that even the most hawkish policymakers no longer see the need for 2 more rate hikes this year. He mentioned that 7 policymakers not projecting any more this year is reassuring for Powell. Tang believes that the Fed's projection signal is a slightly more cautious approach to future rate hikes. All right, 3 minutes. So again, let me give you a little bit more, okay? All right, I'm going to give you a little bit more. All right, I'm going to give you a little bit more. Are you ready for this? Just remember, I'm going to play it. I'll usually interrupt in the beginning, and some of you get mad. But remember, the first, 10 minutes until he stops talking and asks for questions, all of that is pre-written. So there is nothing new there. You know what I'm saying? It's crazy. It's crazy. So that's what you got to watch out for. That's what you got to watch out for. Very, very simple. So that's why I'm saying first 15 minutes, usually, or 9 minutes, you're not going to get a huge reaction. Or even if it does react, it's not reacting to what's being said. Do you get what I'm saying? Whatever momentum happens when he starts talking, don't ask why it's doing that. Because it's just, everything is already known when he starts talking. You get what I'm saying? So then it's right after, when they ask questions, that's when it goes there. The market just does that, though. So right when he starts talking algorithms, people, emotions, he'll say something, and even though it's pre-written and it's already been out there, there's people react to it. It happens every single time. So just keep in mind that after he's done, so I could interrupt in between there, listen for it, but it's not like you're not going to get anything new. You shouldn't listen to Powell's first part and be like, oh my gosh, what did he just say? He might. Sometimes he's added little pieces of info, but for the most part, it will not be drastically different. Market is already under that impression. So whatever movements are really, it's the movement on the 15-minute candle. You see what I'm saying? That's what's really moving it, not necessarily Powell. They got dope beats on there. He's speaking word for word what's written. Yes. All right, man. You got 30 seconds, baby. It's weird, though, that I don't have the video of him. Usually, bro, they usually got the video on. Oh, dude, they're clapping the public. I got to get the license shit. Damn, son. Yeah, bro, usually he's out here. I have a couple feeds up ready to go. Dude, that's crazy. Yeah, unless only if you got the the license feeds, but usually the Fed opens it by now. That's fucked. So again, like Bloomberg, Reuters, anybody with a license, media stuff. Again, I don't have that. I could pay for it to license it, and I do, but I don't want to fucking get it right now. But the other thing is just that they can't like usually we have this, but you're not getting that here. Oh, there it is. Okay, never mind. I was like, what the fuck are they doing? That's crazy. All right, now they're updating it. All right, now it's on the Fed website. I don't know which one's faster. I have two up. Yeah, even then, but usually the Fed puts up the podium. Oh, the Fed website's faster. Oh, they just put it back.
Good afternoon, everyone. My colleagues and I remain squarely focused on our dual mandate to promote
this is the fastest
employment
one I have
and
right now.
stable prices for the American people. We understand the hardship that high inflation.
Fuck.
Price stability is the responsibility of
I had
the
like
Federal
4
Reserve.
seconds on this one.
Without price stability, the economy does not work for anyone. In particular, without price stability, is the responsibility will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects
I'm going to turn them up a little bit, okay, guys?
Felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce data and the evolving outlook and risks. I will have more to say about
Again, bonds are break, bro. This is nothing. Remember, this is nothing.
Recent indicators suggest that economic activity has been expanding at a solid pace. And so far this year, growth in real GDP.
I told you
has
there's
come
a
in
backup,
above
YouTube.
expectations.
I told
Recent
you.
readings on consumer spending have been particularly robust. Activity in the housing sector has picked up somewhat, though it remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our Summary of Economic Projections, or SEP, committee participants revised up their assessments of real GDP growth, with the median for this year now at 2.1%. Participants expect growth to cool, with the median projection falling to 1.5% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 150,000 jobs per month, a strong pace that is nevertheless well below that seen earlier in the year. The unemployment rate ticked up in August, but remains low at 3.8%. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises from 3.8% at the end of this year to 4.1% over the next 2 years. Inflation remains well above our longer run goal of 2%, 4% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 3.9%. Inflation has moderated somewhat since the middle of last year, and longer-term inflation expectations appear to remain well anchored, as reflected in a broad range
Again, you'll get all the
surveys of
statements on the
households,
wire.
businesses, and
So if you
forecasters,
miss anything and
as
you
well as
see the
measures
market
from
move,
financial
this
markets.
wire is going to help you out a lot.
Nevertheless, the process of getting inflation sustainably down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.3% this year, falls to 2.5% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points. We see the current stance of monetary policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses. Range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to our 2% goal over time. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate
You don't do that usually.
will be 5.6% at the end of this year, 5.1% at the end of 2024, and 3.9% at the end of 2025. Compared with our June summary of economic projections, the median projection is unrevised for the end of this year, but has moved up by 0.5 percentage point.
It's him interpreting it all.
Next 2 years. These projections, of course, are not a committee's decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. Given how far we have come, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. Real interest rates now are well above mainstream estimates of the neutral policy rate, but we are mindful of the inherent uncertainties in precisely gauging the stance of policy. We're prepared to raise rates further if appropriate, and we intend to hold policy at a restrictive level until we're confident that inflation is moving down sustainably toward our objective. In determining the extent of additional
once he tells you about how important the community is, that's when he ends.
To 2% over time.
Once again, we know our
the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keep...
Dude, it's fucking lagging now. We might be falling behind on this one.
...toward our objective.
I got another one.
In determining the extent of additional policy firming that may be appropriate to return inflation expectations over time, is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country.
He's about to end.
Everything we do
get ready.
is in service to our public mission. We at the Fed will do everything we can to
about to be
achieve our
11:39.
maximum
End of
and price
speech.
stability goals. Thank you, and I look forward to your questions.
Thank you. Colby Smith with the Financial Times. What makes the committee inclined to think that the Fed funds rate at this level is not yet sufficiently restrictive, especially when officials are forecasting a slightly more benign inflation outlook for this year? There's noted uncertainty about policy lags. Headwinds have emerged from the looming government shutdown, the end of federal childcare funding, resumption of student debt payments, things of that nature.
So I guess I would.
That's what we wanted that question, but let's see what he says.
Situation
We started
a little
with
bit differently. So we decided to maintain the target range for the federal funds rate where it is at 5.25% to 5.5%, while continuing to reduce our securities holdings. And we say we're committed to achieving and sustaining a stance of monetary policy that's sufficiently restrictive to bring down inflation to 2% over time. We said that. But the fact that we decided to maintain the policy rate at this meeting doesn't mean that we've decided that we have or have not at this time reached
Yeah, I could tell by your dot plot.
That stance of monetary policy that we're seeking.
He didn't deny that
if you look
they're
at the
there.
SEP, as you
That's
obviously
interesting.
will have done, you will see that a majority of participants believe that it is more likely than not that it will be appropriate for us to raise rates.
More
one
likely
time
by how many? By one?
in the two
It makes
remaining
no
meetings
sense.
this year.
And it's by
Others,
0.1, not by a quarter.
Believe that we have already reached that. So it's something where we're we're
So
not
again, this
making a
is
decision
strategic
by
ambiguity. That's not a
deciding
real
to,
answer.
About that question,
deferred
by
it.
deciding to just maintain the rate and await further data.
So right now, it's still an open question about sufficiently restrictive. You're not saying today that we've reached this level.
We're not saying, no, clearly what we decided to do is maintain the policy rate and await further data. We want to see convincing evidence, really, that we have reached the appropriate level, and we're seeing progress, and we welcome that. But we need to see more progress before we'll be willing to reach that conclusion.
And just on the 2024 projections, what's behind that shallower path for interest rate cuts and the need for real rates to be 50 basis points higher?
Bro, you ain't
Right,
trying to
so,
see shit. I went through your whole history right there while
I would say
listening.
it this way. First of all, real interest rates are positive now. They're meaningfully positive. And that's a good thing. We need policy to be restrictive so that we can get inflation down to target, okay? And we're going to need that to remain to be the case for some time. So I think, remember that of course, the SEP is not a plan that is negotiated or discussed really as a plan. It's accumulation, really, and what you see are the medians. It's accumulation of individual forecasts from 19 people, and then what you're seeing are the medians. So I wouldn't want to, bestow upon it the idea that it's really a plan. But what it reflects, though, is that economic activity has been stronger than we expected, stronger than I think everyone expected. And so what you're seeing is this is what people believe as of now will be appropriate to achieve what we're looking to achieve, which is progress toward our inflation goal, as you see in the SEP.
Thanks. Let's go to Rachel.
Rachel Siegel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. How would you characterize the debate around another hike or holding steady? Is it discussion around lag times, fear of too much slowing, too little slowing? Could you walk us through what this disagreement was about at the meeting?
Yeah, so the proposal at the meeting was to maintain our current policy stance. And I think there was obviously unanimous support for that. But this, of course, is an SEP meeting, and so people write down what they think. And you have some, you saw, I think 7 wrote down no hike at this meeting, or between now and the end of the year, and I think 12 wrote down another single hike in one of the next 2 meetings that we have between the end of the year. So it wasn't like we were arguing over that. People just stating their positions. And really what people are saying is, let's see how the data
50-50, Habib.
We want to see, what we want to see. We want to see that these good inflation readings that we've been seeing for the last 3 months, we want to see that it's more than just 3 months, right? We want to see, the labor market report that we received, the last one that we received, was a good example of what we do want to see. It was a combination of across a broad range of indicators, continuing rebalancing of the labor market. So those are the 2 things. Those are our 2 mandate variables, and that's the progress that we want to see. But I think people, they want to be convinced. They want to be careful not to jump to a conclusion really one way or the other, but just be convinced
So
that
he's literally
the data,
telling you it's 50-50
support
on
that
rate
conclusion.
hikes.
And that's why,
That's crazy.
Given how far we've come and how
It just
quickly
sounds a
we've
lot more
come,
professional,
We're
like
actually in a
50-50.
position to be able to proceed carefully as we assess the incoming data and the evolving outlooks and risks, and make these decisions meeting by meeting.
I see. And in your view, I know nothing has been decided yet, but what would one more hike at the end of the year do to the economy or to inflation? And on the other side, what
Good
would
question, Rachel.
no hike do, if you could sort of game that out for us?
So, you can make the argument that one hike one way or the other won't matter, but for us, we're trying, obviously as a group, it's a pretty tight cluster of where we think that policy stance might be, but we're always going to be learning from data. We've learned all through the course of the last year that actually we needed to go further than we had thought. If you go back a year and what we wrote down, it's actually gotten higher and higher. So we don't really know and that's why, again, we're in a position to proceed carefully at this point. A year ago, we proceeded pretty quickly to get rates up. Now we're fairly close, we think, to where we need to get. It's just a question of reaching the right stance. I wouldn't attribute huge importance to one hike in macroeconomic terms. Nonetheless, we need to get to a place where we're confident that we have a stance that will bring inflation down to 2% over time. That's what we need to get to, and we've been moving toward it. As we've gotten closer to it, we've slowed the pace at which we've moved. I think that was appropriate. And now that we're getting closer, we have the ability to proceed carefully.
Let's go to Steve.
Not bad. Still another I don't know question.
Steve Leishman, CNBC. Mr. Chairman, I want to return to Colby's question here. What is it saying about the committee's view of the inflation dynamic in the economy that you achieve the same forecast inflation rate for next year, but need another 0.5 point of the funds rate on it? Does it tell us that the committee believes inflation to be more persistent, requires more medicine effectively? And I guess a related question is, if you're going to project a funds rate above the longer run rate for 4 years in a row, at what point do we start to think, hey, maybe the longer rate or the neutral rate is actually higher? Thank you.
Good question.
So I guess I would point more to, rather than pointing to a sense of inflation having become more persistent, I wouldn't think we've seen inflation be more persistent over the course of the past year, but I wouldn't say that's something that's appeared in the recent data. It's more about stronger economic activity, I would say. So if I had to attribute one thing, again, we're picking medians here and trying to attribute one explanation, but I think broadly, stronger economic activity means rates. We have to do more with rates, and that's what that meaning is telling you. In terms of what the neutral rate can be,
this is the good question.
We know
neutral
it by
rate.
its works. We only know it by its works, really. We can't. The model.
Oh my gosh.
And that the economy reacts, and again, that's another reason why we're moving carefully now, because there are lags here. So that it may of course be that the neutral rate has risen. You do see people. You don't see the median moving, but you do see people raising their estimates of the neutral rate, and it's certainly plausible that the neutral rate is higher than the longer run rate. Remember, what we write down in the SEP is the longer run rate. It is certainly possible that that the neutral rate at this moment is higher than that, and that's part of the explanation.
Okay, I think that's why you're getting reaction right there.
Resilient.
He doesn't answer neutral rate. He kind of said it. You just said there's a possibility it's higher. He might backtrack now that the market went down on that.
Howard Schneider with Reuters. Thank you.
But remember, he's avoided that question for a long time. That's actually kind of interesting, but little reaction. I'm not.
Inflation consistently back to 2%. You kind of get that in 2024 a little bit. 1.5% is just a touch below.
This guy asked
what's
good
the
questions.
estimate of potential. So the fact that you're getting so much done at so much less cost, does that represent a change in how you think inflation works, a change in how you think the economy works, a change in the mix of supply healing versus demand destruction that's necessary to achieve this?
Yes, of course, it is a good thing that we've seen now meaningful rebalancing in the labor market without an increase in unemployment. And that's because we're seeing that rebalancing in other places, in, for example, job openings and in the jobs worker gap. You're also seeing supply side things. So that's happening. I would say, though, I still think, and I think broadly people still think that there'll have to be some softening in the labor market. That can come through more supply, as we've seen as well. Also, remember, the natural rate we think is coming down, which is a supply side thing, so that the gap between any given unemployment rate that's lower than that and the natural rate comes down. That's a way for supply. That's a way for the labor market to achieve a better balance. So all of those things are happening. You're right. In the median forecast, we don't see a big increase in unemployment. We do see
that's what I was showing you afterwards.
And but that really is just playing forward the trends.
So he explained a lot, but the number doesn't show that.
Guaranteed. There may come a time when unemployment goes up more than that, but that's really what we've been seeing is progress without higher unemployment for now.
So just to boil that down for a second, we've gone from a very narrow path to a soft landing.
Still going down. This is the neutral rate question.
Different. Would you call the soft landing now a baseline expectation?
No. I would not do that. I would just say.
Okay,
what
that's
would I say about that?
That's not bullish or bearish,
I've
but he's
always
just not
thought that
supporting
the soft
it.
landing was a plausible outcome. That there was a path, really, to a soft landing. I've thought that, and I've said that since we.
Okay, we're still dropping off that.
It's also possible that the path has narrowed and it's widened. Apparently, ultimately, this may be decided by factors that are outside our control at the end of the day. But I do think it's possible, and I also think.
All right, that was a triple whammy. We could still bounce off, but you had three things all occur right there.
Carefully again.
You had the neutral rate question,
we will
bearish,
restore
unemployment, on the
We know that we
SCP,
have to
kind
do
of
that.
questionable,
We know the public
and then he just
depends
said
on us
soft
doing
landing
that.
is not a base case.
And we know that we have to do it.
Again, that's hitting wires now.
Kind of labor market that we all want to achieve, which is
so again, it's all just like 1, 2, 3 in a row. Those are your first kind of bad things he said.
We know that. The fact that we've come this far lets us really proceed carefully, as I keep saying. So I think that's the end we're trying to achieve. I wouldn't want to handicap the likelihood of it, though. It's not up to me to do that.
Nick Timros of the Wall Street Journal. Chair Powell, both you and Vice Chair Williams have indicated that
new low on the deck.
sufficiently restrictive will be judged on a real rather than nominal basis, implying some scope for nominal rate cuts next year, provided further compelling evidence that price pressures will continue to subside. Is the FOMC focused on targeting a real level of policy restriction? And can you explain what would constitute enough evidence that will allow the FOMC to normalize the nominal stance of policy while keeping real policy settings sufficiently restrictive?
I mean, yes, we understand that it's a real rate that will matter and that it needs to be sufficiently restrictive. Again, I would say sufficiently restrictive only when you see it. It's not something you can arrive at with confidence in a model or in various estimates. And so what are we seeing? We're seeing. Through a combination of the unwinding of the pandemic-related demand and supply distortions and monetary policy's work in suppressing demand or alleviating very high demand, the combination of those two things is actually working. You're seeing, inflation coming down. It's principally now in goods, also in housing services. You begin to see effects of it in non-housing services as well. So we think that is working. And I think as we've said, we want to reach that. We want to reach something that we're confident it gets us to that level. And I think confidence comes from seeing, enough data that you feel like, yes, okay, this feels like we can for now decide that this is the right level and just agree to stay here. We're not permanently deciding not to go higher, but we would, let's say, if we get to that level. And then the question is, how long do you stay at that level? And that's a whole other set of questions. For now, the question is trying to find that level where we think we can stay there. And we haven't gotten to a point.
Oh my gosh. I think our feed is still ahead, but it is lagging a couple times. No
confidence about that yet. That's the stage
this year. And even then it seems possible that core PCE inflation could come in even lower than the median at 3.7%. Would you see a case to raise rates still if it turned out that you were going to achieve the same real rate this year because the decline in inflation proceeds somewhat better than you
dude, this is a question about oil.
The decision that we make at each meeting and certainly at the last two meetings this year, it's going to depend on the totality of all the data. So the inflation data, the labor market data, the growth data, the balance of risks and the other events that are happening out there. We take all of that into account. So I can't really answer a hypothetical about one piece of that. It'll be trying to reach a judgment over whether we should move forward with another rate hike overall, and whether that would increase our confidence that yes, this is an appropriate move and it will help us be more confident that we've gotten to the level that we need to get to.
The feed's already 5 decibels higher than normal.
Thanks, Chair Powell.
So if they adjust
Following
it,
up
it'll
on
screw
Nick's
you.
question, actually. John Williams, the New York Fed president, obviously, has said things to the effect of next year as we see inflation, kind of, again, to Nick's point, as we see inflation coming down, we're going to need to reduce interest rates to make sure that we're not squeezing the economy harder and harder over time. And I wonder if that's basically the logic that you apply. Is that how you think about it? And then I also wonder, in the last press conference, you said something to the effect of, it's a full year out, those discussions, and people interpreted that to mean that you didn't see a possibility of a rate cut in the first half of next year. And I wonder if that was what you meant by that, or whether, how you're thinking about that timing.
No, when I answer these questions about hypotheticals about cutting, I'm never intending to send a signal about timing. I'm just answering them as the question is expressed. So please, I wouldn't want to be taken that way. Sorry, the first question was that how? Yeah, so we're as we go into next year, that's the question we'll be asking is, taking into account lags and everything else we know about the economy and everything we know about monetary policy. The time will come at some point, and I'm not saying when, that it's appropriate to cut. Part of that may be that real rates are rising because inflation is coming down. Part of it just may be that it'll be all the factors that we see in the economy. And, that time will certainly come at some point. And what you see is us writing down, a year ahead estimates of what that might be. And, there's so much uncertainty around that. When in the moment, we'll do what we think makes sense. No one will look back at this and say, hey, we made a plan. It's not like that at all. These are estimates made a year in advance that are highly uncertain, and that's how it is.
Neil.
Thanks so much, Chair Powell. Neil Irwin with Axios. Wonder, how do you think about the question of whether the strong GDP growth we've been seeing is driven by excess demand versus supply side factors, productivity, labor force growth? And relatedly, if GDP keeps coming in hot, even in the absence of inflation resurgence, would that on its own be a reason to consider more tightening?
So on your first question, we're looking at GDP very, very carefully to try to understand really what's the direction of it, what's driving it, and it's a lot of consumer spending. The consumer's been very robust in spending. So that is that's how we're looking at it. Sorry, your second question was?
There's GDP stays hot, but without inflation.
So I think the question will be, GDP is not a mandate, right? Maximum employment and price stability are the mandates. The question will be, is GDP, is the heat that we see in GDP, is it really a threat to our ability to get back to 2% inflation? That's going to be the question. It's not a question about GDP on its own. It's you're expecting to see this improvement, continued rebalancing in the labor market and inflation moving back down to 2% in a sustainable way. We have to have confidence in that, and we'd be looking at GDP just to the extent that it threatens one or both of those.
Victoria Guido.
Hi, Victoria Guida with Politico. There are multiple external factors that are playing out right now. We see rising oil prices. We see auto workers striking. There's the looming, very real possibility of a government shutdown.
Question.
And I was just wondering, for each of those things, could you talk about how you're thinking about how that might affect the course for the Fed and the economy?
So there is a long list, and you hit some of them. But it's the strike, it's government shutdown, resumption of student loan payments, higher long-term rates, oil price shock. There are a lot of things that you can look at. So what we try to do is assess all of them and handicap all of them. And ultimately, though, there's so much uncertainty around these things. To start with the strike, first of all, we absolutely don't comment on the strike, as we have no view on the strike one way or the other. But we do have to make an assessment of its economic effects to do our jobs. So, the thing about it is so uncertain. It will depend. The economic effects, it could affect, we've looked back at history, it could affect economic output, hiring, and inflation. But that's really going to depend on how broad it is and how long it's sustained for. And then it also depends on how quickly production can make up for lost production. So none of those things are known right now. It's very, very hard to know. So you just have to leave that uncertain and
Oh, come on the Reds.
we'll be learning, I think, over the course of the next intermeeting period. It hasn't traditionally had much of a macroeconomic effect. Energy prices being higher, that is a significant thing. Energy prices being up can affect spending. It can affect over time. A sustained period of higher energy prices can affect consumer expectations about inflation. We tend to look through short-term volatility and look at core inflation. But so the question is, how long are higher prices sustained? We have to take those macroeconomic effects into account as well. Those are some of them. I'm not sure if I hit them all, but ultimately, you're coming into this with an economy that appears to have significant momentum, and that's what we start with. But we do have this collection of risks that you mentioned.
Craig Torres from Bloomberg News. I was a little surprised, Chair Powell, to hear you say that a soft landing is not a primary objective. This economy is seeing added supply in a way that could create long-term inflation stability. We have prime age labor force participation moving up where people can add skills. Workers want to work. We have a boom in manufacturing construction. We've had a decent spate of home building. And since inflation's coming down with strong GDP growth, we may have higher productivity. All are which good for the Fed's longer run target of low inflation. And if we lose that in a recession, aren't we opting for the awful hysteresis that we had in 2010? So are you taking this into account as you pursue policy? Thank you.
To begin, a soft landing is a primary objective, and I did not say otherwise. I mean, that's what we've been trying to achieve for all this time.
Okay, that market might like that. He said primary objective.
The real point, though, is the worst thing we can do is to fail to restore price stability, because the record is clear on that. If you don't restore price stability, inflation comes back, and you go through, you can have a long period where the economy is just very uncertain, and it'll affect growth, it'll affect all kinds of things. It can be a miserable period to have inflation constantly coming back and the Fed coming in and having to tighten again and again. So the best thing we can do for everyone, we believe, is to restore price stability. I think now, today, we actually, we have the ability to be careful at this point and move carefully, and that's what we're planning to do. So we fully appreciate the benefits of being able to continue what we see already, which is rebalancing in the labor market and inflation coming down without seeing, an important, large increase in unemployment, which has been typical of other tightening cycles. So.
Let's go to Chris.
Hi, thank you. Chris Rugaber at Associated Press. When you look at the disinflation that has taken place so far, do you see it mostly as a result of what some economists are calling the low-hanging fruit, such as the unwinding of supply chain snarls and other pandemic disruptions, or is it more a broad disinflationary trend that involves most goods and services across the economy? Thank you.
So if I understood your question, I would say it this way. I think we knew from before when we lifted off, but certainly by the time we knew that bringing inflation back down was going to take, as I call it, the unwinding of these distortions to both supply and demand that happened because of the pandemic and the response. So that unwinding was going to be important. In addition, monetary policy was going to help. It was going to help supply side heal by cooling demand off, and just in general, better aligning supply with demand. So those two forces were always going to be important. I think it's very hard to pull them apart. They work together. I do think both of them are at work now, and I think they're at work in a way that shows you the progress that we are seeing.
Go to Mike.
Michael McKee from Bloomberg Television and Radio. In June, you forecast a 5.
Oh my gosh. Come on. Yalla Habibi. I don't want to refresh it still because it's still like faster.
What would justify that last move? Because the
This one's
median
just catching up in
forecast
real
is
time.
for
This is the
lower
fastest
inflation.
one.
And given all the known unknowns that you face, how much confidence do you have, can investors have, or the American people have in your forecasts?
Well,
Michael
forecasts are
McKee.
highly uncertain. Forecasting is very difficult. Forecasters are a humble lot with much to be humble about. But to get to your question, though, what's happened is growth has come in stronger, right? Stronger than expected, and that's required higher rates. Unemployment, you also see that the ultimate unemployment rate is not as high, but that's really because of what we've been seeing in the labor market. We've seen more and more progress in the labor market without seeing significantly higher unemployment. So we're continuing that trend. In terms of inflation, you are seeing the last three readings are very, very good readings. It's only three readings. We were well aware that we need to see more than three readings. But if you look at June, July, and August, you're looking at really significant declines in core inflation, largely in the goods sector, also to some extent in housing services, and just a little in non-housing services. Those are the three buckets. Headline inflation, of course, has come way down, largely due to lower energy prices, some of which is now reversing. So I think people should know that economic forecasting is very difficult, and these are highly uncertain forecasts. But these are our forecasts. We have very high quality people working on these forecasts, and I think they stand up well against other forecasters. But just the nature of the business is the economy is very difficult to forecast.
Given the forecast that you have, what justified not moving today, and what could justify moving in the future if you think?
Well, I think we have come very far, very fast in the rate increases that we've made. And I think it was important at the beginning that we moved quickly, and we did. And I think as we get closer to the rate that we think, the stance of monetary policy that we think is appropriate to bring inflation down to 2% over time, the risks become more two-sided. And the risk of over-tightening and the risk of under-tightening, it becomes more equal. And I think that the natural common sense thing to do is as you approach that, you move a little more slowly as you get closer to it. And that's what we're doing. So we're taking advantage of the fact that we have moved quickly to move a little more carefully now as we sort of find our way to the right level of restriction that we need to get inflation back down to 2%.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With your focus on year-over-year PCE, isn't it true that base effects are huge, and that by the time you meet in November, that it's more likely that you'll have a low PCE number that would make you feel more comfortable? And secondly, how would the lack of key indicators like CPI, the jobs report, impact your approach in upcoming meetings if we were to have a government shutdown? Thank you.
Yeah, I missed the first question. What was what factors?
The base factors.
Base factors.
It's going to be harder because it's lower.
Okay.
Yeah, I was like, what the fuck, Doc?
So on that, we're looking at just monthly, right? You can look at just monthly readings and see what the increase was from the prior month. So you're right. When you go back 3, 6, and 12 months, you get base factors, but we can adjust for that. In terms of not getting data, again, we don't comment on government shutdowns. It's possible if there is a government shutdown and it lasts through the next meeting, then it's possible we wouldn't be getting some of the data that we would ordinarily get, and we would just have to deal with that. And I don't know. It's hard for me to say in advance how that would affect that meeting. It would depend on all kinds of factors that I don't know about now, but it's certainly a reality that's a possibility.
But would you feel more comfortable on the base effects that as those kind of fall out of the equation for the next couple of readings by November, would you feel more comfortable at that point?
Yes. I mean, if you're looking, we can tell how much inflation has gone up in a given month, right? And that's what we're looking at. And month by month, what's the reading? And, I think what we're really looking at is there's a tendency to look at, shorter and shorter maturities, but they're incredibly volatile and they can be misleading. That's why we look at 12-month. But I think in this situation where it looks like we've had a bit of a turn in inflation starting in June, we're also looking at 6 months and even 3 months, but really 6 months inflation. So you're looking at it over that period and over longer periods. That's the right way to go. And we don't need to be in a hurry in getting to a conclusion about what to do. We can let the data evolve.
Thanks for the question, Chair Powell. Edward Lawrence with Fox Business. So I want to focus back in on oil prices. We're seeing oil prices, as you mentioned, move up, and that's pushing the price of gas. So how does that factor into your decision to raise rates or not? Because the last two inflation reports, PCE and CPI, we've seen the overall inflation has actually risen.
Right. So, energy prices are very important for the consumer. This can affect consumer spending. It certainly can affect consumer sentiment. I mean, gas prices are one of the big things that affects consumer sentiment. It really comes down to how persistent, how sustained these energy prices are. The reason why we look at core inflation, which excludes food and energy, is that energy goes up and down like that, and it doesn't. Energy prices mostly don't contain much of a signal about how tight the economy is, and hence don't tell you much about where inflation's really going. However, we're well aware, though, that if energy prices increase and stay high, that'll have an effect on spending, and it may have an effect on consumer expectations of inflation, things like that. That's just things we have to monitor. So.
On the consumer, they're putting more and more of this on their credit card. The consumer seeing record credit spending. How long do you think the consumer can manage that debt at higher interest rates now? And are you concerned about a debt bubble related to that?
Notice the Bloomberg guy sitting next to Fox.
To finish my prior thought, I was saying that's why we tend to look through energy moves that we can see as short-term volatility. Turning to consumer credit, of course we watch that carefully. Consumer distress, measures of distress among consumers were at historic lows quite recently, during and after the pandemic. They're now moving back up to normal. We're watching that carefully, but at this point, these readings they're not at troublingly high levels. They're just kind of moving back up to what was typical in the pre-pandemic era.
Jean.
Jean Smilek.
Hi, Jean Young with M&I Market News.
The other one. This might be the last
yields along
question.
the Treasury curve have risen to their highest in years. What is the Fed's view about what's been driving that increase in recent weeks? And how much of it can be attributed to macro explanations and how much to technical factors?
So you're right. Rates have moved up significantly. I think
another new low. It's still very small.
Hard to say precisely, but most people do a common decomposition of the increase, and the view will be it's not mostly about inflation expectations. It's mostly about other things. Either term premium or real yields, and it's hard to be precise about this. Of course, everyone's got models that'll give you a very precise answer, but they give you different
dollars
answers.
even going to break out too.
Essentially, they're moving up because it's not because of inflation. It's because it'll probably have something to do with stronger growth. I would say more supply of treasuries. The common explanations that you hear in the markets kind of make sense.
Kyle Campbell, American Banker. Thank you for taking the questions. Just two on housing. You've said slower shelter cost growth is in the pipeline and will reflect in inflation readings as new leases are signed. But there's also some questions out there about the way housing costs are measured, particularly the use of rental equivalents, which are estimates from homeowners about what their homes would rent for if they were in the rental market. So my question is, how much of the effort to tame inflation, both as it's measured and felt by the broader public, hinges on housing supply? And then as far as a constrained housing supply being sort of exacerbated by this.
All right, watch this level, because if we start going 4,400, it gets crazy.
At the recent historic lows, how is that going to impact future thinking about taking interest rates to that lower bound in the future?
So on the supply point, of course, supply is very important over time in setting house prices and for that matter rents, and supply is kind of structurally constrained. But in terms of where inflation's going in the near term, though, as you obviously know, a lot of it is leases that are running off and then being re-signed or released at a level that's it won't be that much higher. It would have a year ago it would have been much higher than it was a year before. Now it may be below or at the same level. So as those leases are rolling over, we're seeing what we expect, which is measured housing services inflation coming down. Your second question was the lock-ins. How much is that affecting things, really?
Is that going to affect your decisions to potentially bring rates down to their lower bound in the future, sort of creating that sort of bubble of buying and then a lock-in that sort of stagnates the housing market?
I think we look at I would look at the lock-in, the idea being that people are in very low rate mortgages, and even if they want to move.
Oh, come on. That was a good question.
Move now, it would be hard because the new mortgage would be so expensive. Play a role in our future decisions in a future loosening cycle about whether we would cut rates? No.
The high ticker's not moving. Everything's going down.
I think we'd be looking at what fundamentally what rates does the economy need, and in an emergency like the pandemic or during the global financial crisis, you have to cut rates to the point that you have to do what you can to support the economy. So I wouldn't think that would be a reason for us not to do that. It's not something we're thinking about at all right now, but down the road I wouldn't think so.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, you've mentioned several things that would possibly weigh on consumer confidence, maybe cut back consumer spending, possible government shutdown, high gas prices. At this point, would the Fed welcome a decrease in consumer spending? Would that help you get inflation closer to your 2% target?
I wouldn't say it that way. We're not looking for a decrease in consumer spending. It's a good thing that the economy is strong. It's a good thing that the economy has been able to hold up under the tightening that we've done. It's a good thing that the labor market's strong. The only concern, and it just means this: if the economy comes in stronger than expected, that just means we'll have to do more in terms of monetary policy to get back to 2%, because we will get back to 2%. Does that answer your question?
Yeah, and I guess on the other hand, would you worry that could contribute to an economic slowdown or even a recession?
Well, that's always a concern. Concern number one is restoring price stability, because in the long run, that's something we have to do so that we can have the kind of economy we really want, which is one with sustained period of tight labor market conditions that benefit all, as I've said a couple times. So that said, of course, we also now, given how far we've come with our rate hikes and how quickly we've come here, we do have the ability to be careful as we move because of that consideration.
Thank you, Chair Powell. Simon Rabinovich with The Economist. One of the factors in the economic resilience to date appears to be a lesser degree of rate sensitivity than in the past. Obviously, we've talked about households with long fixed-rate mortgages, also companies that refinanced before last year. What is your thinking about the efficacy of rates and how that's changed? And then related to that, how do you think about the distributional consequences in the sense that if you're a relatively wealthy household with a long fixed rate mortgage, the past year has not been all that tough with rates going up, whereas if you're relying on your credit card for supporting your consumption, in fact, times are getting a lot tougher, a lot more quickly. Thanks.
So I guess it's fair to say that the economy's been stronger than many expected, given what's been happening with interest rates. Why is that? Many candidate explanations. Possibly a number of them make sense. One is just that household balance sheets and business balance sheets have been stronger than we had understood, and so that spending is held up and that kind of thing. We're not sure about that. The savings rate for consumers has come down a lot. The question is whether that's sustainable. It could just mean that the date of effect is later. It could also be that for other reasons, the neutral rate of interest is higher for various reasons. We don't know that. It could also just be that policy hasn't been restrictive enough for long enough. And there are many candidate explanations. We have to, in all this uncertainty, make policy. And I feel like what we have right now is what's still a very strong labor market, but that's coming back into balance. We were making progress on inflation. Growth by many forecasts, many forecasts call for growth to moderate over the course of the next year. So that's where we are, and we have to deal with what comes. On your second question your second question was distributional, but can you be a little clearer about that?
My point there was that if you're somebody who has a long fixed rate mortgage, you've been able to endure the higher rates relatively easily. If you're somebody who's living month to month off of your credit card, current financing rates are punitive.
Yes, and so the point I would make there is that we're trying to get inflation back down. The people who are most hurt by inflation are the people who are on a fixed income. If you're a person who spends all of your income, you don't really have any meaningful savings. You spend all your income on the basics of life: clothing, food, transportation, heating, the basics. And prices go up by 5, 6, 7%. You're in trouble right away. Whereas even middle class people have some savings and some ability to absorb that. So it is for those people, as much as for anybody, that we need to restore price stability. And we want to do it as quickly as possible. Obviously, we would like to do that. We'd like the current trend to continue, which is that we're making progress without seeing the kind of increase in unemployment that we've seen in past things. But you're right, though. When we raise rates, people who are living on credit cards and borrowing are going to feel that more. They are, and of course, people with lots of savings also have a much lower marginal propensity to consume, and so it's not going to affect them as much.
Let's go to Greg Robb for the last question.
Thank you, Chair Powell. Greg Robb from MarketWatch. In the Beige Book recently, you can tell that the Fed has been surveying nonprofits and community groups about the economic
It might
health
run
of
when he's done.
low-income
Be careful.
Americans, moderate.
I have a couple
with
notes
Americans.
for you.
I have 2 questions about this. Are you going to use that data to maybe come up with sort of like a quarterly survey of those groups, like the Senior Loan Officer Survey? And and also the second question is, from your recent readings of these surveys, how are low and moderate Americans doing? Is there this thing where like the GDP is strong because of wealthy Americans kind of driving things? And just want to get your sense of the health of that sector. Thank you.
So I don't know about the quarterly survey. That's an idea we can take away and think about. In terms of how low and moderate Americans, they're clearly were suffering from high inflation. I think during the pandemic, the government transfers that happened were very meaningful. And if the surveys that we take showed that low and moderate income people were actually in very, very strong financial condition. I think now it's a very hot labor market, and you're seeing high nominal wages, and you're starting to see real wages are now positive by most measures. So I think overall households are in good shape. Surveys are a different thing. So surveys are showing dissatisfaction, and I think a lot of that is just people hate inflation, hate it. And that causes people to say the economy is terrible, but at the same time, they're spending money. Their behavior is not exactly what you would expect from the surveys. That's kind of a guess at what the answer might be. But I think there's a lot of good things happening on household balance sheets, and certainly in the labor market and with wages. The biggest wage increases having gone to relatively low wage jobs, and now inflation coming down, you're seeing real wages, which is a good thing. Thanks very much.
Wow. Chad, I have good news and bad news for you. So I took notes during that because some of you were little babies when I was trying to give you some of the breakdowns in real time, but I saw the benefit of it because I was like, this dude, he did a lot. The main story was the dot plot. That dot plot ambiguity, again, now the conversation's over statistically. You get your little rally now afterwards maybe, but again, all of the drop happened here. We noted it, right? When that neutral rate question, I promise you, you are going to hear about this over the next few days. Every single question, Powell, speaker, whatever it's going to be, this was the thing that ever since then, there was only a couple of other things I could have noted. Every other question was very general, something we already heard, or again, even if it was a good question, Powell's answer was the same answer as already before. Again, he did 50-50 all day on everything. And again, there was analyst comments of people saying that, he's being cautious and this is why. That's why he's stressing it. Again, the soft lay, again, it was all here. This little drop was all of the, it was like all within 4 or 5 minutes or something like that. And then towards the end of it, he starts clarifying the soft landing stuff. But I think it's all about the dot plot, man. That dot plot, I don't want to call it scary, but I would call it uncertain in the sense that it leaves one rate hike or more on the table between now and 2024, but then it could insinuate a cut if possible. Same thing with 2024. It does have cuts priced into it, but it's still much higher. So he's doing his thing, bro. I think it was there, but honestly, I think reaction right now, we're looking at 0.71 or 0.75, 0.75% on the day, which I do think we're pricing in 0.8 or 0.9 for this event. But still, even with the SCP, the answers, the dot plot was very, very ambiguous and neutral. Same thing with the questions. Again, all I had here was neutral rate question. They asked about the unemployment and the SCP not rising and soft landing. Then he ended up saying, again, it's not their objective, or he said it's their objective, but it's not their base case. Then he started talking, and anytime real rates stabilizing, that Nick Timmerhouse question was about oil. I don't know if you guys got it. He was saying, what if the real rates go up and nominal moves around? What does that mean? That means core inflation, does what it wants them to do, and then oil fucks everything up. I don't know if everybody picked up on that. I was trying to tell you, then y'all were complaining about it, so I typed it out and wrote it here, but it was all during this little area right in there. You see what I'm saying? So that's where we got to see it, but I do think it was hawkish off of today. Again, it was definitely bearish, and I think the questions will be all about neutral rate, but I don't know if it moved us enough, if that makes any sense. All I'm saying is Powell played 50-50. He punted and put it all in the hands of the data in the next couple weeks, and then you have earnings in the next month. But unfortunately, you got your hawkish pause. He didn't move rates, but it was hawkish enough and ambiguous enough where the bond vigilantes and people can't start piling into rates. There was nothing there that gave you, he didn't tip his hand, and he's playing the same thing. Again, with some of those last questions, he's pretty much saying, we're going to be like this till, if people respond, if things slow down, then we slow down. If not, then we're going to speed up. But he's throwing it out to you and letting it be, bro. Kind of like a yellow light, definitely. I think that's a great way to look at it, yellow light. But you don't know, is a yellow light going to turn red? It should, but it could also turn green too. That's what's awkward about it. But he is kind of, again, hawkish pause. I think that did it. You know what I'm saying? I was bullish, though. I don't listen. Whatever you think I am, you may have just got here, but if you're ignoring the hours of work and preparation and everything I've done into here, I don't really have a stance. If anything, I would probably say I lean more bearish at certain times, but at the same time, I own a lot of real estate in a long-term portfolio. I've lost on shorts this year, and I've made all of it back on my long-term or anything I held. So it's kind of 50-50, depending on how you want to look at it, but I'm not here for bearish or bullish. I'm here to interpret it. My longer term plan, I'm waiting for the yield curve to uninvert, and I'm gonna do my thing. But overall, I said it right when the data came out. It was bearish. When it's all said and done, it was bearish off the first part. I said Powell could be bullish, and I don't think he was bullish nor bearish. I think it was the exact same Jerome Powell. He left you the 50-50, but he did say something about real interest rates. So if you want to take anything out of this, what he said about real interest rates, that was the real key, because that is what people are going to debate about. That's what people are going to ask about. We're going to look for answers from other Fed speakers moving forward, and that is the key. At dollar rocketing, man, you only have 30 minutes left, so I forgot to go to the bathroom during all of that. So what I'm going to do is promote to you Uncle Answers and go to the bathroom. So thank you for being here. Thank you for the positive comments, even the constructive negative ones. I hope you were able to get something out of this. So God bless you, and thank you for being here. In the meantime, You can listen to the Joe Biden freestyle. I hope you don't get too offended by it, but it's quite funny. Okay. God bless. I'll be right back. Oh, the audio's still up?
Yeah, where's Jill? Come on.
Sorry.
Me.
I'll be right back.
Hey. It's 4 p.m. 4 p.m. is when I wake up, bitch. Shout out to Percy, that's me. You could just call me JP. I do not answer no questions. You could leave that to Shaki. Kamala riding with me. She'll lock you up for some weed. Say bad things about the vaccine. I'ma make sure you don't speak. Got a laptop you won't see. Hunter, I love her, but that shit was weird with his feet. I love my Congressman Trey. Shout out to Nancy, she paid. Double your gas in a day. Them will say Putin's to blame. Real politics in your face. 500 bill on the way. 500 mil to Ukraine. Every day. Javelins keeping them safe. Fuck it, just send them some planes. Tell them keep growing them grains. All of my bros in 8-0. None of they borders is closed. All of us got climate goals. All of us straight together. Strategically releasing the ore. They said that Putin won't fold. They ain't my cabinet no more. Fuck the squad, fuck the foe. Had it 9, fuck a roll. Now we going practical. Hunter, my dog, that's for sure. We ain't gon' fight about shit. Especially not 10%. We ain't gon' fight about hoes. Me and Nance get the votes. Lobby that shit on the low. I got Congress in control. I got your student low froze. I got your mortgages froze. I got Keystone on froze. But maintenance cinema froze. I'm getting faded. I'm eating this ice cream. I don't like voters who whitey. Questions from press that's unlikely. Bring up Trump if they don't like me. They give me the Eddie, I wake up. Passing bills, that's a layup. I'm the big man, I got say so. They lock you down if I say so. Booster on booster on booster. Mandate on mandate on mandate. I just get Evie a test rate. Fuck you, Elon, I won't even say your name. Came in the office already ballin'. Silent just ain't changed my name to Stalin. Right off the screen that I'm gone with the wind. Do nothing about something till they pass a bill. Pull up in a brand new Benz truck. How about fresher than a bread truck? How I got it, how to just, yeah. How I gotta make it one car. Station on your block, took off. Mixing up my words, I'm live. So I think they mad, my fault. Talking about inflation, I caused. Dumping our oil turned me to a savage. $1 saved on a gallon. Fuck OPEC and King Salmon. And fresh, I'm tired.
Okay. Good timing. 2 minutes. But yeah, again, neutral interest rates is what he said. That's all it came down to, neutral interest rates. So I closed out of the Google Doc, but pretty much he said neutral interest rates could be higher. That, again, I said it right when he said it. You got to realize he hasn't, He hasn't addressed that question. Every time people would ask him about it, he would play the 50-50 answer. I don't know if he meant to, but he didn't end up correcting himself. Again, there was a lot of headlines, and you saw it. Like, out of all of those headlines that came through, all of these little red ones, I don't know if you see them. I think I already skipped through, but there was a ton of them. But it's just like, straight up, there's only 3 things to know. I think we're going down just straight from there. Again, hawkish pause. We're going to see here. Remember, there's Bank of Japan and ECB coming up right now too. But again, then the real rates question, it seems like he categorized oil as temporary volatility. You know what I'm saying? So it's pretty crazy. It's pretty crazy. So that's the part where I'm thinking we're all reacting to pretty much neutral rate question, and he said it's possible that the neutral rate could be higher. That's it. That's all it comes down to. So I think that's where we're at here. Again, not to mention the ambiguity of the dot plot, but it was bearish from the release. Powell didn't come in with enough bullishness, but realistically now, let's see the momentum. You broke this level here. This is your final level, 44.13. If we do, we either break 4,400 in the next 30 minutes, or we actually bounce off of it. It's actually going to get wild here. So again, a lot of people were saying 4,400. This has been a very big line in the sand. Remember, when that happened earlier in August, we were down another 100 points in 2 days. So that level does have a lot of activity there. So you're going there again, another 10 points, even in the last 3 minutes. Wow, that Biden song, I don't know if they liked it. Yeah, you're down over 1% total on the day. NASDAQ's down 1.1, but remember, we were gapped up by like 0.3 in the morning. So very interesting here. But again, I think it's the first reaction, hawkish statement, and there wasn't enough to chew on from Powell where you could have been like, this is really good, but it's the same exact Powell. So I think I got a couple of them. Double Line Capital, Gunlock says probability for rates is higher than before recent oil spike. Gunlock says very prudent for the Fed to have a wait and see attitude. Hold on, I got like 15 other ones. He says, we have a lot of cross currents in the economy. Says it's the right thing to do, not raise rates. Gunlock says it's one of the best Fed decisions in a while. Powell ends press conference. Peter Cheer from Academy Securities, while they claim to be data dependent, it seems like they're actively seeking reasons to avoid rate cuts, at least according to Cheer's interpretation. He said the projections for the end of 2024 and 25 are significantly higher than those in June, indicating a reluctancy to cut rates. Yeah, bro, there's a lot. There's a lot of these statements. Again, a lot of people focusing on the dot plot, and I see why. Again, there was the obsession before. I'm only obsessed with what Powell actually put on that, or what everybody came in. That was crazy. So again, bonds, the weird part, bonds ain't moved, man. The only thing going up right now is the dollar. I think, if anything, dollar and equities, but the policy movement so far between the bonds, very, very awkward in the sense it hasn't done it. I wish to donate 20 for impound fees. God bless you, baby. My man, Mr. Gazio. Let's go. Feel. No, MOS, I have not looked again. I haven't even looked at wheat yet. It was running up earlier. Yeah, good call out on that. Mosaic is getting clapped. Check NTR and the rest of them. I will double check. It looks like fertilizer plays are getting murdered in the process. That looks more like news related than not, but I don't know. They're down 5%. Let's see. It's not loading. I'm trying to get it up. All right. Hitting the low again. Watch out, though. I don't think it's going to be easy here. You're right next to the flush zone. So this is it. This is the flush level. You went below it. 44.11, low of the day. 44.13 is the price. So if this don't last, if it's baby, you don't do the dancing, it's going, this is the flush zone, or really 4,400. Again, if I start pulling this chart out, again, that 4,400 breaks. This is like the biggest gap, except for this one for the most part. The big plays, I don't think it's coming. I'm just saying right now you'll get market reactions. That dot plot just, unfortunately, we'll find out the next coming data sets, but I think with Powell's dot plot, I just think we're either going to get a real repeat of the beginning of the year, in the sense it's going to just be nothing and we react, and then nothing and then we react, and then get hyped and scared until something happens. Maybe if rates go higher, a bank blows up, but for the most part, I just think he bought time. Again, that dot plot says he could both cut rates and raise them whenever he wants, and it's actually wild. So that's I think you gotta be patient, to be honest with you. And I don't know if that's what people want, but it seems like Powell, again, I like that word, reluctant to cut rates. You know, it's there. I think next couple days we're gonna see some moves though. Again, this is already the biggest Fed move we've had in a couple months. I'd say we're already over like 1% now, hitting the low. Now you're going below the flush zone here, but. You know, the next coming days, I mean, Thursday, Friday, ECB, or excuse me, the British one, the United Kingdom, and then the Bank of Japan. Yeah, you just missed Powell right now, sir. 4,200 back in action. We'll see. It could be 44.10 now. Everything's just getting murdered right here. Again, Apple into the lows, even Netflix. Again, they sold off even before everybody. I know firsthand. Microsoft now down 2. Individual tech names got murked. Again, so pretty much there was hawkish statement, hawkish SEP. Powell came on. Things were looking good when he was talking. He didn't say anything. And the only thing he said was a comment towards the real neutral rate being higher, which is a question he has avoided. Every other question he played 50-50. Did not give you anything new, and now we just kept dumping. That's it. It all happened right here. Neutral. We didn't even bounce from there or any. It was just all right here. All of the meat of today's meeting. Again, I was sitting there waiting to take notes, noting times and everything, and I only had 3 notes. And then we ended, and then you just started flushing even. You didn't even get the post-Powell pump. So usually I think the last, I want to say all year, every meeting this year, right when he's done talking, the market goes up. It gets a little bit of lift. Some of you got offended by that, but it's literally happened every Fed meeting this year if you've watched. So it's just, now you just had one thing down and then you just started slowing. It's actually crazy. So, yeah, he punted. He punted very hard, but you had your hawkish pause. Again, that statement and everything was there. Arm flushing. What about Cart? Again, dollars up. I think that's hurting. Bonds are not moving. Bro, 2-year, 10-year. This, you guys don't think it's weird? It's at the same level of the first candle. So the bond market is not showing its hand right now, unfortunately. But you could blame that on the EC or the UK today. Still early. Yeah, that's exactly what I was just saying now. The bonds are not, nothing is telling us anything. Right now, equity's down, dollar up is the only thing I could see. But even oil's down, but like the bonds are not moving. That's not for what we just got here. It's kind of weird that the bond, every part of the curve is exactly the same. So it's not, everything is moving. But there was something today as well, too, that was getting in the way of the bonds. But we'll see. But for now, I think hawkish statement, very neutral press conference, but it wasn't enough. And I think until we get clarity on that neutral rate question, that was the real bearish takeaway, besides all the ambiguity on the dot plot. If bonds are not reacting, maybe we should not be reacting too. Maybe. I mean, I haven't done any. I said I was going to trade the bonds, and then it made one move, went up, and then just came down. But now it's staying pinned as the market is flushing. Again, 44.08 is the low. We're a little bit off of that. So let's see. Again, you might get any of these little pops, though, if it's not like real sustained. I mean, you only have 20 minutes remaining, Chad. So we will see. So you had Biden already. Ambiguity. Very weird. Again, I think the dot plot is a lot of answers there, then neutral rate, but that bond's not moving so far. I mean, one of these days, by some of you guys are asking me what I think for Friday. I can't tell you until this moves, but I wouldn't be surprised if there's a lot of tension building up. Again, people were bringing that up prior, but dude, this is the calmest thing on everything today. Who would have thought? And then the dollar, though. Dollar's up. Because, again, dollar reacted to the pound this morning, but it seems like this was a stronger dollar effect. And, yeah, correct me if I'm wrong. If the dollar breaks out, we're going to hit highs very, very soon, actually. I think you're 3 cents, 2 cents off of another 52-week high here for the dollar. Is that another low? No, you're like hugging it right now. 44.09. I can't tell. I'm going to zoom in on this. Let's zoom in from Powell. So this is how today would look if it was just Powell. If that was like the morning, this was the statement. Then he came on here and then he started talking. And then this was during neutral rate. And just that there was just 1, 2, 3 bad questions in a row, bad answers. But again, it wasn't too nuts. And then the rest of the speech, he did nothing. But this is where you're at. 44.08. So again, you're bad. You might hit another low. You're still like 1 point off of it, 3/4 of a point. Bricks kicking the wall right now. The bad news, this is my interpretation, so I don't know, we'll find out, but I believe the bad news, there was a question where Powell said that the neutral rate of interest may actually be higher. And then there was another question right afterwards. Where was it? Again, I have all the statements, but I just wrote them out. And then another thing about unemployment, it was what I showed you in the beginning where someone was like, wait a minute, how do you expect GDP and all of this stuff, but then unemployment's going to stay the same? And so that's what I noticed, right? Before Powell even spoke, I pointed it out to you. But that was the next question. They're like, so you're trying to tell me unemployment is not going to move in the next 3 to 4 years and all of this stuff is going to happen? That, it wasn't there. And then he finished up. It was another question. And he finished it up by saying soft landing is not base case. And then that's when you really started to flush around here. Again, and then 1451, I think. There was another thing he was discussing, but he started talking about nominal rates, the Nick Timmy question. It was related to oil, and pretty much his answer was oil was a temporary shock, even to today. And then he clarified that the soft landing is the objective, but not the base case, but the market did not go from there. Yes, households. He said there's a lot of things I'm missing. But all I'm saying is that was newsworthy, noteworthy, brand new that I wrote down. That was pretty much it, honestly. Anything about that, but there was nothing else. Again, the neutral rate question, he never really answered it like that before. He usually, we don't know about neutral rate. Maybe it's higher, maybe it's lower, maybe it's too early, but he seemed pretty adamant about saying the neutral rate may be higher, and he didn't try to defend against that. But that added with everything else, that's when you started to see everything play out. Also implies they hit their employment mandate. It kind of, on the employment question, definitely. But also no, because they didn't mandate it there. Clearly, he wants something to change there, but it's also just highlighting the economy. Even that last question, remember that question? Do you guys remember the question where he was like, what you mean to ask is, or he said something, he's like, the real question is this. And he just shat on the guy's question and gave him his own. That question, the guy was asking, is GDP, are you guys forecasting it to go up because of growth? Or do you think it's because of inflation? It's a great question. He's pretty much saying the GDP going up is nominal. He's saying it's all because of inflation. That's why he wanted to clarify, and Powell didn't answer that. Powell said it doesn't fucking matter. I was like, that's not the question. You don't need to worry about that. You don't need to worry about GDP's fucking because of inflation or not. Shut up. She said, what you need to be asking is something else. The real question is this. But that's why I was laughing. That's why I did really laugh at that. But that was a good question. But that, again, even then, it wasn't even that wasn't anything crazy, maybe if he answered it or not. But every other question, consumers, household, employment, everything was already what you heard, and he played the 50-50 card. But the neutral rate thing was that was the only new thing I got out of it myself. And then again, there's that oil question too. And unemployment just makes you scratch your head. But then Powell said it's just a forecast, so that's why. 44.080, bro, you're right at the low again. These little bounces are not working. Dollar keeps going up. I think you're 1 penny now from a high of the year, testing it, and then if we close above there, that won't be pretty. But then we are going to wake up to more data in Europe. 10's gone, that's it. It might be. I'd say 30-year, though, but then also watch the 2-year. So again, policy sensitive. The best of both worlds is the 10-year. It's everything. And then the ZB, that's the long end. That's like your TLT. I think, because again, if people are really going to get worried there, it makes sense on the 2-year, but what are they going to do with the 30-year? So I think the 10 is going to encompass both of that. But you're right, it's about to go red. That's all we need to at least make sense of some of this for a little bit. And even then, if it's barely, it could still bounce. Do you answer every question with uncertainty? He mentioned it a lot. We could go through the transcript and find that out. But he did say it a lot. Or it was just, what was the word? Caution, I think. I think caution. And he was just trying to explain why they're doing what they're doing. You're 50 cents off the yearly high? Oh, I'm tripping. I'm thinking year to date then, not 52-week high. Thank you. Again, so from beginning of the year, 2023, this year pretty much 1 cent, 2 cents off the high. But yeah, a year ago, technically, actually, no. Oh, that's fucked up. No, man. Literally a year ago to this date, the dollar was borderline at the... Oh my gosh, another one of these? They did it again. What was the other chart I showed you 2 days ago? Every single chart, man. Oil. Oil and the dollar are exactly the same. You pull up all this volatility, you pull up the chart. What? It's the same price as a year ago. Yeah, oil's a little higher now. Again, a couple days ago, it was like borderline exactly where it was 1 year ago. Crazy. I think even 2 years ago on oil, low key. Yeah, oil could even go. You could take oil. Almost. No, that was 2022. No, but yeah, even September. Where's September 21? No, we are much lower. Yeah. Rates were not the answer. As far as market reactions, I think they're part of it, but right now it's just Powell. The dot plot is very confusing, and right now neutral rate is Powell just without any clarification of where neutral rate is. that makes that higher for long. That hits really, really, really hard. Again, Powell has avoided that question for a very long time, but it seems like we got some answer to that today. All right, 44.10. You hit 44.06. You do not have that much time right now. You have 10-minute rigged about to approach in 40 seconds, and then 10 minutes, end of the day. It's either close above 4,400 or not, man. Bracing for the gap. Good luck, my brother. Yeah, we'll see. Again, there's data in the morning, though. So there will be stuff. And then Bank of Japan on Friday. That's where this is going to get interesting. Regardless of where rates go from here at this moment, 99% of equities do not have the return of fixed income. It's that simple for me. Yes. I think there's a chart. I think same as 2007, sadly. All right, 44.08. Again, 10-minute rig. So far, it's not looking too crazy. Maybe final 5. What data? For tomorrow morning, you're going to get Bank of England interest rate decision. That's huge. Then you're going to get initial jobless claims for those who care about every job report. Philly Fed for my macro bears. If that comes in, you go. Negative 30 is bearish. It bounced last time. Then you got the America current account, Philly Fed business conditions, Philly Fed new orders, ECB President Lagarde's speech, and then European consumer confidence flash. Then another ECB Schnabel speaking, 8-week, 4-week bond auctions, 15, 30-year, and 10-year mortgage rates, and then 10-year tips auction. And then at nighttime, you're going to get Japanese inflation rate, core inflation, and then Bank of Japan interest rate decision leading into Friday morning. So it's a lot. It's a lot. That all of that is going to weigh in tomorrow. But then the thing is, just be careful. All of that shit going to move the dollar, or it's going to move the pound, euro, and yen. So just keep that in mind, because dollar right now we're reacting, but bonds not so much. Remember, bonds reacted to the Europe this morning. So in a weird way, I think that's the juggling we got to do right now. If we're not watching the bonds react, I'm blaming Europe, but the dollar's there, but then the dollar could get affected by Europe, and then finally Europe can make the bonds move, and then maybe we catch up with the market and equities just freaking out. I don't know. But it's like that's the dynamic with all of that data tomorrow. 1.7 bill to the sell side. That data comes out starting at like 4 a.m. Pacific time, so 7 a.m., an hour, 2 hours, 2.5 hours before the bell. So even ECB, that's going to be at 30 minutes after the bell. And then consumer confidence. This is all on my time. The intellect is dizzying. Well, I appreciate that. But honestly, we're just playing a game of connect the dots. That's all it is right here. Again, between the dollar, the markets, the bonds, again, Europe. And the best part was you had a nice clue last week. Remember, last week was the epitome of us focusing on our own data. And then Europe just came in and just did whatever they wanted and then messed with our markets because of the dollar. So you actually had a crash course on that last week, believe it or not. So in a weird way, we're just kind of waiting here. At least I am. Again, I still have the bond short. That's starting to work now. But for the most part, I'm still kind of, I think, hawkish. We give it a couple days, but hopefully, you see what I'm telling you with the data. It's on the way. So I think there's much more room to happen here. But then again, by 4 a.m. or 7 a.m. Eastern, you'll get some more answers. The Chinese yuan is the biggest push. Pretty much Chinese yuan, Japanese yen are the things pushing the dollar because they're weakening. However, the euro and the pound are strong, and that's acting as a counter. So that's why, again, even today, what happened, dollar was down because the euro and the Bank of England did good. So that was good for them. But then what ended up happening here, Powell shoots up our dollar. This today right here with the dollar, when you're watching the yen die right now, this had nothing to do with those countries. This was the dollar acting as the wrecking ball. So if you notice, we had good currency was fine because of Britain this morning. But then by the time Powell fucking opened his mouth, it started a hawkish statement. Then the presser and everything, the dollar started to do that because, again, it's the dollar. It's reacting to us now. And then it started hurting everybody else in the process. My bond short is on the TLT side of the curve, yes. I did this play maybe like a month or two ago, but I also own the 2-year. So I took a loss on the 2-year after rolling over. I had that from the last Fed meeting or 2 Fed meetings ago. But then I'm holding the bond short. I'm like almost break even on it right now, I think. And the logic with that is just I wanted to hold it again with oil here, but I'm not like in love with it. I'm down to close it. But I did want to flip a couple of bonds today, but unfortunately, I think it's kind of comatose, borderline. I mean, equities moved the most here. But yeah, the long end of the curve. Oh, shit. No way. Final 5, dude. The day, that's it. Final 5. Now the bonds are starting to move 30 years. Now it's catching up here with the 10-year. Like I was saying, you want to watch because remember, 30-year is opinion. At some point, 10-year, 2-year, they're closer to duration. You got 4 years of pricing. Remember, 30-year is all emotions. That's why it gets the wild moves. That's people like if they're really worried, they're gonna short that 30-year. If they're really bullish, they're gonna buy that 30-year. Instacart slides 11 to fall below 30. Nice. Oh wow, 29.96. Yeah, new guy. So listen, Chad, I hope you enjoyed today. I hope it was a great experience. I don't know how the audio messed with you, but I got a new guy coming on. He's going to close us out here, but he gets really loud. So I just want to make sure your ears and your whole viewing experience is protected. So if you hear me say earmuffs, that's your sign to mute your speakers because it will get very loud in here. And we've had reports of eardrums bleeding. So I want to make sure that you don't have that. You know what I'm saying? And make sure you're safe. So if you hear earmuffs, just kindly mute your speakers until like 2 p.m. Pacific time, and then you'll be good. Okay? Thank you. Thank you. Thank you. Just letting you know. All right, you're about to hit a new low on this. Final 5, bro. Went from bounce to the flush zone. You're going to close below it. Let's see. Maybe someone said oceans, except for today. You'll maybe watch. Maybe after hours if we get any more moves. But bonds are giving up now, though. That's it. The bonds are starting to fade. That's what you needed there with the dollar. So Novo already split. Yeah. All right, Chad. Earmuffs. Earmuffs, ladies and gentlemen. Earmuffs. It is about to get very, very loud in here. Earmuffs, please. Earmuffs. Thank you. All right, ladies and gentlemen, we're making our final approach. As we make our final approach, you guys are holding on to any bags. Please stow them in the overhead bins above or firmly beneath your seats. We'll be coming through the house with a trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal description. That's going to be your nightly watch list and main channel layover. Around 4 p.m. Pacific time, then we're going to be taking off promptly around 6 a.m. out of sunny San Diego, California. So we make this final approach into San Diego International Airport. It's about 71 degrees, partially cloudy. Would have been a great day, but Powell decided to leave you in the dark. So other than that, we are no longer under COVID guidelines until the election, so no masks are required, but we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys' business. If you're interested in a Call Rapid Awards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the Colt, and hopefully have a wonderful evening. Let's go, baby. Time to wrap it up. The market, honestly, the market ain't even wrapping it up. He's speaking now or forever hold your peace, bro, because you're hitting another low. You're another 1-2 points lower than the earlier one. Not much time remaining. Again, Powell, neutral rate. Look it up afterwards. You know what I'm saying? But you got your hawkish pause. The market's definitely feeling the hawkish now. Now the bonds are hitting a low. They waited for that. They let equities and the dollar go before the bonds, and now it's there. Oh, my goodness. Dollar go before the bond. Oh, my goodness. So, Chad, wrap it up. Bring it home. Again, big data in the morning, all throughout the morning. We're going to have a lot to react to by pre-market, so get ready for that. But you only have